Good morning, ladies and gentlemen. This is the Stock Market Live with LCAOD. I hope you guys had a good morning, good night last night. But today is Wednesday, March the 2nd, 9:21 a.m., 9 minutes before the opening bell, ladies and gentlemen. And we got a lot of exciting news to hurry up. I'm trying to get this out to you guys because I had told my Discord crew yesterday and my Trading View community right here in the comment section yesterday. I was telling you guys about Jerome Powell speaks on Thursday, you guys, but that was an error. He speaks today, so we're gonna urgently hurry up and get this out here to you guys. I do apologize for that. It looks like they changed it on me. But they do that sometimes. It's just like the nature of the business here. You just gotta be the person in charge has got to be alert about it and catch it and let everybody know just in time. If not, the media will let you know, but it'll be too late if you hear from them. So I'm here live with you right now, letting you guys know before it starts here. That starts at 10 a.m. So we're gonna tune into that, and that's gonna be very, very important today. He's having a testify here on Capitol Hill here, so it's a testimony with Jerome Powell. It's gonna be very key. We haven't heard from him in a while, you guys. He shifts the market. He's a leader of the Fed chairman there. So we're going to tune into that, man, when it starts at 10 a.m. It is pre-market right now, 9:22 a.m. So we got about 8 minutes before that opening bell here. It looks like the spot picked up from overnight here, right back at 432, 334 on the Dow, 342 on the triple Qs. And let's check with the VIX, man. Well, we really just check with the VIX when the market opened, but that's when they really get going in the VIX. But they up $26.39 pre-market, so the VIX is really still high here. But you guys, this is live coverage from the stock and crypto market, live ideas of thought and studies. This is not financial advice on this stream or with this company. With that being said, ladies and gentlemen, this is the Stock Market Live with LCAOD, and it is pre-market right now. We're going to get started here early. So this is the news we got coming out here. 15 a.m. ADP employment report is already out here, ladies and gentlemen. That came out here. You have a Fed President Charles Evans. He's speaking right now at 9 a.m. That's currently live right now. I'm going to try to find it here. I might not be able to. Then there's another president after him, Bullard. People don't really like him. He starts at 9:30 right when the market opens. Wow. So you got Bullard to Powell here at 10 a.m. He is testifying at the House committee there. So this could be good or bad here. We're going to see that 10 a.m. is going to really shift the market. It's going to be exciting, man. It's going to be exciting. 2 p.m. we got Bidgie Book. So it's a lot of news, a lot of data coming out here, you guys. But this is the start of it. We're just getting set up here. Give me a few minutes here, get everything set up. But you guys, stay ready, stay sharp here. We got 7 minutes to the opening bell. And early bird gets the worm, so congratulations. Give yourself a pat on the back if you're up right now. You're up right now trying to get that bag up. Ain't nothing wrong with it. If you're up right now and you're trying to get that bag on your own, shout out to you, man. Ain't nothing wrong with it. You either an entrepreneur or you either an entrepreneur or you either an employee or you either nothing at all. So that's just what it is here out here in this universe, in this world, in this galaxy here. But ladies and gentlemen, like I said, it is pre-market 9:24. The opening bell will start here in about 5 minutes. We do have a bunch of news here, so I hope you guys heard the update. Tell a friend, tell a foe. But that is very important here. Jerome Powell will testify at 10 a.m. today. So that is very, very key. They switched it up on us. Make sure you tell a friend, tell a foe. Get him up, wake him, shake him up like, bro, Powell. Like, let him know he's about to be on the TV screen here. It is payday, ladies and gentlemen. He's about to shift the market. So we're going to see what he has to say at 10 a.m. But, ladies and gentlemen, let's get it started here. This is the Stock Market Live with LCAOD. It is pre-market. The opening bell is in 5 minutes. Good luck, traders, investors.
I'm gonna try to make it 25, 8 to 13. Yeah, I'm trying to make it. No, you'll never take it. So please stop all the faking. I'm headed to the money, though. Please stop all the faking. You know that I'm trying to make it. No, you'll never take it. I'm headed to the money, though. I'm headed to the money 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 though. Yeah, I'm trying to make it. No, you'll never take it. So please stop all the faking. I'm headed to the money though. I'm headed to the money though. Headed to the money though. I'm headed to the money though. Yeah. I'm headed to the money though. I'm headed to the money though. Headed to the money though. Headed to the paper route. Yeah, my nigga, yeah, the paper route is gonna take me out. Yeah, take me out the hood. Have me eating good. Yeah, yeah, I wish he would. Try to take my meal. Try to take my paper. Come out of the ground like I am the Undertaker. Yeah, my nigga, no, I'm never faking. Yeah, I sing too. Yeah, I ain't just draking. Yeah. No, I'm never faking, yeah. Run up on me, you mistaken, yeah. Yeah, what you taking? No, I'm never faking. Yeah, I'm with the crew, doing what I do. Yeah, I'm on that earth. Yeah, I'm smoking true. Yeah, I'm in the crew, doing what we do. Yeah, no love, yeah, to you. Cause you know I'm gon' make it. No, you not gon' take it. So please stop all the faking. I'm headed to the money though. 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 Yeah, I'm headed to the money. Don't look at me funny. Leo brains looking runny. Sunny side up. Yeah, I'm on that lane. Yeah, you know I'm double cut. Yeah, I got the green. Yeah, you know I'm rolling. Yeah, you know I'm smoking. Smoking on the earth. Yeah, I roll that gas. Yeah, I'm smoking on that perk. Yeah. You know I'm trying to make it. Yeah. You know I'm trying to make it. You know I'm trying to make it. And you will never take it. Yeah, stop the faking. Yeah, stop the faking. Yeah, I'm gonna get it. Yeah, I'm gonna get you snap back for you get fitted. Yeah, your boy, I'm not kidding. Oh, I'm not kidding. I'm tryna make it out. Tryna make it out. Yeah, I'm 22, but you not gonna take me out. Yeah, you not gonna take me out. Yeah, you not gonna take me out. Yeah. I'm texting a thought right now, nigga. I'm in the studio, man. Be patient. You know what I'm saying?
Pro Beats Productions.
All right, ladies and gentlemen, we got about 1 minute to that opening bell. And it's live here today, ladies and gentlemen. It's about to get live here. We got Jerome, aka as y'all like to call him in the market, Daddy Powell. I don't like to say that shit, but y'all, that's the nickname y'all first told me. So that is y'all's father, basically, y'all told me. So the ding ding ding, the market is open, ladies and gentlemen, and we're off here. We're off. So the spot's starting now here. We're gonna zoom on in. You know how I likes to get down here live with LCAOD. We zoom into that first candle because it tells you a lot there how the days might go. We zoom in very strong. Want that candle really big as possible. We're going to see here where they're taking this first candle here. It looks like the SPY wants green here, trying to fight to the upside. Triple Qs want green as well, trying to fight to the upside here. The VIX has not gotten started here yet. Ladies and gentlemen, the VIX has not gotten started here yet. What I've noticed with the VIX here, they start a little bit behind on behind the SPY and them, but when they get started, then that's when the market really shifts here. It is really has been about 45 seconds, ladies and gentlemen. Now I'm 1 minute, so and the VIX is off here, off to the open here. The VIX made a huge green candle here. Um, it was red actually, but it's green now. It was weird what the VIX just did, you guys. It basically just bottomed at $24.65 here and shot up at $26.45. So the VIX just apparently shot up $2 right at open. Went down and came back up. I don't know what the hell the VIX just did, but I just know that it brought the stocks down here. I'm seeing a red candle right now. SPY is making its first red candle for today. Zoom is coming down here, you guys, 120. So they're having a little bit of continuation from yesterday. That's Zoom play, man. Those Chinese people, man, they're tricky, man. They're tricky. They don't like to give it all up at once. Sometimes they do. But when they don't, you know what I'm saying? You'll know how they don't. But we are open, ladies and gentlemen. The State of the Union last night, it seemed like it went pretty well with Joe Biden, the State of the Union. It kind of went pretty well, I guess. You kind of seen who was for the bill, his Build Back Better bill, and who wasn't. You got to see the demeanor of people's faces on that. But, I mean, other than that, it was really exciting, man. It was nice. It was nice. It was nice to have some type of hope and confidence there in the market, and for people just in the economy, in the world in general. But yeah, you guys, it's just what it is here. So off the bat here, Tesla shot up 868 to 878 here. Looks like the market is going to be gearing up here for Jerome Powell. Tesla's going up here right now. They got a resistance at 880, so we want to see if we break that level first before you can confirm a buy here. But it is 9:32. It's only been 2 minutes, ladies and gentlemen. I think Bullard is live right now. Bullard is live, but let's see here. Bullard is live. I know Powell is going live at 10 a.m., you guys. Powell is going live at 10 a.m., so be ready for that, man. Be ready for that. That is going to have an effect on the market here. This is the market data I got pulled up right here, so you guys can see here, confirm it. Tesla's holding up there. ADP employment report, that is out. They came out in pre-market, so that kind of had a little move to the market there. Market kind of just bounced up really and got back to the same spot before yesterday sell-off. So kind of right there, same spot really. You got Charles Evans, he's speaking. She's the Chicago Fed president. St. Louis Fed president James Bullard, he's talking right now, currently at 9:30. Then you got Jerome Powell, he's testifying at the House committee, you guys, at 10 a.m. That's going to be very key. You want to tune into that. Then you got the Benji Book at 2 p.m. Yeah, that's just what the market data is today. That's what everybody's expecting here. So I'm seeing low volume here at the very opening bell, meaning nobody's really up right now doing anything. But the market is kind of pulling back here. The SPY is coming down here. Looks like the SPY is right here at that low. The first 4 minutes here, it's starting out here. But it did go up to the high. It looked like it got weak at 432.84 on the SPY here. So still in the really just consolidating in the same range right now at the opening bell here. Just trying to figure out, just waking up, just like a human here, just waking up, stretching, brushing his teeth. Washing his face. It might even take a shower here in the morning. We just don't know. It's just not moving, not doing anything, just chilling out. Yeah, at the end of the day, though, that's just what we're seeing here right now. It's a little slight pullback here. Not too much of it, though, but a slight one there. Let's see here. Tesla's bouncing here and finding support, consolidating right in their middle range. Now they just broke below it here, so the Tesla's back at 870 here. Key support level right here for Tesla. If they break this, the next key support would be 860. So they got two key supports here, 870 and 60. So 70 is a good one here, and 60 is the next one. 50 is the final one. You flush 50, they're not coming back to the highs here. So keep all that in mind with Tesla here. I think they want to fight over 880. That's just their ultimate goal here. They would like to see 900, but I think this is just going to be a battle just to cross 880 and hold. That's just what I think here. But that is Tesla there. Amazon, let's check with them. They're down 20 here, so back at 3,000. Amazon sold off at the opening bell. Back at 3,000, bouncing right off of 3,000 though. Mr. 3,000, that is support there. Amazon. That's really probably their only leg of support. They break below 3,000, they're gonna go lower. They might sometimes bounce below it and come right back to it. They love 3,000 here at Amazon. Shopify is down $10 here right now. So yeah, that's just a couple stocks, few stocks on the move here. Indices are all in the green here. The market is up. We're looking a little slightly bullish here. The Dow is up 60%, Nasdaq's up 20%, the S&P 500 is up about 53%. So we're looking slightly bullish here. Preparing for Jerome Powell's testimony. Keep that in mind here. I think that is like when he comes on the screen, whatever he says, the first 15, 20 minutes, you guys, the market will flip red if it's not good, or it'll pick up higher green than what you're seeing now. So let's keep that in mind right now. It's 9:35 here. Be paying attention to the charts and numbers here. And the ranges, really just be paying attention to the ranges. That's what I try to do. I try to focus on the spreads here. That's what really keeps you focused on the money, and you know where the smart money is actually at. So that's what I like to do there. Keep that in mind. Everybody got their own strategy and their own way of how they want to invest. So it's really up to you. But at the end of the day, as long as you know that all the fundamentals are the same, it's just how you intake it. So keep that in mind. Broadcom, they're going up here. Oh, we had earnings yesterday. I feel like we did. I don't know why I said I feel like. Okay, so AMC, Plug Power, Salesforce, they weren't really exciting here. Wish, but they did report. So let's look at them. Let's get into that here before Jerome Powell testified. And I will keep reminding you guys there because I know not everybody's up. I sent the message out in my Discord this morning. Maybe like 3 people responded. So tell a friend, tell a foe, man, or you will hear about it here all day. They're going to be replaying whatever he's about to say when it ends. Let's see here. Salesforce actually sold off their earnings, you guys. So they did go up to 217. They're selling it off currently right now back in the same spot they were yesterday closed. So it looks like really this week earnings, all of them are doing this same pattern here. They're hitting their targets, but they're not staying in them. So they're just like this bunch basically is they're hitting targets, but they're coming back to the same spot. So it's just basically killing premium on both sides. That's all it's really doing. It's really not safe to be playing earnings like that. It can get you clapped there. So yeah, you just really don't know when that will happen though for all earnings. So keep that in mind. You just gotta take that chance, take that risk here. Spots coming back up here. They might retest 438. I mean, excuse me, 432.84. 432.84. I feel like it would be a test to get to 438 today. That's what I was going to say. If you get to 438 on the spot today, man, stocks will pick up here. I think if you get to maybe 26 on the spot today, stocks will drop. So keep that in mind here. I think there's going to be the ultimate spread here. I'm trying to call an ultimate wide spread here that they can possibly pull off today, maybe by Friday. But I'm thinking they're going to try to widespread this thing here today, ladies and gentlemen. They did yesterday, if you really think about it. The spot was at 437, sold all the way to 427. So that was a $10 spread yesterday. So I think they got that on them again here today. Possibly maybe a $7 spread if so. But Salesforce is coming down though right here. Salesforce is selling off their earnings here. They're down $1 here. So who else reported here? We said Wish. Looks like they're down here about 20 cents. AMC reported, didn't they? Yep. Looks like they're only down about 25 cents right now. Dollar Tree reported this morning. That's what I wanted to check on. We're going to check with Dollar Tree. I thought I had them pulled up. I know some people caught that in the Discord. Let's see if y'all hit or miss here. Looks like, so Dollar Tree's down 5 here. Looks like they did what everybody else did here this week as far as earnings. They kind of just pulled back slightly, but still in the same range here. So you got some time on it. You should be fine, but I know you're probably down still, though, right now. So I wouldn't let them shake you out there. If you're on the short side right now, you might be fine as well here. Really don't know yet with the market here, how it's active. SPY's picking up though. First big green candle of the day, 433 on the SPY. So it looks like we might be challenging that 438 level. I already called it out, and keep that in mind, ladies and gentlemen. That will be their target. 433 on the SPY, so it's still going 433.25 new high. That was a nice green candle right there. Volatility is just curving on down here, you guys. VIX still got me tricked out right here with this green candle, but it said it bottomed at $24 and it came right back up to 26. So, and the VIX is going back towards that $24.65 mark. So, I don't know, you guys. Volatility might cool out here today, and that might be, I don't know, a fake spike to the downside back up here. Might go higher. We don't know yet. It's still early to tell. Powell's going to be speaking here live in about 20 minutes, you guys. So, like I said, tell a friend, tell a foe that that will be important here. That is your market mover, the ultimate number one leader. He moves the market. He can control the market makers at some point. But just keep that in mind. This is Jerome Powell here. He has to testify here. So I don't really even know what he's testifying about. We all about to find out here. So it must be pretty important here. We're about to see, man. We about to see. But right now, nothing really happening. The SPY took its first pop right here. It's market really chill here. Volatility is cooling down, so the market is kind of like going a little slow here. Like I said, probably just waiting on Powell. But we ain't really did nothing yet. Just consolidating on VWAP. First big pop right here on the SPY, but nothing too much. Only $1 there. So we're going to take a quick break right now, ladies and gentlemen. The market is in the green here, so stocks are higher from yesterday. The Dow jumps 200 points. The Dow's up 70% now. The Nasdaq is up 42%. The S&P 500 is up 75%, ladies and gentlemen. So with that being said, this is the Stock Market Live, and we will be right back. This is the Stock Market Live with LCAOD, that is. We'll be right back, ladies and gentlemen.
Just chillin' in the spot, getting smoked out. Country boys making noise, bring the two strokes out. It could be about who you know or what you know about. Planting seeds in the soul, waiting on the sprout. They don't understand. I just feel like the man, feeling like Nas. Be what I wanna be, I know I can. Anxiety kicking in, need another sand. I need some food, some food with them pots and pans. TAC in my system, all different strands. These niggas acting like hoes, I only fuck with fam. They keep me safe, keep me sane, and keep me in my zone. If you fuck with one of them, I hope your team's strong. They been sleeping on me, it's time to wake 'em up. I'm sipping purple and yellow, Lakers cup. If you nod one more time, I'ma take your cup. This shit way too expensive to be wasted, girl. Sometimes I really feel like I'm on another level. All the shit I done been through, my heart made of metal. Keep it positive and keep it hot, just like a kettle. Unless it's 12, officer, I don't know what to tell you. I'm back, this rap shit is way too easy. Pop a bar and spit some bars and then I'm way too sleepy. But I'm grinding hard, I got a family to feed. So I'ma try to drop some hits that the streets gon' need. Yo. Been struggling for a while, trying to find my way out. Even had thoughts of grabbing the stick, laying niggas down. Had to get my mind right, had to get my mind focused. I done made my mistakes, I done made some bad choices. I'ma keep my head up. If you ain't noticed, keep a smile on my face while I'm puffing on this poke. Plant seeds in the soil, just waiting on the sprout. This shit real from 93, and that's no doubt. Yeah.
Trapaholics mixtapes.
You lost, put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, get lost, get lost, get lost. Put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, get lost, get lost, nigga. Get lost, nigga. Really, I'm a boss, nigga. Chase a bad nigga, really from that stoop, nigga. That's one rack, boss. Yeah, I'ma get him. That's one rack, lost. Damn, Skizzy hit him. Got him with them bars, nigga. Call me Hershey, cause I kiss him. In the back of the May, nigga. You know that Maybach all white, and I'm tatted, nigga. Like I'm Haitian with them rosters on my head, nigga. One rack shit, one rack bitch, I love that. One rack shit, that one leg bitch, and I'm gon' splat at your shack shit. I meant, oops, my bad, I'm back, bitch. You lost, put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, 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 get lost. Put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, get lost, get lost.
Hey, have you ever been down and hurt, lost? And worry about yourself, trying to be a boss? Huh? Do you know the cost? You're lost up in the sauce. I never took a loss. If I did, I bounce back. That's boomerang, nigga. If you get it, then it's facts. I'm getting cash every day. I'm just chasing checks. I gotta do what I gotta do. I ain't taking no loss. Nah, I ain't taking no loss. I ain't taking no loss. Gotta do what I gotta do. I ain't taking no loss. Nah, I ain't taking no loss. Nah, I ain't taking no loss.
Six chill for
Water drip.
Yeah, go dummy, Kyle.
Drip. Water splash. Water drip. Water splash. Water drip. Yeah. Keep the daddy on my hip. Drip. Water splash. Water drip. Water splash. Water drip. Keep the daddy on my hip. Chasing. Water drip. I drip. Your bitch, she on me like a drip. Oh, water when I hit, yeah, she tunnel it. That vision is on that money, yeah, I'm chasing it. Just chase a bag, and yeah, I did it for my city, bitch. The shots very shot with me in they 30s. I don't give a fuck, I hurried up and chased that bag, homie. Just chase a bag, homie. Lenny rockin' with me on it. I do it for my city, who my opponent? I'm in my fucking opposition, where they at? If you up, then diss me. Come on with it. If you up, you gon' But you get the picture. Fucking right. But you get the issue. And I can't get with you. If you want that pressure, Come and get it. Then come and get you. What you want, nigga? I don't give a fuck. I'm on it, nigga. And I'm on it, nigga. With my homie, nigga. Stu like written on it, nigga. Yeah, show me, nigga, that I been down bad before. But nigga, I'm on it, nigga. I'm tryna get that bag, nigga. No, I ain't been stuck. Just know it's chasing bad, nigga. I'm tryna fuck on your bed. Where she at? I love that. Look at that. I'm lying, nigga. Get that hoe up at that hoe. Man. Feel me, bro. Lenny up and with me, bro. You rockin', get me, bro. FOE, OTL, Stu like E. We the fucking best. One way, drip. Water splash. Water drip. Water splash. Water drip. Yeah. Keep the 30 on my hip. Yeah. Drip. Water splash. Water drip. Water splash. Water drip. Yeah. Keep the 30 on my hip. Yeah. I ain't never asked a nigga for a favor from me. I ain't never chilled with these niggas or their partners. I just did what I had to do and stay on my grind. Cause I had a little kid and that wasn't perfect time. So now I walk around dripping. Now I walk around splashing. Money all in my pocket. Money all in the bag. I ain't never gon' trap, but I'm always trapping. I be always seasoned, and I be always spending. But I spend and get it back. Stack season, that's a fact. Stack it up. I need this shit right now. I don't need to see that shit later. I need this shit right on my hands.
All right, ladies and gentlemen, this is the Stock Market Live with LCAOD. We are back from the break. It's 9:52 a.m. So it looks like the COVID-19 response team, they're going to be going live here at 10:30, but that's before Powell starts speaking here. Oh, that's after Powell starts speaking, so Powell already be live, and then that's going to start right now, nothing going on, though. Everybody just kind of chilling out, waiting for that. You can tell that's what the market is doing. The SPY did pick up during that break right there, about another dollar there. 434.77 got tapped out right there, though. Bears clawed them there. This could be a dip, you guys, and they could get higher here. Or this might be your top, ladies and gentlemen. We really don't know yet still, but that was the first good movement there. As of right now, you might say it might be bullish here, but if you really know charts and numbers, you know this is resistance here. So we've seen these numbers here. We've seen this range. So wouldn't really consider this being too much here of a move. But right now, the market is trying to decide if they want this to be the top here or it's just about to dip right here. And we pick right back up at 434 on the spot here. So keep that in mind. Volatility is sliding to the downside here, consolidating to the downside, a little bit below VWAP here by $1. Keep that in mind, but still high though. $25.56 is still high on the VIX. But I would keep in mind too. I think the VIX would probably need to break below $24.65 for the bulls to really get going here. I think that's what that green candle might be here. Now that I've just been looking at it and thinking about it all morning, man. This green candle on the VIX, it means something here. They don't really, you get what I'm saying? Like they don't start out like that all the time, like every morning. So this is either a flagpole bottom here on the VIX and they're about to shoot up, you guys, or this is just like, I don't know, they might take it down to this level, $24.65, and let the bulls run here. We don't know yet, but we're going to find out shortly. All the indices are in the green though right now, ladies and gentlemen, so that is good right now for the Bulls. Bulls holding that momentum here. Bulls are actually back winning right now too as well. But it's just a little bit, by a little bit. They're up by a little bit right now. They might take this thing up here though, you guys. Who knows? Powell might shoot this thing up here today. It's been a while since he has. I think like beginning of January, that was the last time he made the market go up when he talked But now it's been a while. You know, we're in March now, so about 2 months ago that was. So I don't know, man. We're gonna see here. We're about to see here in about 5 minutes though, for real. Nvidia's right here at 238, you guys. So that resistance looks strong at 240 still, not breaking it at all. They might retest it right here for the fuck of it and bust through. Well, they might just bring it back down. Just don't want to keep retesting that today. About to kind of make that move now here. I will be going ahead. If you're going to trade here, this is the time to go ahead and lock in plays. This would be the chance to go ahead and make that side you think is going to end up. Go ahead and do that now because it ain't going to come back to this area here to the end of the day, maybe possibility, or maybe not even end of the day. It might not. It might be weeks from now. Who knows here? But I don't know. Spot pulling down here right now, right back close to VWAP here. So didn't go nowhere. That pop right there got faded here quickly there. Bearish just took momentum that fast. So you see how things can change this fast in this market. Bulls had slight momentum just now. In 60 seconds it changed here. We're right back in the middle at VWAP. The Dow is doing the same as well. And the triple Qs, volatility on the VIX just shot right back up here. $25.80 now. Let's see here. Looking at some other traders, man. Everybody's getting it in right now, though. It's early morning, but I think, like I said, right now would probably be the best time to go ahead and get in, lock in. Keep it small, obviously. Manage your risk, know the risk you're taking. And that's it. That's just what it is right there with that. But it looks like Biden. I'm just giving you guys the update on the briefings. For throughout the whole entire day here. It looks like, all right, we're going to have the United Nations General Assembly. They're meeting again in an emergency session. They're actually talking right when Powell's talking. I don't think everybody's going to be intruded into General Assembly here today because they've been talking the past 2 days. So I think attention is going to go to Powell here right now at 10 a.m. here in the next few minutes. So he's going to deliver, it looks like, the semi-annual monetary monetary policy update to the United States House. So Jerome Powell delivers semi-annual monetary policy update to the United States House. Ladies and gentlemen, this is going to be very key for stocks here. That just sounds like it's going to move the stocks. I don't know about you guys, but it just definitely sounds like it to me. Biden, he talks at 3:15 today. He's going to deliver his remarks on the bipartisan bill. So he's still begging the Congress to get that Build Back Better agenda through. He's going to be talking to us later on towards the end of the day about that. Let's see. It looks like Secretary Jen, she is talking today. You got the Vice President talking at 11 a.m. Secretary Jen is going to be talking at 11:30. So it's a really busy day today. They're all trying to talk here while Powell's talking is what I'm noticing. So they're all moving around while Powell's going to be talking first. And then there is a White House COVID-19 response team briefing at 10:30. So a bunch of news here. We want to be intruded into all of it. I'm going to try to get all this stuff pulled up here for real. But the most important video really, I think, will be Powell here right now and starting it off in about a minute. So we're going to go ahead and get that pulled up for you guys. Hope y'all ready, man. Hope y'all ready. All right, so yeah, this is about to begin any moment now here.
Ted Budd here, same thing.
All right, Committee on Financial Services here. So this is what LCAOD is all about here. This is I started my business for financial services. My purpose is investing here, so this is very key here for investor management here. So this is gonna be big here, and it look like it's about to start here. Spots right at VWAP just bounced off of it, so keep that in mind here. The indices are in the green. Let's pay attention, you guys. Good luck.
The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. As a reminder to all members, we will conclude today's hearing at 1 p.m. Members who were unable to ask questions at our July hearing with Chair Pro Tempore Powell will be given priority to ask their questions today, and we will return to our normal order of recognition once those members have asked their questions. This hearing is entitled Monetary Policy and the State of the Economy. I now recognize myself for 4 minutes to give an opening statement. I want to start by reiterating that I join with President Biden and our allies in condemning Russia's shameful, premeditated, and unprovoked invasion of Ukraine. I stand in solidarity with the people of Ukraine. Chair Pro Tempore Powell, since the last time you testified in July 2021, the United States economy has continued to boom and our recovery from COVID-19 pandemic is strong. Since the beginning of the Biden administration in January 2021, our economy added over 7 million jobs, a record in the first year of a new presidency. In addition, wages and salaries for workers grew by 4.5% in 2021, the highest level in close to 40 years. While these are encouraging figures, we have more work ahead. Families across the nation are facing higher prices because of inflation created not only by pandemic-related supply chain problems, but also giant corporations taking advantage of economic conditions to pass on higher prices to consumers. Importantly, housing is a key measure and driver of inflation. For too long, we have not addressed the shortfall in our housing supply, and this lack of supply is driving up prices. In 2021, the national median rent for an apartment jumped by almost 18%, and home prices rose by 17%. These are the true drivers of inflation, according to experts, despite repeated efforts on the part of Republicans to falsely blame pandemic relief and emergency stimulus as the primary cause. To address housing supply and other inflation drivers, the House passed the Build Back Better Act and American Competes, which make transformational investments, including $150 billion in equitable and affordable housing, as well as improvements to our supply chains. Regarding digital assets, the Federal Reserve recently released a paper seeking public feedback on a possible U.S. central bank digital currency, or CBDC, which would provide an alternative to volatile cryptocurrencies and benefit financial inclusion and promote national security. On the other side of that digital coin is a concern that pariah states like Russia may use foreign CBDCs to relieve the pressure of our carefully coordinated multilateral sanctions. Leadership from the Fed on these issues is more important than ever. Lastly, I would note that for the first time, a chair pro tempore of the Federal Reserve Board is testifying at this hearing. Senate Republicans have chosen to unilaterally block your confirmation. Chair pro tempore Powell and the historic confirmation of diverse and highly qualified nominees to the Board of Governors, leaving key leadership positions at the Federal Reserve vacant when it is tackling an array of economic issues, including those arising from Russia's invasion on Ukraine. This will undermine our recovery from the pandemic and place our economy and financial stability at risk. At a time of enormous economic uncertainty, rising prices, and geopolitical turmoil, the Fed's legitimacy is on the line. Now is not the moment for obstruction, delay, and gamesmanship. So, Chair Pro Tempore Powell, I look forward to your testimony this morning. I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes. This morning, I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes.
Well, look, Chairman Powell, we appreciate you being here, and I say to the chair of the committee that this is the House. The Senate does nominations. If we wish to have an opinion and direct the Senate, we should go run for the Senate. We have the Fed chair here at a time of unprecedented economic conditions and a war that's happening. I think we should stay focused on that. Chair Powell, thank you for your leadership. Thank you for your steady hand and your approach over this quite tumultuous first term of yours, and congratulations on your nomination and the expected confirmation of your second term. As we all know, the Financial Services Committee Republicans have offered and requested the Biden administration not approve the $17 billion in an International Monetary Fund special drawing rights for Russia's reserves last year. My hope is that my Democrat colleagues will withdraw their support for $60 billion in additional reserves from Moscow in this year's omnibus that is being negotiated right now. We stand in a bipartisan way with the people of Ukraine, and we are grateful for their bravery. And we want to do everything in our power to assist and support them. Again, thank you, Chair Powell, for your leadership. America's facing the worst inflation we've seen in 4 decades because of Democrats' reckless spending here on Capitol Hill. Instead of a course correction, House Democrats keep hoping the Senate will take up the $2 trillion in new spending through Build Back Better, or whatever they're going to call it. This would only make rising prices worse for families across the country. A Wharton budget model estimates the average American family spent $3,500 more last year to keep up with rising prices. Nowhere is this more evident than at the supermarket, where folks are seeing a 22% increase in grocery bills, according to a recent KPMG study. For a family of four, this can mean choosing between groceries they need and saving for their child's education, their retirement, or even a home. The American people should not have to mortgage their future because of Democrats' love of more government spending to give them the illusion of prosperity in the moment. And despite what we've heard from President Biden last night, simply telling people they're better off does not, in fact, make it true. However, I'm pleased that the president sided with Republicans instead of Senator Warren, Elizabeth Warren, when we renominated you, Chairman Powell, when he renominated you to chair the Federal Reserve. But as you know, Chair Powell, you have an enormous task ahead of you. As one of your predecessors famously said, the Fed's job is to take away the punch bowl just as the party starts to warm up. But the Democrats have drunk deep, and they want to move on to the harder stuff. That is a risk for our economy. We can't let that happen. I was pleased to see the Fed reject the notion of personal accounts by the central bank. As we've seen recently in Canada, and their unprecedented use of emergency powers to freeze hundreds of bank accounts, we need to ask not just how financial authorities can be used, but also how they could potentially be abused. It's disturbing that some Democrats refuse to see this danger and may actually view it as an opportunity to rationalize more government involvement in America's everyday lives. And that's why I sent a letter to regulators today asking for clarity on what this disturbing move that we've seen in Canada could be, if anything to that accord could be done here in the United States, and what we should do to prevent it. And I look forward to hearing their feedback. Again, Chair Powell, thank you for being here. These are unprecedented times that you're serving. Thank you for your steady hand and your leadership and your willingness to answer questions using language that most of us can all understand. And with that, I yield back.
Thank you, Ranking Member McHenry. I now recognize the gentleman from Connecticut, Mr. Himes, for 1 minute.
Good morning, Mr. Chairman. Mr. Chairman, probably the most effective tool we've deployed against Putin's outrageous attack on Ukraine is the sanctions on the Russian central bank and the freezing of Russian foreign reserves. Our ability to do so stems mostly from the dollar's preeminent position as the world's reserve currency. It is time, in fact, it is past time for all of us to lead on creating a regulatory environment in which we, rather than the world's despots, terrorists, and money launderers, benefit from the emergence of cryptocurrency, including a central bank digital currency. Mr. Chairman, one of the headlines on my news feed this morning reads, "Russians turn to crypto amid increasing sanctions," as the chairwoman indicated. The subcommittee I chair and the full committee have done and will do hard work on this topic, but it is time for all of us to act. Mr. Chairman, I can't shake the image of 17th century bankers sitting around London, unable to imagine that their gold pieces and copper plates could be replaced by these worthless pieces of paper. Let's not be those guys. Let's lead and not follow.
I now recognize the gentleman from Kentucky, Mr. Barr, for 1 minute.
Chairman Powell, thank you for being with us today. Inflation has hit a 4-decade high, with CPI surging to 7.5%. Core inflation exceeds 5%. PPI is now pushing 10%. Recently published inflation forecasts predict CPI will rise above 8% in coming months. According to a study from the Wharton School, the average family spent $3,500 more for the same goods and services in 2021 versus 2020. Tax and spend policies are largely to blame. Stephen Ratner, former counsel to the Treasury Secretary under President Obama, put it eloquently in a New York Times op-ed. The $2 trillion American Rescue Plan was, quote, the original sin that, quote, contributed materially to today's inflation levels, unquote. A potent cocktail of excessive government spending creating excess demand combined with a hostile tax and regulatory environment for private enterprise, which has constrained supply, have together produced a toxic supply-demand mismatch pushing prices up. Compounding these fiscal policy mistakes The Fed pursued for too long an unconventional and overly accommodative monetary policy, which has resulted in an inflation crisis that is hitting our constituents where it hurts. It is clear the Fed is not satisfying its price stability mandate. I look forward to hearing from you on the path forward to address the monetary policy side of this equation.
Questions done.
I
Shoot
yield
the
back.
investors out. Boom. Powell still ain't say nothing. Now,
I want to welcome our distinguished witness today,
Powell
the
can still
Honorable
pick it up from where it's at right now.
Honorable
He gonna
Jerome
say what they
Powell,
questioning.
the Chair pro tempore
It's a
of the
little
Board of
delayed. It's
Governors
two
of
different
the Federal
outlets.
Reserve System. Without objection, your written statement will be made part of the record. Chair pro tempore Powell, you are now recognized to present your oral testimony.
Thank you. Chairwoman Waters, Ranking Member McHenry, and other members of the committee, I'm pleased to present the Federal Reserve's semi-annual monetary policy report. Before I begin, let me briefly address Russia's attack on Ukraine. The conflict is causing tremendous hardship for the Ukrainian people. The implications for the U.S. economy are highly uncertain, and we will be monitoring the situation closely. At the Fed, we're strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. We pursue these goals based solely on data and objective analysis, and we're committed to doing so in a clear and transparent manner so that the American people and their representatives in Congress understand our policy actions and can hold us accountable. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a robust 5.5% pace last year, reflecting progress on vaccinations and the reopening of the economy, fiscal and monetary policy support, and the healthy financial positions of households and businesses. The rapid spread of the Omicron variant led to some slowing in economic activity early this year, but with cases having declined sharply since mid-January, the slowdown seems to have been brief. The labor market is extremely tight. Payroll employment rose by 6.7 million in 2021, and job gains were again robust in January. The unemployment rate declined substantially over the past year and stood at 4% in January, reaching the median of FOMC participants' estimates of its longer-run normal level. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has ticked up, labor supply remains subdued. As a result, employers are having difficulties filling job openings. An unprecedented number of workers are quitting to take new jobs, and wages are rising at their fastest pace in many years. Inflation increased sharply last year and is now running well above our longer-run objective of 2%. Demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. These supply disruptions have been larger and longer lasting than anticipated, exacerbated by waves of the virus, and price increases are now spreading to a broader range of goods and services. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We know that the best thing we can do to support a strong labor market is to promote a long expansion, and that is only possible in an environment of price stability. The committee will continue to monitor incoming economic data and will adjust the stance of monetary policy as appropriate to manage risks that could impede the attainment of its goals. The committee's assessments will take into account a wide range of information, including labor market conditions, inflation pressures and inflation expectations, and financial and international developments. We continue to expect inflation to decline over the course of the year as supply constraints ease and demand moderates because of the waning effects of fiscal support and the removal of monetary policy accommodation. But we are attentive to the risks of potential further upward pressure on inflation expectations and inflation itself from a number of factors. We will use our policy tools as appropriate to prevent higher inflation from becoming entrenched, while promoting a sustainable expansion and a strong labor market. Our monetary policy has been adapting to the evolving economic environment, and it will continue to do so. We've phased out our net asset purchases with inflation well above 2% and a strong labor market. we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. The process of removing policy accommodation in current circumstances will involve both increases in the target range of the federal funds rate and reduction in the size of the Fed's balance sheet. As the FOMC noted in January, Fed funds rate is our primary means of adjusting the stance of monetary policy. Reducing our balance sheet will commence after the process of raising interest rates has begun and will proceed in a predictable manner, primarily through adjustments to reinvestments. The near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, with sanctions, and of events yet to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. Maintaining the trust and confidence of the public is essential to our work. Last month, we finalized a comprehensive set of new ethics rules to substantially strengthen the investment restrictions on senior Federal Reserve officials. These new rules will guard against even the appearance of any conflict of interest. They are tough and best in class in government here and around the world. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you very much. I now recognize myself for 5 minutes for questions. Chair Pro Tempore Powell, as you know, the Fed is required to conduct monetary policy in a manner that fulfills its dual mandate to promote maximum employment and stable prices. But as you have explained, most of the inflation we're experiencing right now can be traced back to supply chain issues related to the pandemic, and the Fed cannot directly affect supply side conditions. These supply chain constraints seem likely to only significantly increase as Russia invades Ukraine and the full effect of our sanctions take hold. If the Fed's tools are mostly useful in stimulating or constraining demand, how can we expect monetary policy to rein in inflation that is largely driven by supply side factors?
Our policies really cannot, as you point out, affect supply side conditions. Our policies affect demand. What we're facing now is, though, an elevated level of demand in the face of supply side constraints, and it's the collision of those two things that's creating inflation. So there is an important job for us to move away from these very highly stimulative monetary policy settings to a more normal level of rates and perhaps tighter at a time when inflation is highly elevated, and that is what the committee plans to do.
So it seems clear that the Fed has limited tools to address inflation and that Congress has an important role to play. The Monetary Policy Report notes major shortages in housing supply as a factor in high prices. If Congress were to make investments to alleviate these shortages, do you think this would be helpful in addressing inflation?
Major investments in housing supply. So I think housing prices are high for a number of reasons, actually. Difficulty in getting lots, materials, difficulty in finding workers, very high demand. It's been extraordinarily high. So those are many of the features, and also low interest rates have made credit widely available. Mortgage rates are going up. That will probably begin to cool off demand. I wouldn't want to comment on congressional legislation, but I do think there's no doubt a role for Congress.
So I suppose I could conclude, without having you comment directly on fiscal policy, that you agree there are ways to manage inflation outside of monetary policy. It's not only monetary policy, that others have a role to play.
I do think that's right, but more in a sort of medium or longer term sense. I think the Fed does monetary policy, and inflation is largely a monetary phenomenon, and it's our tools that can be used to address inflation. Over time, though, of course, anything that expands the productive capacity of the United States over time would, in principle, make greater potential output and a less constraining economy.
Fed forecasters expect that inflation will subside as supply chain disruption issues are resolved. However, housing and rent prices, as you've said, account for roughly 1/3 of the consumer price index, and most economists do not expect the problem to be resolved as quickly as supply chain bottlenecks due to both the time it takes to develop housing and the lack of investment in housing that is affordable to low and moderate income families. Currently, there's a shortage of nearly 7 million rental homes that are affordable and available to America's lowest income renters, and a shortage of more than 5 million homes for potential home buyers. In my district, there's a shortage of more than 34,000 rental homes that are affordable and available to the lowest income families, while the state of California has a shortage of more than 962,000 affordable rental homes. If Congress does not make the investments to increase supply and access to the affordable homes in this country, how concerned are you that the Fed will not be able to contain inflation?
Well, you're right that housing inflation is a significant part of the CPI. We also look more prominently at personal consumption, PCE, which is a different measure, and it's something less than that. And unlike these temporary supply side constraints that we see, housing inflation really is much more of an indicator of the tightness of the economy rather than supply side problems. So it's something we watch carefully, along with wages, frankly, and it is a major contributor.
What are your thoughts going into the March meeting?
The March meeting. Okay, so here's how I'm thinking about the March meeting. And I guess I would start, of course, with the U.S. economy, which is very strong, the labor market extremely tight, and inflation running well above target. The way we think about our work is we develop working plans for making adjustments to monetary policy over the course of the coming months, and then we are flexible as plans meet the real world. So we're never on autopilot, obviously, and at a time like this, what we aim to do is lay out our principles, and then with whatever clarity we do have, and then proceed to implement those policies carefully and nimbly. So coming into this meeting, let's say before the Ukraine invasion, the committee was set to raise our policy rate, the first of what was to be a series of raises expected for this year. Every meeting was live. Decisions would be based on incoming data and the evolving outlook. I also expected we'd make great progress on our plan to begin to shrink the balance sheet. And so the question now really is how the invasion of Ukraine, the ongoing war, the response from nations around the world, including sanctions, may have changed that expectation. And so it's too soon to say for sure, but for now, I would say that we will proceed carefully along the lines of that plan. The thing is, the economic effects of these events are highly uncertain. So far, we've seen energy prices move up further, and those increases will move through the economy and push up headline inflation, and also they're going to weigh on spending. We're seeing effects on other commodities and perhaps from declining risk sentiment and weaker growth abroad. The thing is, we can't know how large or persistent those effects will be. That simply depends on events to come. So this is where that leaves me. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. We're also going to write down our new summary of economic projection, individual forecasts, which will show each participant's views of the path forward in the economy and with rates. I also expect that at this meeting, we'll make good progress toward an agreement on a plan to shrink the balance sheet. We will not finalize that plan at this meeting. We'll do that when we think the time is right at a coming meeting. The bottom line is that we will proceed, but we will proceed carefully as we learn more about the implications of the Ukraine war for the economy. We use our tools to support financial stability and macroeconomic stability. We're going to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. So that's how I would think about it.
Very specific. Now, you mentioned 25 basis points from all the analysis about what the Fed will do over the course of the next year. Is 25 basis points the floor, the ceiling? Is it the speed limit? Is that the max you think the Fed could take on? How do you think of that?
So here's how I think about that. We have an expectation, those of us on the committee have an expectation that inflation will peak and begin to come down this year. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings.
Now, you mentioned the balance sheet, a plan for the balance sheet, and that is to come. But what I'm hearing clearly from you is that the Fed is very interested in financial stability given what's happening, and you're willing to make quick decisions on a question of liquidity, on a question of market stability, those important works that you've focused on as Fed chair. And so it's actually substantial news for the House to be the first rather than the Senate to break news. So thank you for your forthcoming, being so forthright about your views on this. And with that, Madam Chair, I yield back.
Thank you. The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Madam Chair, and thank you for ranking member in this hearing. Chairman Powell, thank you very much for being with us here once again. As we look at the unprovoked criminal Russian invasion of Ukraine, one of the most notable national security responses has been the president's recent announcement to cut off much of the Russian financial sector from SWIFT financial services. Our EU partners have also joined us and excluded 7 Russian banks from SWIFT. Chairman Powell, what practical effect would this have on Russia, its economy, its financial sector, and its people?
So thank you. I should point out that the Fed does not impose sanctions on other countries. That we in this process of developing sanctions, we are not a principal. That's really a job for the administration, particularly the Treasury Department. So we provide technical background support and things like that. But I think questions about sanctions and their effects generally would be more for the administration and the Treasury Secretary. I think you can see, I will just add though, that the effects of the sanctions so far appear for now to have been significant.
Yeah, I mean, we saw what happened to the ruble. We saw what happened to the market. The market's still closed. Is a way around it for them cryptocurrency? Could you talk a little bit about that? I know it's a little bit out of your bailiwick, but as you said, it's an interesting moment in time. You know, we haven't had to face this since really World War II, and even all the comments that you made about inflation and watching the market, so much of it is tied to obviously what the Russians are doing with respect to their unwarranted and criminal act there in Ukraine.
So I don't have any private information on the extent to which that is happening, but that is something you read about and hear about. And I just think it underscores the need really for congressional action on digital finance, including cryptocurrencies. We have this burgeoning industry which has many parts to it, and there isn't in place the kind of regulatory framework that needs to be there. It was probably no different with railroads or telephones or the internet. And ultimately, what's needed is a framework, and in particular, ways to prevent these unbacked cryptocurrencies from serving as a vehicle for terrorist finance and just general criminal behavior, tax avoidance and the like. So I guess that's what I would say there. I don't really know the extent to which it's happening, although you do hear that and read it in the paper.
Seems like an outform. Since we did go down this road, could you comment a little bit about then the central bank digital currency? It seems like that would be something that would be helpful in situations like this.
Yes, so we issued a paper after much thought and many drafts. We issued a paper, was it late last year? I guess it was late last year, seeking public comment on the costs and benefits of a potential central bank digital currency issued by the Federal Reserve here in the United States, digital dollars. And we await, I think we gave an extended comment period, and we gave, and we very much look forward to reading those comments. This will be something that we invest a fair amount of time and expertise and hiring people and things like that to try to get it right, but also to understand whether the benefits actually outweigh the costs, which I think is an unanswered question both here and around the world. Nonetheless, it's our obligation to move vigorously to understand the answers to that question so that we can deploy a central bank digital currency if it's appropriate. So would it, in principle, it depends on why people are using unbacked digital currencies. If they're using them to evade, visibility and evade the law, then for us just to have a law-abiding CBDC won't change that. They'll still be able to use those currencies for that matter. The existing digital currencies that again are not backed are really vehicles for speculation. They're not used in payments. They're not a store of value. They're speculation like gold. That's what they're used for. Whereas, potentially a U.S. CBDC would have a wider view. I do want to stress we have not decided to do it, but we do understand our obligation is to really get to the bottom and understand both the technical and the policy issues that need to be answered.
Thank you, and I know my time's about up. I'd just say from your lips to God's ears, I hope that the inflation does peak this year and does come down because people are hurting. And thank you very much again for your steady stewardship.
Thank you very much.
Thank you.
The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Welcome, Chair Powell. It's good to see you in the chair. We appreciate your time and service. Chair Powell, since the last FOMC meeting in January, the global economy has become markedly more complex. Russia's unprovoked and unwarranted invasion of Ukraine has led to a very steep increase in the price of energy. As of this morning, when I checked, a barrel of crude oil was priced at $112 per barrel. And, this steep increase in the price of energy risks pushing U.S. inflation potentially even higher. How does, and you've touched on it a little bit, but how does the war in Ukraine affect your thinking as you prepare for the next FOMC meeting?
So I think the first thing again to say is that the ultimate economic effects of the war and all of the sanctions and events yet to come are just very highly uncertain, and we need to understand that. And so, as I mentioned, I think it's appropriate for us to move ahead. Inflation is high. The committee is too high, and the committee is committed to using our tools to bring it back down to levels of price stability, which is to say 2% inflation. So, but I would also say that given the current situation, we need to move carefully, and we will. And we'll be nimble. We'll be looking at the situation as it evolves. And again, we will use our tools to add to financial stability, not to create uncertainty. And
at this point in time, you don't think that it significantly alters your expectations for the rate increases that you've discussed this year?
I don't think that's knowable yet. I mean, so we've run what we like to do is run alternative scenarios, and we've done some of that, as you would expect. And it's easy to find cases where it would affect, but we don't know that yet. We honestly don't, and we'll see.
Thank you. Chair Powell, could you explain the role of the Federal Reserve in implementing U.S. sanctions on Russia? How you're working with OFAC, how this actually is implemented?
Right, so sanctions are really designed by the administration. They're part of what the elected government does, where we provide technical support. We implement those sanctions, or we make sure that the banks obey them, that we supervise and regulate. That's one thing that we do. We also consult on, we have knowledge about financial markets and financial institutions, so we're providing technical support, but we're not the decision makers on those things. And honestly, these are decisions that are made at the level of the government, not at the level of the elected government, not at the level of the Fed.
And I know things are happening quickly and in real time here, but what actions has the Fed taken to date since the invasion of Ukraine?
Well, I'd say, first of all, since late last year, we've been on very high alert for cyber attacks. We haven't seen any notable incidents about that yet. We're making sure that the banks we regulate and supervise are also on high alert. We communicate with the reserve banks where there's a lot of expertise in these areas and other parts of the government. So that's one thing that we've done. We're, as I mentioned, we are in very close contact with the Treasury Department, as you would expect, between every central bank and every finance ministry around the world. But again, we're not the ones who design the sanctions.
Right. Well, cybersecurity is certainly, this committee is, and especially at the Fed, is a top priority. I'm glad that you're watching it closely. Chair Powell, does our U.S. financial system have the necessary capital and liquidity to handle any economic fallout from this war? What kind of data will we be seeing?
I mean, the evidence to me strongly suggests that the answer to that is yes. We just went through a rather enormous shock with the pandemic and the near closure of the global economy, and U.S. banks' capital levels are at multi-decade highs, liquidity levels the same. It's hard for me to look at that and say that a lack of capital is a threat at this point. There are certainly issues. Cyber for private financial institutions is a huge issue, and one that they spend a great deal of time on, as do we.
In 2015, the Obama administration blocked the development of the Keystone XL pipeline, a decision reversed by the Trump administration, and President Biden canceled the permits, again, depriving the U.S. of over 800,000 barrels of oil a day. Wouldn't expanding the supply of oil by 800,000 barrels a day reduce energy inflation and lower prices at the gas pump?
We're not responsible for energy policy. That's a matter for Congress and the administration. Of course, the laws of supply and demand do work.
Laws of supply and demand do work. I've used my time and I yield back.
Gentleman from Guam, Mr. San Nicolas is now recognized for 5 minutes.
Thank you so much, Madam Chair. Good morning, Chair Powell. And I'd like to first recognize one of my senators from all the way from Guam, Senator James Moylan. Thank you so much for making time to join us here today, Senator. Mr. Chairman, over the course of the uptick of inflation in the last year, you testified before the committee on multiple occasions that the Fed believed that the inflation that the country was experiencing was transitory. And since that time, especially today, there's a seeming change in that tenor. Could you elaborate more on that?
Sure, I'd be glad to. So I think very widely among macroeconomists and other central banks around the world, we looked at it as akin to an energy shock and a supply side shock. And the textbook on monetary policy would have you look through that, because a supply shock comes and goes. And if by the time monetary policy is having its effect, which happens with long and variable lags, we think, the supply shock is already gone. So we looked at it that way. And, I think that we expected to get relief, particularly going into last fall, I would say. We expected when schools reopened, vaccinations, raised, kids back in school. We expected supply of labor to come in, that kind of thing. And it didn't happen. But it didn't happen because the supply side constraints didn't ease. They didn't ease. And so it's not like, as a practical matter, what was wrong was not the theory. It was just, in reality, the supply side constraints have been much more durable and persistent than we had expected. So we knew that we could be wrong, and I think I always thought we could pivot pretty quickly and catch up. And we did pivot when we started to pivot in the middle of last year, and then pivoted hard at the end of the year. But in the meantime, the economy was really healing incredibly quickly over the second half of last year. Record job growth and record decline in unemployment, record tightening in the labor market. So, we know that what our job is now, which is to move away from these highly accommodative settings to more appropriate settings, given the very hot nature of the labor market and the level of inflation.
There's chatter, Mr. Chairman, public chatter, that the intensity of the inflation that we're dealing with today is a reflection of the Fed not taking policy action soon enough, not taking enough policy action. And there's chatter, public chatter, that causes the Fed's credibility to come into question as to whether or not it is acting responsibly and appropriately with the data sets that are coming in. And I bring this up, Mr. Chairman, because we have a duty to the American people to be able to raise these questions as pointed as they are, and to give individuals such as yourself an opportunity to really speak to the credibility question that's really out there in the community. If you could elaborate further on that.
Sure. It's for others to judge many of the things you mentioned, and we understand that. But so we, starting in December, at our December meeting, we began talking about significantly more rate increases. The market took us very much at our word. And as this year has gone on, the market has so market participants do appear to be reacting, what I would call as appropriately to our assessment, our ongoing assessment and reassessment of what's appropriate. And, I'll just assure you and everyone that we are committed to achieving price stability. We will use our tools to achieve price stability. Really, that is an essential bedrock element of everything else we want to achieve in the economy, including a strong labor market.
When we faced the financial crisis in 2008, a lot of lessons were learned about the need for the Fed to be more responsive to the liquidity traps that could take us by surprise. Given the circumstances we're dealing with today and the frustrations that the American people are facing, can you share with us any lessons that the Fed has learned with respect to its responsiveness to the inflation that we've been dealing with over the past 12 to 18 months and the intense inflation that we're dealing with today?
The inflation that we're experiencing is just nothing like anything we've experienced in decades. It's higher, of course, much higher than anything we've seen since I was much younger. But not only that, it's different. It's coming from the goods sector. The goods sector has been a source of disinflation for a quarter of a century because so many manufactured goods have been
But just specifically, Mr. Chairman, reclaiming my time, what specific lessons has the Fed learned from the outcome that we're dealing with today?
Well, we're still living through it. So the main focus we have is not on doing a retrospective. It's on conducting policy appropriately to return us to price stability while also sustaining the expansion.
Gentleman's time has expired. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, thank you for being here, and congratulations on your nomination to continue your job for a second term. I think it's well deserved. Before I get to my questions, though, I want to hold up something here. This is a Ukrainian dollar. It's a hryvnia. I kept some of these when I was in Ukraine several years ago doing some ministry work, and I think it's interesting to think that what happens in the next few days may determine whether this is another defunct piece of currency and the nation returns to a ruble, or will this maintain some of its value? But as you look at it, you can see it's physically a fraction the size of the US dollar. It takes about 30 of these hryvnias to match a US dollar, but when you look at values, our dollar has decreased in value, as you have mentioned, due to inflation. Now, a year ago when you testified before this committee, I asked what your outlook was for the economy, and you said you expected economic growth to be strong for the rest of 2021. But at that time, I warned that the $2 trillion stimulus bill that was making its way through Congress at that time was unnecessary and far too big, given the economy was already recovering. Lo and behold, these predictions came true. In your opening statement, you mentioned that you didn't expect inflation to continue at the rate it is right now, but I also recall throughout 2021, we heard that inflation was slight, it was going to be temporary, but I also understand that that prediction probably didn't include the actions and the roles that Congress had, as you had said. Now, according to a report from the Federal Reserve Bank of San Francisco, because the American Rescue Plan was so extremely large and was passed when the economy was already recovering, this was a significant contributing factor to inflation. Do you agree with that report from San Francisco's bank that our reckless spending is a contributing factor to our inflation?
I wouldn't like to comment on any particular law, but I'll say this. All of the things that we did after the pandemic were we turned our dials as hard as we could. So did you, with the CARES Act. And the economy did benefit from that. We have the strongest economy in the world now. But part of that, no doubt part of what we did and what Congress did without naming any particular laws is also part of the reason why inflation is high now.
Right. So there are multiple contributing factors to that, being reckless spending, which devalues our dollar, is one of those. And what we heard last night was that there is not going to be a change in the direction this Congress is going or the White House. It sounds like we're just going to repeat the same mistakes we made in 2021. Now, I know that you have the tools of adjusting the interest rate. You mentioned increasing 25 base points, and you mentioned that it may be necessary to go higher. Understand that. Do you still think that inflation will be temporary? And I believe that you said it would be short-lived going forward because of resolving our supply chain issues. But since there are other contributing factors to that, are you anticipating that Congress or the administration will undo some of the failed policies, such as the spending policies and the suppressing of America's energy supply, which has been a significant contributing factor? Let me rephrase that. If Congress and the White House does not change the policies of 2021 and continues down that same path, do you still believe that inflation will stabilize? Price stabilization will come this year?
Well, first, we've had this expectation, as you all know, for more than a year, and it hasn't actually come true. So we're humble about the fact that we can't really call with any confidence the turn, but it does seem that this year we'll be withdrawing policy accommodation. Actually, a lot of the fiscal policy spending has happened now, and so the impetus to growth will be declining and in fact negative from fiscal policy as it stands now. And those are things, and just the natural improvement of supply chains and labor supply and things like that. Those are the things we're looking to for relief on inflation, hoping for. Very difficult to say when they'll happen. And our job is to achieve price stability one way or the other.
Okay. I see I'm running out of time. I've got several other questions, but I'll submit those for the record. Now yield back, Madam Chair.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for this hearing, and thank you to Chair Pro Tempore Powell for joining us. It's been a challenging year. Rising prices at the gas pump and the supermarket cause real distress to working class families like my neighbors in Chicagoland, and improvements in employment and wages are real, but not nearly enough. My constituents saw a decade of stagnation after the last recession. Working class Latinos and immigrants like my neighbors are always hard hit. We simply can't afford that again. Chair Powell, you've said that inflation has been driven by bottlenecks in the supply chain. And last night, President Biden highlighted their role in corporate concentration and price increases. I'll note that CEOs from Kimberly-Clark to Tyson Foods have bragged to investors about their power to raise prices without facing competition. And last night, President Biden said, and I quote, "Lower your costs, not your wages." And my constituents were glad to hear that. So, Chairman, can you explain how raising interest rates will lower prices for diapers or chicken? Last time it was because my neighbors lost their jobs and couldn't find diapers or chicken. So is that the idea?
Well, the idea is that right now the federal funds rate is still set close to zero, and that is a very stimulative level. I think it's 8 basis points today. So that is not an appropriate level, we think, going forward. We think it's appropriate that we engage in a series of rate increases over the course of this year and also let our balance sheet shrink. And so what will happen then over time is demand will moderate as interest rates get into the economy over time. And these annual price increases in everything, where prices are going up, will moderate as well. That is how it has always worked with interest rates. We don't do competition policy, so I can't really comment on that part of it. But I will say that that's how we think about inflation, and that's how we use our tools to get inflation under control.
Changing gears, we discussed corporate concentration, and last July, the president issued an executive order on competition that encouraged the Fed and other regulators to increase scrutiny of bank mergers. It's been a long time since regulators blocked a bank merger, even an acquisition by a globally systemically important bank, or GSIB, in 2020. Chairman Powell, do you think it's appropriate to issue a moratorium on pending mergers while the Fed updates its framework for their review?
Well, I think we have a statute that Congress has passed that gives us the rules for evaluating potential acquisitions and mergers by banks. I think we have a widely developed framework for that work, and we're continuing to implement that. Any changes that would come would either come through legislation or through new personnel at the Fed, neither of which we have right now.
As we learned from Wells Fargo, frontline bank workers are an important resource for regulators. They see firsthand how banks implement or ignore internal controls, and they can identify problems as they develop. Incorporating frontline workers' voices in our banking regulatory system would improve the information we have and diversify the voices that get heard. Chairman Powell, will the Fed commit to adding bank workers to your various advisory councils? Why or why not?
Very interesting question. We do have quite a diverse group of people on our various advisory councils, including people who are representatives of workers. I don't know that I don't know that we have ones that we're councils, outside councils that advise us on bank supervision per se, but we do always seek out in all of our reserve bank boards and also the advisory councils that we do have representation from labor and also from people who live and work in and represent the interests of, low and moderate income communities.
Thank you. Appreciate it if you would consider that. And Madam Chair, I yield back.
Thank you. The gentleman from Tennessee, Mr. Kostop, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chair Powell, for attending this morning. If you can, a lot of times we look for historical references when we try to reference an event and current event. A number of people, a number of pundits, when they look at inflation today, they reference it back historically to the late 70s and the early 1980s. From your perspective, is that the proper historical reference to what we're experiencing today as it relates to inflation?
That's the proper historical reference for what we're what we're trying not to replicate. So we look back. Obviously, all of us have looked carefully at the history of post World War II inflation and business cycles and all that kind of thing. One of the things that's different now is that central banks, including the Fed, are very squarely take responsibility for inflation. That was actually not the case in the 1970s. There was a school of thought that really there were certain things that an independent agency just couldn't do because it was too hard and Congress should do it. So now I think central banks around the world have an inflation target. They have transparency so that they can be held to account for it. We're not waiting. We are using our tools now and that's really different than it was in the 1970s. So also inflation expectations have been anchored for a long time. They really weren't then. They were allowed to become unanchored without much of a response. That would not happen in today's world and will not happen.
A few weeks ago when the CPI number came out, I was on my way to a breakfast meeting in Jackson, Tennessee, where I represented one of my constituents and I, when we were talking about the new CPI number, he said, I don't care what the number is, because I know that I'm paying 50% more in gas than I did 12 and 18 months ago. I know I'm paying 20 to 25% more in grocery prices than I did a year ago. I know what the price of a new car and a used car is. If you were me, if you were a member of Congress, what would you tell your constituents about the rising cost, the expensive cost to just live today?
Inflation is too high. We understand that, and we're working on it. It's going to take some time, but we're going to get it back under control. By the way, we're seeing this everywhere in the world. We're seeing it more in the United States because our economy is stronger, but we're seeing it everywhere in the world.
Let me, if I can, follow up on a few questions that some of my colleagues asked about. Ranking Member McHenry asked you about the next meeting and your plans for the next Fed meeting, and I think you eloquently laid it out. But you also talked about the situation that's developed in Russia and Ukraine. My inference from your answer is that if Russia had not invaded Ukraine, that the Fed would be more aggressive as it relates to the balance sheet and to rate hikes. Is that a proper inference?
No, I think that remains to be seen. As I said, we are moving ahead at this meeting. It would be my expectation in 2 weeks with a rate increase. And we're going to make progress on agreeing on a plan at this meeting to shrink the balance sheet. I'm confident we will. The question of when we implement that plan is not answered yet. So I don't think that's clear at this point. It's certainly something that we can't answer now.
Mr. Garcia referenced the President's State of the Union remarks last night. The President, when he talked about addressing inflation, said that we need to control cost. Did you hear him say that?
I did not. I was too busy getting ready for this hearing. I did not watch.
I won't tell the President.
I probably just
when the President said he wants to control cost, or that businesses should control cost to address inflation, would you have any idea what he's talking about?
I really can't comment.
Fair enough. In follow-up to my questions from Congresswoman Wagner, she asked you about cyber. I know pre-pandemic, pre-invasion, one thing that you talked about that kept you up at night was a cyber attack. If Russia were to retaliate against the United States in some form of a cyber attack, what degree of confidence do you have in our nation's banks to thwart a cyber attack from Russia?
What I can tell you is that everything that we can do to protect ourselves against cyber, we're doing it. We're doing it. The private, large financial institutions are doing it. They have been for some time. So it's very hard to say what's possible to happen, but we're certainly on high alert, and we will continue to be.
Thank you very much. The gentleman's time has expired. The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Please. Thank you. Thank you very much, Chair Lady Waters, for your leadership in calling this hearing. Mr. Powell, first I want to say that at a time when we are still recovering economically from the COVID pandemic and we're facing challenges at home and now in Ukraine, I think and I feel deeply that the Fed should not be subjected to political stunts in the Senate with boycotts by the Republicans, and the Senate should consider the pending Fed board nominations as soon as possible. The Fed has an important job to do, and President Biden has put forward qualified nominees, and we need to get this done. So that's just my main point. With that said, as you and I have discussed in the past, the economic recovery has not been even, and we still have a ways to go to ensure our economy works for everyone. Just as one example, the Black unemployment rate remains at nearly 7%, which is more than double the white unemployment rate. And later today, the Select Subcommittee on Corona Crisis is having a hearing where we will be looking at the depth of the pandemic's impacts on child care providers and workers and the results that has on our families and our economies. So I want to ask you about the monetary policy report the Fed released on Friday. The Fed notes that the labor force participation rate remains well below estimates of its longer run trend as a result of retirement and people out of the labor force and engaged in caregiving activities. From both a macro perspective and a micro perspective, what does this drop in labor force participation mean for the U.S. economy, and what does it mean for those workers who leave the workforce to care for their children or family members?
Well, having a lower labor force participation rate now, it's about a little more than a percentage point lower than it was. It reflects a lot of retirements. And, what it means is that our labor force is smaller. That has consequences, including it's contributing to the labor shortage that we're seeing across industries all across the country. If we had a few more million people working, then we wouldn't be feeling that quite so much. It also means the potential output of the country is lower. Many of the people who are not in the labor force are retirees who have made a choice, but some of them are still people who want to come back but perhaps can't because of childcare activities or fear of COVID or other factors. In any case, it's been the decline in labor force participation that we've seen has been much larger than that of other comparable nations. And it was not something we expected, and it's certainly something that's now contributing to wage inflation and actual inflation and to the labor shortage that we're currently seeing.
Oh, thank you. It's been announced as a result of the Ukraine war and other disagreements that Russia and China are now moving to trade completely in their currency, no longer using the dollar. And Pakistan has flown in to meet with Russia. There's some talk that they may be part of it. What effect would that have on the U.S. economy if China and Russia no longer use the dollar in certain block trades around the world and with each other? What effect, if any, would it have on our economy?
Well, we do benefit from being the reserve currency for the main reserve currency for the world. And that really is because we have open capital accounts and the rule of law, and we have inflation, over a long period of time under control so that the dollar preserves its value. And so our markets are the most liquid, and it's the place where people want to be. Over time, the question is if some want to move away from the dollar, what will be the effect on us? I don't think it's something you would feel right away. Over time, they would have to create an economic ecosystem whereby another currency becomes, a better currency for them to use. What we can do is we can make the dollar the most attractive currency by continuing to have the rule of law and open capital accounts and make it an attractive place for people to invest and to use in their businesses. There wouldn't be any short-term effect of that. Over time, though, I suppose it would diminish our status as the reserve currency. It's also possible to have more than one large reserve currency, and there have been times when that was the case, and so it's not really clear.
Thank you. My time has expired. Thank you. I yield back, Madam Chair. Thank you.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair, and to continue several points that a number of my colleagues have raised. As Putin's aggression in Ukraine has continued to escalate, the U.S. and its allies have responded in a unified voice to condemn Russia and apply economic pressure. Chairman Powell, could you discuss the difficulty of predicting what the implications will be of locking Russia out of SWIFT?
So again, on sanctions, we're not the right folks to ask. We don't design them. We don't implement them. So it would be really a question for the administration.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing, concerns over palladium and neon and corn and wheat, shortages of those potentially. But so it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be, direct effects from these kind of things on the U.S. economy. It's hard to think what the second order effects might be.
Thank you. You've answered my question. As Congresswoman Wagner touched on, the price of oil has continued to climb during the past year to its highest level in more than 7 years. And we now see international banks appropriately shunning Russian oil, even without energy sanctions. Could you describe the range of different scenarios the Fed projections paint in regard to this? And along with that, how do you see this potentially impacting the already rampant inflation issues?
Well, it obviously the price of oil depends on events that haven't occurred yet. It really depends on where this goes going forward. We have seen prices move up, including just in the last couple of days, and they moved up quite substantially since, if you go back 3 months before this incident kind of began, prices are up quite a bit. The effects are going to be passed through into gas prices, into lower economic activity, and into inflation, headline inflation. And the larger the increase, the larger the effect. But the question then will become, that's a price level change. Is that going to lead to repeated inflation increases at that time? And that is not necessarily the case. And of course, we will use our tools to make sure that it's not the case.
And of course, representing the constituency I do, which is both oil and gas and production agriculture, we take very careful note of what those actions will affect, how they will affect world crude oil prices. And of course, the Ukraine being a very historic major grain producer, my wheat people also are prepared to step up and match that. But it all underscores, I suppose, the increase in energy production in the United States and supporting policies that will not penalize or drive capital away from domestic oil and gas production. That's more of an editorial on my part, Mr. Chairman, but I note that we stand ready in this country to replace resources that may not be available or affordable for the rest of the world, and we just need a little incentive and encouragement from this side of the room to utilize those things. So my last question in the time I have remaining, the economy is currently operating in what I think we'd all describe as, at the very least, massive economic uncertainty. And when you deal with this 40-year inflation and supply chain issues and the COVID-related issues, hopefully as we're in that final stage, can you elaborate on how critical it is for the health of the economic system to be reliable and to maintain liquid markets so we can navigate through all of whatever lies ahead of us?
Yes, so I would say our markets have been functioning well. There's a great deal of liquidity out there. We have now, between our swap lines and our repo facility for other foreign central banks and our standing repo facility in the Treasury market, we have institutionalized liquidity provision. And I think just the knowledge that that is there will help support good market function, which, despite all this volatility, we still have.
Thank you, Mr. Chairman. I yield back, Madam Chair.
Thank you. The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Chairwoman Water. Chairman Powell, thank you for being here today. Given what you said about the upcoming meeting in March and the illegal invasion of Ukraine, how is the Fed coordinating with other central banks around the world and accounting for their actions when considering adjustment to interest rate policy here at home?
So we're in ongoing contact, it's fair to say, with our major central bank colleagues. And actually, we have a meeting of all of them on Monday morning at 7, a virtual meeting at 7 a.m. on Monday. So it's something that we do regularly. That said, we conduct monetary policy to achieve, domestic objectives, specifically here in the United States, maximum employment and price stability, and that's what we use our tools for. But, it's, of course, the foreign events are very much top of mind right now, and it's enormously helpful to understand the perspectives, particularly of the Europeans who are so much closer physically to what's going on. So that's an important channel for us.
Thank you. And Chair Powell, last week, the Fed published its 2022 Small Business Credit Survey. Among other things, the report found that small business applicants that used online lenders for their financing needs reported more challenges with their lenders than did applicants at other sources. The top challenges faced by borrowers from online lenders were high interest rates and unfavorable repayment terms. Can you explain the report's finding and what it could mean for small businesses that utilize online lenders to satisfy their financing needs?
So if I recall that survey, it did raise some interesting questions, and our people looked at it and actually saw differences in data gathering. So it's not clear that the data in the two surveys was comparable, but I do think it raises interesting questions, and we'll come back to your office on that.
And it might raise interesting question where we, through legislation, could provide some relief and regulations so that small businesses are not shortchanged when it comes to the most important element for any small business, access to capital, affordable capital. Chair Powell, during public remarks last month, acting controller of the currency, Sue, stated that in the not too distant future, the OCC, Fed, and the FDIC will issue a joint notice of proposed rulemaking to update the Community Reinvestment Act. Does the Fed also believe a joint NPR is possible, and when do you expect it to be released?
Yes, we do. We think that will be ideal, and we're working very closely with the OCC and the FDIC and to come up with a consensus notice of proposed rulemaking reflecting all of the comments that we got on our advanced notice of proposed rulemaking. I think the timing is soon. I wouldn't want to put a specific date, but I know that we're going back and forth, and it feels like we're getting very close.
Right, thank you. And Chair Powell, a note published by a Credit Suisse strategist over the weekend warns that a decision to exclude certain Russian banks from the SWIFT system, which I support, could result in missed payments and giant overdraft with significant consequences for money markets, thereby forcing the Fed and other central banks to intervene to enhance liquidity to offset missed payments. Do you see this scenario as likely?
No, I don't see that as likely. Of course, we always appreciate looking at different risk scenarios. But again, given the relatively modest exposure that our banks have directly to Russia, and given the existing tools we have to provide liquidity, I don't see that as a likely outcome.
Okay, thank you. I yield back.
Thank you. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. Chairman Powell, thank you for taking time to not only join us today, but your insight into monetary policy. The Monetary Policy Report of February 25th, seemingly still hot off the press, brings about, I think, a good review of the Fed's analysis of where we are. And I know there's that temptation by members of Congress to hold you accountable for things which are not within your purview. But on page 3, you talk about special topics. Page 3 of your February 25th, 2022 monetary report. Special topics: low labor supply. Next, it goes to several other issues, then supply bottlenecks. As a member of Congress from Texas, both of these are highlighted to me on a daily basis as I receive feedback. This is inflationary also. We have taken a bit of time with you to probe with you your ideas that I think you have professionally handled on behalf of yourself and the Fed, the issues related to energy. But the bottom line is we can't get people back at work. We find that turns into a low labor supply, and then we've got bottlenecks. These are all hand in hand, glove in glove together, in my opinion. I took a few minutes just now to look at the labor unions and schools, teachers unions. But let's move to the federal government. Where is the federal government on their employees coming back to work now by OPM?
I don't know. We're an independent agency. I'll tell you where we are, which was we're in the middle of that process. Probably closer to the beginning than the middle.
I know you are, but you see, if they don't come to work, then others don't come to work. So I think your point and my point is well made. I believe that what we need is your robustness, not just your acumen in these issues, and your robustness within the administration to actually let them know that for this report monetary policy to be correct, that you believe inflation is a short-term, meaningful hindrance on our economy. They're going to have to make, meaning the White House, policy. They're going to have to understand what caused this. And I think that this administration, I think the Democratic Party, I think this Congress has made friends with inflation to encourage it. And that if your prognostication is going to come forth that we end this inflation, we're going to have serious changes. Because right now in Texas, which has been relatively open, I don't see relief on the horizon. And I think that this administration, this Congress has a lot to do with it. So without chastising you, I meant to help you. I would like for your voice in this administration and within halls of Congress, perhaps doors that are shut, for them to understand that they have actually made friends with and are continuing inflation, whether it be with teachers unions or whether it be with OPM. And we've got to get serious about getting people back to work, because as you tap down the amount of money that is put in the economy, as that moves, it's going to have to correspondingly have people that come to work, that pay taxes, that move the economy. GDP as a term we used earlier today. It's shifting this big, massive task. So you've almost got a whole 30 seconds left. But I'd like to, without defending yourself, to say to you, I'd like for your voice of reason, of prosperity, of future to come true as you would like. Did I ask you a question? Okay, I'm going to support you. I'm for you. How can we help you?
I do think honestly, we have the tools and we have to use them we will use them to get inflation under control. But to the extent we get help from the supply side, it'll make that job so much easier. It's about labor force supply. It's really about supply constraints and shortages and that kind of thing. It's also about exogenous events like a war, which will drive up the price of oil and gas, and that'll get into prices, certainly, and we'll make sure that it doesn't provoke a cycle of inflation.
This is what happens when you have to rely on other people for your food, cheese, and energy. Thank you very much, Mr. Chairman.
Thank you, Mr. Sessions. You can help Mr. Powell by asking your friends on the Senate side to confirm his appointment. The gentleman from Georgia, Mr. Scott, who is also the chair of the House Agriculture Committee, is now recognized for 5 minutes.
Chairman Powell, how are you?
Fine, thank you. How are you, Mr. Scott?
I want to sound the alarm here this morning. And I want you to listen to me, and I want the nation to, because I'm the chairman of our House Agriculture Committee. And I'm very worried about this turmoil over in Ukraine and Russia's violent, illegal, and criminal action that they're taking, and the impact that this has on global trade, and most importantly, our own food security. We could very well be on the verge of a hunger crisis all over this world. I want to share with you some research and the nation so we can understand what this Ukraine-Russia situation is causing. Today, Russia alone is producing more than 2/3 of the 20 million metric tons of fertilizer used to grow corn and wheat around the world. One country producing 66% of the fertilizer that is needed. And when you combine Ukraine and Russia, also, these are the two largest exporters of wheat, corn, and barley, producing a quarter of the world's wheat in these two countries, making this impact a crisis of soaring magnitude when you have this much, and these two countries are warring each other. So I want to sound the alarm on this. I want to ask you this question. I want to ask you, Chairman Powell, the disruptions and rising prices from these commodities will destabilize global food markets and threaten our food stability and social stability. So my question to you, Mr. Chairman Powell, to what extent could these developments create a financial stability risk here at home and abroad? And what must we do? We can go without a lot of things in this world, but the one thing we cannot go without is food. And when you have this much power on our food security for the world in the hands of these two countries warring each other at this time, what can you do about it?
So I think your point is very well taken, and I think it's shipping, it's corn, it's wheat, as you pointed out, it's fertilizer, and we see that getting into food prices and into the food supply just in these early days after the sanctions have been put in place in the war, less than 2 weeks old now. The Fed doesn't really have the tools to address this. This is really a matter for Congress and the administration, I think. But you're right to call attention to it, and I do think that this is understood and understood that that help will be needed here.
Well, I just want to say that we cannot allow the world to get into this desperate situation. So I'm giving this as sort of a Paul Revere moment here. I'm not saying the British are coming, but I'm saying the Russians are already at the door, and they could cause worldwide hunger. And I hope that free nations around the world can come together and realize that this is not just Ukraine's fight. It's our fight. And we have got to win this fight. And hopefully we can get more of our nations to come together and end this situation in Ukraine and Russia, before it causes truly a worldwide war.
Thank you very much. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Chairwoman Waters. Chair Powell, when your former deputy, Mr. Quarles, came before the committee last May, I pointed out to him that just a week before the April inflation rate had been reported at 4.2%, the highest since 2009. The rate in March 2021 had been only 2.6%. I asked him if we were paying the price for monetizing a huge federal debt, what the late Dr. Friedman and former Chair Bernanke both called helicopter money. Mr. Quarles told me that he didn't believe the Federal Reserve was monetizing the debt. Mr. Chair, looking back a year, does the Fed continue to deny that it has been monetizing the debt? And do you believe that you should have acted before now to rein in the inflation rather than let it now exceed 7.5%, the highest rate since 1992?
So I think by monetizing the debt, what that means is for the central bank to purchase the debt with the intention of holding it. And that's not the intention of here. We're about to start shrinking the balance sheet, and we will return the balance sheet to, a size relative to our economy that it was before. So also that is not at all our intention. We purchase longer-term securities in order to drive down longer-term interest rates to support economic activity. I'd also say that that's not really what we think of as the source of inflation. Admitting that inflation, proclaiming that inflation is far too high and that we are committed to using our tools to get it back down, it's really about very, very high demand, particularly in the goods sector, related to a spending shift that happened in the pandemic, and supply constraints that we didn't foresee. International supply chains, labor constraints, low labor force participation, right across the economy. It's a very different kind of inflation story than we've had in the past, but it's one that we have to deal with, and we will deal with it.
Chair Howard, when you appeared before this committee in March of last year, and I asked you to clarify the purpose of the Federal Reserve collecting data and employing stress tests related to climate change, you assured us that the Federal Reserve would be collecting the information to help financial institutions learn about climate risk and wouldn't be using the information for regulatory purposes. In recent weeks, considerable controversy has emerged in the confirmation process to fill 4 vacant seats on the Federal Reserve Board. One of the nominees has a record of advocating for aggressive Federal Reserve regulation related to climate change, including actions that would regulate capital allocation away from fossil fuels. I won't ask you to comment on the confirmation process, but can you continue to assure us that the climate data and stress test proposed by the Federal Reserve will be used for regulatory purposes and driving investment away from traditional energy sources here?
We call them climate stress scenarios, and we haven't, we're actually just building the capability to do this. And the idea is not to use them the way that we use the traditional stress tests to set capital levels, in effect. The idea is more to allow financial institutions and also regulators to understand better, the extent to which and the ways in which climate financial risks has any implications for the banks. That's the purpose of it. I'll add, though, that it is not our job to tell, we don't think, to tell banks which legal companies they can and can't lend to, and I don't see that as an appropriate role for us.
I'm really glad to hear that. So that's an absolute, unequivocal, guaranteed answer that the data will not be used for regulatory purposes in any way whatsoever.
I can just say that, first of all, we're not even doing the tests yet, or scenarios yet. But certainly that's not going to be their construct. The construct will be what I said, which is to help us understand better, not to set capital or otherwise put further regulatory requirements on.
Thank you so very much. I deeply, deeply appreciate that, and I yield back. Thank you.
Thank you very much. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Good morning, Mr. Powell. How are you?
Fine, how are you?
I'm good. And I just want to thank you. You've been getting picked on inflation, but I'd like to start with chart 1 of your book. I always ask about your charts because I love them. And chart 1 shows a tremendous growth in employment, as does chart 2 shows a tremendous drop in unemployment, the converse of it. And it's like dropped from about 14% to 4%. Do you think that the Fed's monetary policy helped in reducing the unemployment rate?
Yes, for sure.
Okay. And, 2 years ago, we were going into a pandemic. You and I had a conversation about the potential for a worldwide recession of a magnitude we'd never seen. Did we hit that? Did we get that recession?
No, we didn't.
And you may recall, I'm a bankruptcy lawyer. So I look at things kind of with the pessimist eye. I expected many bankruptcies. Did we have those? Did we have the bankruptcies that we thought we might get?
We sure didn't.
Okay. Do you have any idea how much the gross domestic product has grown in the last year?
I want to say 5-point-something%.
Well, it's actually more than that. And one of your charts has that, I think it's on page 23, chart 14. It went from 2020 to now, it went from less than 17.5 trillion up to 20 trillion. So it's substantial, about 15%. Now, I don't think it's that much, but it's substantial. Did we expect that when we went into COVID?
You mean since the trough? Yeah.
Yeah.
I was just giving you the last year. So, as you know, we were looking at some really bad scenarios and hoping they wouldn't happen in the first half of 2020.
Now, the Fed took some pretty dramatic actions, as did central banks around the world, did it not?
Yes.
And Congress, led by the Democrats, took some pretty substantial and dramatic steps, including the CARES Act, the American Rescue Plan, the infrastructure.
All right, ladies and gentlemen, this is the Stock Market Live here with LCAOD, and we are in Euro close, about 8 minutes into it. So the European market is
the median wage growth found in chart C on page 12, and the change in the price index for personal consumption on the next page, found on page 13, diagram 8. According to your chart on page 12, the bottom quarter of wage earners have had their wages increase by almost 9%. Do you see that?
Yes.
And the next quarter, by 6.5%, 7%. Do you see that?
Yes, I do.
Okay, and then you look over to the next page, and we're running, I think you said it, about 5.5% inflation. So wage earners in the bottom half are making more money than they are potentially, if I do the math, they're making anywhere 8-9% against a 5% increase in cost. Now, it's not apples to apples, but wages are going up, are they not?
So wages at the bottom, in the bottom quartile, have gone up in real terms. I do not think that's true for the second, third, and fourth quartiles, but it is true for the bottom quartile that their wages, nominal wages, have gone up more than inflation.
Okay. So last question. When You and I spoke at the beginning of this year, and my time has expired. I'll ask it to you later on. And I thank you for your service, sir. I thank you for keeping us out of a recession. I think we built a better America by staying out of the recession. I yield back.
Thank you so much. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. Thank you, Chairman Powell, for coming here. And I also appreciate your book and the work. And frankly, just yet again, want to highlight the really heroic work that the Federal Reserve did to create stable markets, particularly in March and April of 2020. Since then, of course, there have been a lot of economic distortions, one of which is the ongoing inability of the Federal Reserve to stabilize its own balance sheet, which is now over $9 trillion. I appreciate Mr. Perlmutter highlighting some of the good news. And frankly, I'm positive that he has previously operated a lemonade stand because he can always turn something good out of the lemons. So there's no good news, but the concern is that in the long term, this has come at the expense of sound money. And so just over a year ago, I talked to you about sound money, and as the US dollar represents sound money, because many of us anticipated that inflation was not transitory and that the quantity theory of money might have some impact on inflation. So in light of the fact that we have seen substantial change in the rate of inflation now versus what was showing up then but was anticipated, do you still think that the US dollar is sound money? And either way, what are the threats to the US dollar as sound money?
The US dollar is sound money, yes. The threats to the US dollar as the reserve currency really in the near term are to displace the US dollar as the reserve currency, if that's your question. You'd need to be a very attractive place to hold large amounts of reserves.
It's really different than that because we are probably still going to be the reserve currency since the world grades on a curve. And frankly, the planet's never had this much debt since World War II. So all of the countries around the world did similar things. The discipline of the Bretton Woods era was gold. I don't know that there's magic just in gold, but there is magic in discipline. So if you look at sound money being defined by a stable store of value, an efficient means of exchange, and a trusted record of an account, you've at least taken some dings on store of value. And so as you've seen people decide to filter transactions and develop technology and regulatory frameworks that are intended to be able to filter transactions, it's not as trusted or efficient as a means of exchange or a record of account. And so those kinds of things, not so much do we do okay on the curve, but is it truly sound?
I'm not sure I followed the last part, but I do think that, look, inflation is indisputably too high. We are using our tools to bring inflation back down to levels of price stability, and we will accomplish that task. Longer term, the U.S. dollar is easily the best currency, and it's because of what I just said. It's also because of the rule of law, and the fact that we're the incumbent, and we as long as we observe the rule of law and keep the dollar relatively, keep inflation low and predictable, that will remain the reserve currency.
Yeah, okay. So thank you, Chairman. And look, historically, there have been multiple reserve currencies, and generally, when something loses its status as a reserve currency, it's not just because of other things that unfold, but it's because the value is debased. And we can come up with fancy words like modern monetary theory or quantitative easing or, similar to quantitative easing, but not really the same. When the Federal Reserve's balance sheet's growing, in a way it represents the Fed as the lender of last resort. We're not constrained by the taxes we collect. We're not even constrained by the amount of money the world will lend us. We're constrained only by the will of Congress to not spend more. And what are you going to do? Not cover the spending, the prolific spending by Congress. So moving on, just talking about, the Fed's role, of course, stable prices is really one component. The other is full employment. And I wonder if you think, in light of Mr. Perlmutter's reference to chart 2, if chart 4, which is the labor force participation rate, trends the right way. And as you link to the next thing, as a regulator, there's a lot of pressure for you to do ESG. What can the Fed do, and what does Congress need to do to strike those balances?
With relative to ESG?
And full employment.
Well, full employment, I think most members of the FOMC now think we are at labor market conditions that are consistent with maximum employment.
With 60% labor force participation, 62?
I mean, the maximum employment can never be higher than the level that's consistent with price stability.
The gentleman's time has
I think
expired.
we're at that level.
Thank you.
At least.
The gentleman from Illinois, Mr. Foster, who is also the chair of the task force on artificial intelligence, is now recognized for 5 minutes.
Thank you, Madam Chair. And I'd like to add to Representative Perlmutter's list of your triumphs, the record level of small business formation. And so I think that when you try to preserve the very strong economic recovery, I realize you have a dual mandate, but keep an eye on that one too. It's one of the most important successes we don't talk about enough. Do you remember the misery index?
I do.
Yeah, and so that when unemployment drops from 14% to 4%, so drop by about 10%, and then the inflation goes from 2% to 7%, so up by 5%. Does that mean the misery index is increased or decreased?
It would be decreased.
So thank you for that. Now you actually mentioned repeatedly that the inflation problem was largely one of goods. And not so much one of demand or and also of labor shortage. And so can you make any rough estimate of what fraction of the inflation we're seeing was due to sort of those three effects?
So I should be clear, inflation is also too high in the service sector. I wouldn't want to oversell that, but the real big change has been in goods, which had negative inflation or close to zero inflation for 25 years. I don't have off the top of my head the ability to just tell you what the contribution of that is, but it's big, and it's a significant part of it. It's a lot of it also is energy, which is not
obviously a worldwide problem.
Yeah,
and so that this is if you could get back to something a little more quantitative from your staff on that, I'd just be
Glad to do
interested in knowing your estimate. Now, in terms of the labor shortage. Back in the days when we had a different Senate, they passed comprehensive immigration reform that was then, of course, blocked by Republicans. And many studies at the time indicated it would be a huge positive for our economy to pass comprehensive immigration reform. And that was at a time which didn't have an extraordinarily tight labor market. Is there anything you can think of that would invalidate those studies that showed that comprehensive immigration reform in both the low skill and the high skill sectors would be a huge plus if
I can answer that this way, if you look back at the trend, let's say 5 years ago in that range of immigration, legal immigration, people coming in, and look where we are now. We're now several million people, many of whom would be in the workforce short of that. So lower immigration is definitely part of the story of the labor shortage. But that's what I would say.
So is there anything quantitative you can say about the timescale for unwinding the balance sheet? Do you think of this in terms of a fixed timescale that we want to go back to normal in the next 2 years, 3 years, or do you say we're going to take it down by 1%? 1% a month, or are you anticipate some sort of feedback loop where we look at the taper tantrums or the equivalent and sort of adjust it as you go?
So the way we did it last time is we set a cap on the amount that will run off, and anything above that gets reinvested for both MBS, mortgage-backed securities, and for treasuries. We haven't had that discussion at the committee. We will have it in 2 weeks, but I guess it takes. It turns out that the level of the cap doesn't really matter that much for how long it takes. Something in the range of 3 years to get back to where you're trying to get to. And the way we define that, what is the end? The end. We look at the size of the economy, the size of the banking system, and we ask, what's the level of reserves that we'll need at that point? And so we we set a, a course for that place, and then as we start to get close to it, we might slow down a little bit, like as though it were an airplane. And that's the way it will work. But I think something in the range of 3 years to get back to what the balance sheet needs to be, which is basically reflective of the public's demand for our liabilities plus a buffer, and what we call ample reserves.
Yeah. Do you have an estimate for how many hours of your life have been spent attempting to explain the difference between quantitative easing and monetizing the debt to members of Congress?
No, sir.
Okay. All right. Now, one of the most valuable functions of the Fed is to provide the emergency assistance to the financial systems of the free world. And you mentioned that you stood ready. Are there specific things you're worried about in Eastern Europe where the economies are more tightly tied to Russia, where you may really have to step in and get involved? Any specific worries?
What we're watching is sort of the global markets and the dollar funding market, and we're seeing markets that are functioning, and of course we have tools and we have things in place to deal with stresses should they emerge. That's really what we're doing, and as I mentioned, markets are functioning, so we haven't had to deploy any of those tools.
Thank you, and my time's up. I yield back.
Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair, and welcome, Chairman Powell. Good to see you again. We're in the middle right here of a really disastrous situation with Ukraine, and part of the approach to corralling the Russian advance there is on the financial side. And it would appear to me that we probably didn't do this as quickly as we should have. Didn't look to me like we had a plan. If we really wanted to get involved financially, we should have been sitting here saying when they move the 1st battalion or regiment or wherever amount of troops you want to talk about on the border, we should have said something, well, okay, if you move another one there, we're going to start doing things to you. And we didn't do that until they started to invade. And now all of a sudden we're playing catch up. So that begs the question, we know that China is watching all of these actions very, very carefully. They're looking at what Russia does, how we react, what we do, how the rest of the world reacts, what they do. So to me, we need to be sitting here as a country, as the Fed, as congressional individuals saying, we need to be ready for the Chinese when they invade Taiwan, because I see no reason why they will not do that shortly. So if we don't prepare for that, shame on us. So my question to you is, are you beginning to think about what kind of actions you would take, or support, or suggest to the administration should China take over Taiwan or attempt to do this? Because this is going to be a completely different scenario because of the size of China, the size of the military, the size of Taiwan versus getting into Eastern Europe. So that's kind of a large question, but can you like to jump into it?
Sure. So, those questions are really questions that are dealt with at the National Security Council and the Defense Department and the intelligence agencies and the Treasury Department. We're interested students of all that, and we have our technical expertise that we can contribute, but honestly, we're not,
Well, Mr. Chairman, now, I listened to you very carefully a while ago, and you made the comment that you're looking at making policy for anticipated situations in the coming months with regards to a number of things. What happens with the economy, what happens with inflation. And so if you're not doing that, I understand you may not want to tell me today because that would be helping the Chinese who are probably watching this right now. I understand that. But just a sort of wink and nod to say, yeah, we're looking at that would certainly be nice because it would give us a level of comfort to know that we're not going to be, behind the eight ball again.
Well, as I also mentioned, we do model alternative scenarios of various kinds, and we, in fact, with every Teal book, which is our document that we use at the FOMC, we run half a dozen of them in great detail, and people study those, and it helps them think about alternatives. So I'll just leave it at that, if I could.
Okay, thank you. I'll let you off the hook on that one. With regards to inflation, we've talked about it significantly here today, and I think sometimes that you're giving way too much credit for it and getting way too much criticism for it. I think that there are a lot of things that are outside your control that happen that basically affect inflation that you have to react to. You don't make monetary policy from the administration side. You don't make legislative policy from the legislative side, and yet you have to react to all those things. So I had an economist, I'm the ranking on small business, had economists come in to talk to our committee the other day. And I asked him to break down the different causes of inflation. And I said, well, let me identify at least what I think are 4 significant causes. One is money supply, the amount of money is pumped in, either through Fed actions or through our actions as Congress, regulations, supply chain / workforce situations, and energy. And he broke it down like this, and he had some charts, and he started going off, and I said, just give me the percentages. And so it's roughly 40% due to money supply, the money that goes in as a result of Fed actions or congressional actions, 20% regulations, 20% supply chain, and 20% energy. So if you look at that, I know Mr. Foster while ago was looking for some answers, so hopefully I've helped him with this question. If you look at that, basically you don't have a lot of control over regulations, you don't have a lot of control over supply chain, and no control over energy policy. And money supply, if the Congress gets involved and passes these massive bills and throws a lot of money in there, you haven't control of that either. So the amount of control over this is probably in the neighborhood of 20 to 40% at best. So, you know, my concern is that when you say that you're trying to help things with inflation, it really goes back to the administration and to us as Congress. You know, the administration, first thing they did was stop the pipeline, stop oil drilling, and prices went up. And so that right there is 20%. So it's important, I think, that we understand that. I'd like for you to comment, if you would, just for a second. I'm running out of time. If you'd like to comment.
Sure. Yeah, interesting breakdown. We can continue this discussion. We would have a little different assessment. I would just say, though, we welcome, this is a lot about supply side issues, and we welcome any help we can get on that, and we're looking for help from improved supply side.
Okay.
Thank you very much. The gentleman's time has expired. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Douglas Wilson.
Thank you, Madam Chair, and Chairman Powell. Welcome to the committee. Before I ask my question or statement, they say one of the benefits of inflation is that you can live in a more expensive neighborhood without moving. And so I thought that was very interesting.
That's a good one.
Statement I had seen, and I thought I would bring it to your attention. According to the recent analysis of branch closures by the National Community Reinvestment Coalition between 2017 and 2021, banks have closed as many as 7,000 branches across this country, 1/3 of which was in low-income and moderate-income communities, neighborhoods of color. To what extent is the Fed considering these banks as in contemplating which reform to implement and strengthen the Community Reinvestment Act and the importance that banks' branches play for nearby communities?
So I do think that's a focus of the CRA, and also of the focus that we want to strengthen in our proposal that's out for comment. Actually, it's now, we've had the comments and we're getting ready to put a notice of proposed rulemaking out. But we do understand the importance of presence in the community and service to the community, and those things do go into our CRA assessments.
Okay. Mr. Powell, according to the latest forecast from Goldman Sachs and the Federal Reserve, which raised interest rate more than expected this year due to high inflation and labor market approaching full employment, can you speak more on this? Should we expect the Fed to raise interest rate at all? Several remaining pilot meeting this year, and should we expect the Fed's main rates to be by the end of this year?
So yes, so the inflation is running well above our target. The labor market is extremely tight. The economy is growing strongly, and our policy rate, we do expect to move our policy rate up in a series of rate increases this year, away from the very low setting that we put into place during the acute phase of the pandemic, and to a more appropriate level, given the fast recovery and the strong recovery that the economy has had, given the fact that inflation is running so far above our target. We do expect that that will be appropriate. We've communicated that transparently and clearly, and markets have accepted it. And it is our plan to return to price stability while also supporting a continued expansion.
Okay, and I want to make sure that I understood the statement that was made earlier. And I know you had the opportunity to observe other inflations that we've had. With wages going up, as they say, and the bottom half are making more in earning, do you consider that we are in a better situation to deal with inflation that we have now compared to inflation in the past?
I think that this inflation is substantially higher than anything we've seen since I was in college, 50 years ago. So this is strong, high inflation, and it's very important that we get on top of it, and that's exactly what we're going to do. I would say this: the labor market is extremely strong. So from that standpoint, I do think we're in a good place. From the standpoint of trying to get inflation under control, workers are still going to be getting good jobs and pay increases for some time, so the economy is strong, and that means the economy can take the rate increases that we're going to be making. Ultimately, we need to get demand and supply back in alignment so that we can get inflation back to a more appropriate level.
Okay, thank you, sir. And with that, I yield back, Madam Chair.
The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair, and Chair Powell. I appreciate this opportunity. I'm actually going to pick up on what my colleague from Florida was just talking about and add that to what my colleague from Missouri next to me here was talking about. And I'm gonna, you may have said that the 40-20-20-20 ratio that came from Douglas Holtz-Aiken, breaking that down, about 40% of inflation being tied to monetary policy and spending, 20% to regs, 20% energy policy, 20% supply chain. You might disagree with that, is what you had said, but do you believe that spending has contributed to the situation of high inflation that we are in?
Okay, thank you.
So I may have misunderstood what your colleague said.
Madam Chair, I ask that you suspend. I think Mr. Lawson has his microphone on yet, and we're getting a little crosstalk. So if we can maybe add a few seconds back here.
Okay, is the gentleman muted now?
No, clearly is not.
I think you can resume.
Okay, I'm just like to would ask that you have a light gavel at the end of my time here. I think we were having a little crosstalk as we go back on that.
So I may have misunderstood. I thought that the 40% was money supply, but you made it sound more like a monetary policy. And so I would look, we can discuss those numbers, but that makes more sense to me.
Point being, has spending contributed to inflation?
Yes, I think a number of factors have, including policy.
And I would agree with that. And frankly, many of us have sort of warned or talked about this situation. We have record debt right now, previously without conflict. Now, war and rumors of war that we hope aren't going to happen may even increase that debt. And I'm afraid that our spending habits are putting you and all policy decision makers in an even tighter box. Look, we all know that inflation is real. It's hitting, whether it's gas, $3.79 versus $2.74 a year ago, groceries, you name it, housing. And when you were here in July, I talked about the housing situation. My family's in construction and what that means. And we can't just magically wave a wand and say, oh, we're going to lower prices. That just simply isn't realistic. But what I heard last night is that the president is acknowledging people are living paycheck to paycheck, and he understands that. Yet the message I keep hearing from the president and my friends on the other side of the aisle is we need to spend even more. And I'm concerned that is going to put us again into an even tighter box than we currently are. If you care to touch on that before I move on.
I should stay away from fiscal policy if you don't.
Well, and look, I'm not asking whether you support a particular bill or not. Theoretically, we're your classroom. America's your classroom as they're watching this right now. Spending is a contributing factor to inflation, correct?
It is, but it's not really our job and not ours to comment on. We do have
I
a role
understand
here,
that.
and we need to do it.
Fully understand that. I just the facts. That's all right. So I'm going to move on to another issue, which is rules-based approach to monetary policy. In the 114th Congress, I think it was in 2015, I introduced the FORM Act, which would lay out a rules-based monetary policy, and I know in your testimony today indicated that a rate increase is expected, and you confirmed that with the ranking member. So what I'm curious though is, since 2017, the Fed's monetary policy report included a section on monetary policy rules, and you've been very clear, and now Secretary Yellen has been clear that a lot of rules are modeled and looked at. The only exception to this was 2020, the first year of the pandemic, and maybe more surprisingly, a report that was just released this month. For example, in 2017, monetary policy rule section of the report stated, quote, monetary policymakers consider a wide range of information on current economic conditions. It's not included in this report. Can you shed some light on why it was omitted this year?
I honestly didn't know if that was the case, or if someone talked to me about this before the thing was printed and sent up here. I don't remember it. That's also a real possibility given the number of things I have on my mind right now. But as you say, we didn't have it in July of 20. We'll have it in the next one. I don't think there was no big thought, as far as I know, going into that. It's just sometimes we include it, sometimes we don't. I will say that I think thinking about policy through rules is something that I learned a lot about monetary policy doing that. When you're actually implementing policy, no committee has ever really used policy rules as a way of setting policy, but they use them to inform your thinking.
Yes, and I guess my idea with the FORM Act was to then inform the market, and that includes us as citizens as well. And I'd like this committee to re-examine that. So I appreciate the indulgence, Madam Chair, as we had that crosstalk at the beginning, and I yield back.
Thank you. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Chair Pro Tem Powell. I'm always struck that there's a real risk of hubris for those of us in our line of work, at least up here. If we get to write laws, sometimes we conclude that means we can write the laws of physics as well, which is dangerous. And I am troubled by some of the questioning of my colleagues and, some of the debates around confirmation of your colleagues around climate change. The IPCC report that came out last week said climate change effects are outpacing our ability to adapt. We're seeing communities that sort of simultaneously have droughts, floods, and fires, and money is moving in surprising ways. I've seen stories just in the last month of one coastal community where the roads are being washed out that haven't yet paid off the bonds that were used to pay for the road, and they don't know how to reconnect those communities. Another community on the coast where the mayor is sitting there realizing that one neighborhood he can afford to build a seawall, and in another neighborhood it's cheaper to relocate people, and dealing with the political fallout of that decision. We have massive political risks that are coming, and we know they are coming because the laws of physics do not care how we vote. And I'm concerned by your response to Mr. Posey when you said that we've not even done the scenarios yet, excuse me, on the climate change. And I understand these are complicated, but if those scenarios haven't been done, I want to start, if we don't deal with the financial fallout, the political fallout's going to be far worse. And so I just want to start with a very specific question. NOAA and NASA came out with a report, I think last week or 2 weeks ago,
saying that Florida is looking at 12 inches of sea level rise in the next 10 to 20 years and 18 inches by 2050. That means that there are whole communities in Florida where there's going to be complete property loss before a 30-year mortgage is repaid. It was issued today. Are Fannie and Freddie changing their lending standards in response to those risks in those communities in Florida and elsewhere that are now within 30 years of being unable to repay those notes?
I don't know.
I asked the question there because in the CFTC report, Managing Climate Risk in the Financial Sector, came out about 2 years ago. They noted that the higher an area risk for coastal flooding, the more likely the commercial banks are to be offloading their risks onto Fannie and Freddie. And so if the sophisticated players in the system are seeing this risk and we are at a federal level are backstopping, how are we isolating our federal balance sheet from that risk exposure?
I think that's a very likely outcome, actually. I think as private lenders will move away from that, and will the government force people to move away from the coast, or will they wind up picking, government, that's us, wind up picking up the tab? More likely the latter, it seems to me.
So moving away from the offloading risk onto the taxpayer, back when I was in the energy industry, one of the tells that we had that we knew there was a downturn coming in energy markets was when the big banks started creating Special Opportunity Fund 5. You know, and we all knew that was code for taking your Dodd-Frank compliance debt capital, moving it into an equity pool, and selling it off to the least sophisticated people in the equity space. We all know, anybody who spent time in the banking industry has seen that game. To what degree does the Fed or the Treasury have the ability to monitor where the sophisticated folks who are seeing this coming are shifting the risk off to the less sophisticated folks in the private sector?
You know, there's a lot of thinking going on about this. I'd have to think about that. But there's a lot of thinking about what will happen over longer periods of time in coastal areas and things like that. I can look into that.
Well, and it's not just coastal, right? I mean, it's California fire risk. Do you rebuild that house where the fire is, and who's holding the paper, if it burns the second time before it's paid off? It's drought risk in communities, running away, the capital movements. And to be clear, like, we are going to create so much wealth in the transition to a clean economy that I think we can find more winners than losers if we're smart about this. But there's this huge capital flight, and the nervousness I get is, as I said, partly that we're shifting risk onto the public sector, and partly that if we don't have a real good understanding of what the capital structure looks like in these communities, we're not seeing it. As you know, Senator Schatz and I have introduced this bill to push and encourage, you and your colleagues to do these climate, whatever we're talking about, scenario analyses. But we know the sophisticated people are going to offload the risk. And as the IPCC report said, the effects are outpacing our ability to adapt, and we need to get ahead of this much quicker.
I would want you to know we are working on the scenarios. It's just, it's an active effort on our part.
Well, let us know how we can help you. Make sure you have the resources to move a lot quicker. Thank you, and I yield back.
Thank you. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Good to see you again, and thank you for your testimony today. I appreciate your testimony that overspending has contributed to the inflation crisis we're facing right now, but I also appreciate your humility with respect to the Fed failing to meet its price stability mandate, and the fact that you admit that inflation is primarily a monetary policy phenomenon. So I want to focus on monetary policy in my questioning, and I know you understand that this has human costs. I want to share a couple of anecdotes from my district. A painter, Gerald Holland from Nicholasville, Kentucky, says a gallon of paint costs $10 more today than a year ago. The Suppaletta family from Georgetown, Kentucky, they've been in the retail home furnishing business since the late 1940s. In a conversation last week, they informed me that in the last year, the cost of goods from their manufacturers have increased 30 to 40%, and they're still receiving price increase letters every week. And like most small businesses, their cost of labor and overhead have gone up over 25%. So now they are having to determine how to operate without passing those costs on to the end consumer and still have some profits left at the end of the year. I could share dozens, as many of my colleagues could share dozens of these kinds of stories, including from constituents on fixed incomes who cannot afford the dramatic reduction in their purchasing power. Before November 2021, Chairman Powell, when you declared it was time to retire the word transitory in relation to inflation, my colleagues and I repeatedly in these hearings last year, after the $2 trillion spending bill, we cautioned you that inflation wasn't transitory, that we were hearing from our constituents, individuals and small businesses, that inflation was hitting them hard and was sticky. But the FOMC kept up with the unconventional monetary policy. And even after you retired the word transitory, as late as February 2022, the Fed was continuing its QE liquidity injections, even though inflation was at a 7.5% 40-year high, and the Fed had rejected an immediately halt to QE at both its December and January policy meetings. This week, economist Mohamed El-Arian published an op-ed in which he states that the Fed's insistence that inflation was transitory is, quote, an error that will likely be remembered as one of its biggest ever. And pardon me for contributing to your humility on that. But my question is, has the FOMC learned from its mistake? Has it learned that unconventional monetary policy at a time when it's not needed is harmful for the economy? Has it learned that QE during a time of recovery is a recipe for inflation? And has it learned that we cannot print our way to prosperity?
Well, I think the main thing we've learned is that the supply side constraints that we saw were not as transitory as we had hoped and thought. And as I mentioned, every other mainstream economists and central banks around the world made the same mistake. That doesn't excuse it, but we thought that these things would be resolved long ago.
Does the FOMC, do you and your colleagues concede now, in hindsight, that the overly accommodated monetary stance for too long was a mistake, a monetary policy mistake?
So I'll just answer for myself. That's for other people to assess. I would say that we had an expectation, and as I said earlier, I thought that always thought there was a chance we'd be wrong, and that if we were wrong, we'd be able to pivot. And we did pivot, and we pivoted pretty quickly, but by then the economy really was moving very, very fast.
On the pivot, how quickly do you expect a higher Fed funds rate, removing the accommodation, to bring down inflation, and how does that affect the pace at which you will tighten?
Well, I expect, as I mentioned, the Fed funds rate to go up in 2 weeks, and I expect a series of rate increases this year. But as I mentioned earlier, given the current situation, we're going to move, carefully.
But my concern is that to break this inflation fever now, you don't have a lot of good options. It's going to take some aggressive tightening in order to break a historically high inflation level. So, but not to belabor the point, just real quick, final time on the climate stress testing. Last year, in response to my questions about the Fed's decisions to join the Network for Greening the Financial System, you affirmed that the Fed's job was not to combat climate change. But in your confirmation hearing, you said that, quote, we are looking at climate stress tests. This will be a key tool going forward. To clarify, what is it? Is it that you will not use this, as Mr. Posey asked you, to support capital surcharges for banks serving fossil energy companies?
That's not the design or intent of the stress scenarios that we're working on right now. It is really to assist us and financial institutions who are doing these things themselves very actively, the larger ones, to understand the risk.
Well, my time has expired, but as we look at an global energy crisis with the Ukraine invasion,
Gentleman's time has
critically
expired.
important we don't redirect capital.
The gentleman from Massachusetts, Mr. Lynch, who is also the chair of the task force on financial technology, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Chair Powell, for your service and your great work. I do want to ask you a question about the SWIFT network. And I realize that the sanctions piece of this is owned by Treasury, but I'm curious if in any of your risk analyses, you've looked at the possibility that if we did completely ban Russian banks from use of the SWIFT network, and it became a target of the Russian cyber forces, have we basically gamed that out, how that might happen, and do we feel comfortable that that structurally and architecturally, that SWIFT network would be able to resist a state-sponsored assault on that messaging service?
I'm sorry, Mr. Lynch. I'm really not the right person to answer that question. That's really a question that our Treasury Department or and our administration more broadly and the intelligence groups would be able to address.
I'm a little surprised at that because earlier in your question you talked about cybersecurity and how that was in your lane in part, but I'll let that go. You did mention the recent Fed report on CBDC, and in that report, it more or less pushed responsibility back to Congress to resolve some of the major issues around the creation of a Fed CBDC, and I know that we have a working group at MIT and the Boston Fed that are doing great work on this. It started under Chairman Gensler, but now I believe Neha Narula is running that effort. In all honesty, I'm not sure that Congress is equipped by itself to make those key decisions around architecture and the shape and form of any CBDC for the United States. And I think we are relying on yourselves at the Fed and Treasury to help us. And so I was hoping for a little bit more instruction with the Fed paper. And is there any way we could collaborate rather than pushing the responsibility on Congress with all the other issues we've got to deal with, and also with the disparities in background in dealing with CBDC and those crypto issues?
So let me address that. So what the great people in Boston are doing is really technical experimentation around how you would build a CBDC if you were going to do one, looking at different structures and options and technologies. And so that's separate from the policy questions of whether we should do this. So what we're thinking of how we're thinking of this is there's technical experimentation, there's all the technology questions that have to be solved. There are also the policy questions of should we do this and why and how and what should be the structure and that kind of thing. So we'll be working on this project in coming years, and we hope building trust in Congress and in the public that we're doing it as a fair, honest, independent group who really is just looking out for the best interests of the country and of our citizens, and we'll be making recommendations on the appropriate structure if we do come to make a recommendation. The point is though that we our existing statute doesn't really contemplate a central bank digital currency, so we would need, ideally, we would get legislation that would be authorizing legislation, and we would take part in it. It's not that we'd be asking Congress to start this from scratch and figure out all the answers. We would be working with you to build trust in our process and ultimately come to you with a proposal, and then Congress would work its do its work and authorize.
Thank you, but Mr. Chairman, the concern is that the architecture and the security of the system will guide policy. So I believe we need to work together. Thank you, Madam Chair. I get back.
No, I would agree.
Thank you. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Powell, for being here. It's always good to have you come before the committee. There hasn't been a Federal Reserve Chairman since Paul Volcker in the 80s that has dealt with inflation at these levels that we talk about today. And historically, the Fed has been unable to reduce prices without sending our economy into a recession. And to further complicate the situation, the central bank has previously never had to deal with winding down such aggressive asset purchases to go along with increasing interest rates. You are going to have to take action on both of these pressing issues with the backdrop of what we see in Ukraine, between the Russians and Ukraine, and the general global instability that we have. So needless to say, you have a very tough job ahead of you. So, Chairman, how do you plan on getting inflation under control without completely hampering growth or worse, causing the economy to go into a recession?
Right now, we're split it in three ways.
So that is exactly our objective. We're going to use our tools. We're going to raise our interest rates, and we're going to shrink our balance sheet over the course of this year. As I mentioned, during this critical phase of global events, we're going to do that with care, and we'll always move with care, but particularly now. And that's how it works. We remove accommodation, and the very high levels of demand that are to some extent a result of our accommodative policy. Those rates will go up. And take housing, for example. The housing market should cool off. It's very, very hot right now, and that should happen broadly in the economy over time. We talk about getting to neutral, which is a neutral rate, which would be somewhere between 2 and 2.5%. It may well be that we need to go higher than that. We just don't know. And we don't know what events will intervene in the meantime. But, we haven't faced this challenge in a long time, but we all know the history and we all know what we need to do. I also do think, and I think it's more likely than not, that we can achieve what we call a soft landing, and they're far more common in our history than is generally understood, and that would be what you described, which is get inflation back under control without a recession.
Well, some of us in this room remember the 80s.
Sorry? Yeah.
Some of us in this room remember the 80s and what it was like. We know that there is a lag period between the Federal Reserve's actions, and the inflammatory implications being felt in the economy. The San Francisco Fed, which we've mentioned today, admits that this latency period could last anywhere from 3 months to 3 years. And for families and business owners like myself, 3 years would be an extremely long time to deal with prices in these elevated levels. So, Mr. Chairman, when the Fed eventually decides to raise interest rates, what tools will you have at your disposal to ensure your actions are felt with as little a delay as possible, so we can once again have price stability like we talked about?
In this world that we live in now, when we make a decision about interest rates, or frankly even talk about a decision to raise interest rates, markets pick it up like that. Financial conditions have already tightened. We haven't actually lifted off from zero, but as of a week ago, the market was pricing in, literally already reflected in financial conditions to some extent, 6 or 7 rate increases. Now, it's less than that now, and we haven't made decisions to do that yet, but our decisions get into financial conditions very quickly. It does take time, of course, for that to affect economic activity, and that's where you get 3 months to longer than that. I think by the end of a year, much of the effect is generally thought to be in. So, but that time period has already started because monetary policy really works through expectations, and we're now expecting rate increases, and they've already happened in effect, and we have to ratify them, of course.
Yeah, we're seeing them. Finally, in the past year, you have referenced productivity gains as being key to increase the living standards for American workers over time. Unfortunately, we've seen the Biden administration implement many new time-consuming regulations that are forcing businesses, again, like mine and others, away from productive activities. The American Action Forum conducted a study that estimated that new regulations from the Biden's first year in office will culminate in over 131 million new paperwork hours. So quickly, Mr. Chairman, can you discuss the correlation between the company's regulatory burden and the effect on productivity?
So it's been, I'm a little bit familiar with the research, and it's actually been difficult to make those connections in research. But we know, as a practical matter,
We all want just the right amount of regulation, not too much. And to the extent you're spending resources unnecessarily, that'll hold you back.
Thank you very much, and I'll yield my time back, Madam Chair.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Madam Chair. During his State of the Union, President Biden reported that the U.S. has seen the fastest job growth in history. The U.S. has had the fastest economic growth in more than 4 decades, and the U.S. among advanced economies has had the fastest economic recovery from COVID. And so the inflation that we've seen is the consequence of a strong economy colliding with the supply chain disrupted by COVID-19. Given the Russian invasion of Ukraine and the inflationary pressures that could likely follow, is there a risk that raising interest rates could backfire, that it could cause a recession without actually reining in inflation? How significant is the risk of stagflation?
Well, there are several questions in there. So our goal, of course, is to raise interest rates in a way that restrains inflation and gets it back to levels that we would call consistent with price stability, and do that without while still sustaining an expansion and a strong labor market. That's our goal, and that's how we'll use our tools. There are no guarantees in life, but that is our intention and what we propose to do.
The U.S., as you know, has severely sanctioned Russia, and Russia is expected to engage in cyber retaliation. There are financial institutions, commercial banks that invest up to $1 billion every year in cybersecurity. How much does the Fed invest in its own cybersecurity every year?
I don't have a dollar amount for you, but it's quite substantial. We have very good cyber people, and at the reserve banks and at the board here in Washington. And as I mentioned a little earlier, we've been at a very highly elevated level of oversight on cyber issues since for several months now, as this event has increased, and we haven't seen any troubling incidents yet, but we remain on high alert.
The ability of the U.S. to hold rogue states like Russia accountable depends heavily on the SWIFT international payment system. In your view, how easily could China and Russia create an alternate messaging service that could seriously compete with SWIFT and seriously undermine the effectiveness of SWIFT sanctions?
I mean, that's an interesting question to speculate about. I think in the near term, that's not something you can create overnight. I know that China does have their system. It's really a question for the longer term and not for the immediate. It's not something you can do quickly like that, but you think about that.
Fair enough. I have a question about stablecoin. The leading stablecoin issuers have chosen to peg their stablecoins to the U.S. dollar, which to me represents a vote of confidence that reinforces rather than challenges the status of the dollar as the world's reserve currency. The U.S. has no CBDC of its own and is unlikely to have one in the year.
That shit used to have, man. I used to be watching that shit like, oh, that shit be going up.
Right.
That shit be going down.
Right. I'm telling you. Yeah.
All we need is a big red dude. We get a big red dude. This bitch, I know this bitch can go back to 800.
Want to live the Italian way of life? With Galbani cheese, you can. Enjoy the authentic Italian experience with Italy's #1 cheese brand. Try Galbani cheese and get a taste of Dolce Vita.
I'm assuming it's better to have stablecoins pegged to the dollar than to have stablecoins pegged to China's currency or the currency of a separate country.
I would agree with you that in a way that is consistent with the role of the dollar, and most of the big stablecoins are, of course, dollar based.
I have a question about the Community Reinvestment Act. Even though the CRA exists to prevent racial discrimination in matters of lending, often referred to as redlining, regulators fail to consider race when enforcing the CRA. Do you think race should be considered?
So we went out with an advance notice of proposed rulemaking a couple of years ago. We took in a whole lot of comments and took those into account, and I think we're now sitting down with the OCC and the FDIC to come up with a notice of proposed rulemaking, and that's one of the issues that we have been thinking very carefully about. And I don't have any announcement for you, but that's something that's going to come out of those conversations.
But you're open to considering it? It's something we've been considering. We asked for comment on it. That's the extent of my questioning. Thank you, Madam Chair.
Thank you. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Madam Chair. Appreciate the hearing. Mr. Chairman, thank you so much for coming back for your Humphrey Hawkins testimony, and we all wish you the best of luck as you complete the confirmation process in the Senate. I enjoyed hearing Mr. Kustoff from Tennessee talk about William McChesney Martin, and then actually he was talking about the 70s. I guess my friend from Kentucky, Mr. Barr, brought up William McChesney Martin. And it made me think about the 1970s, and you and I both started our business careers in that decade, where inflation was really considered the #1 economic concern in the United States and around the world. And Arthur Burns was your predecessor then. And I read recently a talk he gave called "The Anguish of Central Banking." Have you heard of that before?
Yeah, it rings a bell.
Well, I commend it to you. It was delivered in 1979, so he was no longer the chairman, and he was reflecting on his tenure at the Fed and also on fiscal policy of the 60s and 70s. So I commend it to you and the Federal Open Market Committee and to my colleagues here on the committee. And with your permission, Madam Chair, I'd like to insert it in the record.
Without objection, such is the order.
It's a stark reminder that when we abandon fiscal discipline and our core financial principles instead embrace what I consider economically illiterate concepts like modern monetary theory, we get into economic anguish. And in this talk, Chairman Burns reflects on his own mistakes at the helm of the Fed, as well as the abandonment of conservative government finance. When Burns warns, fear of immediate unemployment rather than fear of current or eventual inflation comes to dominate economic policymaking. And that was his warning to us, and I think it merits at this time. You said you don't want to go back to the 70s. In fact, you argued that's what we're trying to absolutely avoid. So I do encourage people to read this report because inflation is a thief. You answered a question to Mr. Hazanga from Michigan that you were not aware that in the 2022 monetary policy report that the rules section in the monetary policy was not included. Is that right?
I was aware of it a couple of days ago.
Okay.
What I said was I don't remember any prior discussion.
Right.
But that doesn't mean it didn't happen. It just means I didn't remember it.
Right. Well, in the FOMC meetings, do they still have a presentation, part of the staff presentation, sort of a trend analysis on using those rules that have been traditionally in the policy report? Does that still go on in FOMC meetings?
Yes, it does.
Yeah. So I think that's an indication that's probably best that it be included in the report. I was looking at some forecasting about the so-called Taylor rule dating to the 1990s, which you've testified on many times. Are you aware of what the Taylor rule would indicate now in its formula vis-a-vis the inflation that we have today?
Generally, yeah.
Do you know the range that?
High.
Yeah. The answer I saw was 9.55%, which doesn't mean it's right or wrong, but it's one of those indicators about how far off we are maybe in our funds rate targeting. So I'm glad to hear that you'll consider that being put back in the report. I also wanted to raise the subject of the Fed mandate. You've taken some questions on that today too. We've had legislation in the past to reconsider the 1977 approach Congress took in the middle of that inflation to have both price stability and full employment. And we've debated that in this committee before. And in my view, considering to the fiscal policy stimulus and the monetary policy that we've had in the last couple of years, we really have to focus on price stability. And in Congress, we're here to really prevent that kind of inflation. And I recognize, and I'm happy to say, it's both a fiscal responsibility and a monetary policy. And so I'm proposing that we go back to price stability. And we won't be alone. As I understand it, New Zealand, Canada, Australia, and the United Kingdom have that as their sole mandate, price stability. Is that your understanding too of those central banks?
Yes. I think the ECB
European Central Bank. So that will be a matter for Congress, obviously. I would say if I were to show you monetary policy response to 5 central banks or 6 central banks, I'd say 3 of them would be like us, a dual mandate, and 3 of them would be just inflation. You wouldn't actually see any difference in their reaction function because they do have to look at resource utilization, which is employment, in order to determine policy. So we basically, you wind up with very similar answers.
Well, I thank you for your testimony, and again, wish you well in your final confirmation process. And Madam Chair, I yield back.
Thank you. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Madam Chair. Chair Powell, it's good to see you again, sir. I would have preferred to congratulate. Hello? Can you hear me?
Yes, good to see you.
Oh, okay. Thank you so much for being here. Of course, I would have preferred to be congratulating you on your reappointment to the Federal Reserve, but hopefully we can get that done. I did publish an op-ed this morning with Chairwoman Waters and Congressional Black Caucus Chairwoman Beatty and some of my African-American colleagues on the Financial Services Committee calling on Senator Toomey to return to the table and give you and the President, the other 4 nominees, the vote that you deserve. So let me ask you a simple yes or no will do here. Do you believe that the Federal Reserve would be better able to serve the American people if it had a fully staffed Board of Governors?
I want to thank you for your kind words and support, but I wouldn't want to comment directly or indirectly on the Senate. I'm a nominee, and I await the Senate's judgment, and I prefer not to get into that process other than as a nominee.
Okay, well, thank you, sir. Let me switch gears and talk for a moment about Russia. As we've discussed extensively today, Russia's invasion of Ukraine has consequences far beyond the geopolitical. We've discussed the potential systemic risk in the invasion poses to global markets and the mechanisms to keep Russia isolated from the international economy for the duration of its illegal aggression. But I'm concerned about the potential systemic risk here at home. The European Central Bank has identified systemically important financial institutions with ties to Russian banks, and those institutions could potentially require assistance to live up to their obligations. So are there any U.S. institutions that you're monitoring that have outsized default risk as it pertains to the freezes on Russia's assets?
So basically, no. Our financial system and our financial institutions have relatively little exposure to Russia, and even the largest exposures that any of them has are not very big. So it would need to be exposures. It would need to be a second order thing whereby a foreign financial institution has exposures to Russia, but also has exposures to our banks, and we don't see that as a primary risk, but it's something we're watching.
Okay, so with my remaining time, let me ask you, your November report indicated that the forthcoming rise in interest rates will have ripple effects throughout the entire economy. Can you speak to the interconnection between the Fed's rate hikes and the freeze on Russian assets as it pertains to the prices of certain commodities?
Well, I think the price of commodities is generally set on the world market by supply and demand. We do intend to raise interest rates this year, as we've said. But as long as we're in this very sensitive phase of events in Eastern Europe, we're going to be careful in doing so. We're going to move, avoid adding uncertainty, as I mentioned a little earlier. And we do believe that over time, as we raise interest rates and as we get relief from supply side improvements as well for inflation, that we'll get inflation back down. We expect to see that happening, and to the extent we don't see it happen, then we're prepared to move more aggressively.
Great. Thank you very much, Madam Chair. I yield back.
Thank you. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Pro Tem Powell, for being so forthright. I think your answers to Mr. McHenry's questions at the outset were incredibly helpful. I think it was probably the most direct that you've been with respect to how you're viewing interest rate policy heading into the March meeting, and I certainly appreciate that, and I suspect others do as well. So thank you for that transparency. I want to start on Ukraine, and I know this is Ukraine and Russia, and I know this is just evolving. My view, despite some of the, like, thought was a little bit flowery rhetoric last night from the president, is this is the beginning of a long-term conflict. This is not something that will be over in a matter of days, but months and perhaps years, as the Russians encircle Ukraine and our lack of response in many respects. I know you're a student of history and you're a student of monetary policy history. When you look at a world where this is a longer-term conflict, how do you view a longer-term military engagement in Europe impacting rate policy and balance sheet policy? And if you haven't begun that study yet, is that something that the Fed will endeavor in the coming weeks and months?
It's a really good question, and I would have to agree with you that this event does seem to be one that is a game changer and will be with us for a very long time. As I mentioned, we don't understand yet. There are events yet to come that we haven't seen, and we don't know what the real effect on the U.S. economy will be. We don't know whether those effects will be quite lasting or not. But it's something we're going to be thinking about a lot. Exactly the things we'll be thinking about. Really too early to say, but it's not too early to try to imagine and assess.
Thank you, and I know my thoughts and prayers are with the Ukrainian people, as are many of my colleagues, all of my colleagues. I think we were unanimous in that. We hope for a successful outcome, though admittedly the days ahead appear to be quite choppy, and it's hard to see a positive outcome in the near term. I want to shift to another thing the president said last night around companies need to lower their costs, not their wages, and that's how we're going to fight inflation. That sounds wonderful. How do you magically sort of lower your costs as a company? Is that something? It sort of implied that it's corporate greed that's leading to inflation. I've read your comments. I think they're spot on with respect to the supply-demand dynamics. But is there a way for companies to just sort of unilaterally lower their costs that you're aware of?
First, I
know you didn't see the
never
speech.
comment on the president's comments at any time, and I won't do that now. I think my experience in the business world very much was that businesses are constantly managing their costs. That's a lot of what businesses do. So it's an ongoing thing. But I didn't watch the speech, and I don't know the context, and I would never comment on anything the president says. So
Thank you. Shifting to my last question, there's been talk of whether cryptocurrencies represent a good vehicle for sanctions avoidance. I think you've rightly said that's maybe for the purview of Treasury, but generally speaking, a system that transactions occur on a public ledger that are auditable and reviewable by the entire world. Anybody in the world can go and check and monitor these things, and in a world where those same systems have transaction speed limits, essentially. Do you think in that world a public ledger is a good or less good way to launder money or avoid sanctions?
I don't want to. I'm not an expert on sanctions, and so I'm reluctant to comment on that in the context of sanctions, just because it's not our field, I would say a public transaction. There's a balance you have to strike between privacy, which is very important, but also the ability of law enforcement
to, and national security to track payments. And I think to the extent that cryptocurrencies are a means by which you can evade both law enforcement and national security concerns, then that's not something we should tolerate.
Thank you for, again, your transparency, and I yield back. Thank you.
Thank you. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thank you, Chair Powell, for being before us again today with such forthright testimony in such challenging times. I wanted to just start on the question of inflation and something that you said to one of our colleagues in response to a question. You said that inflation is too high. We're seeing it everywhere in the world. Ours is worse because our economy is stronger. Can you flesh out that duality a little bit, maybe by way of contrast with others globally who are struggling with inflation but do not have a strong underlying economy?
Sorry, I think if you look at our, maybe the closest economies and political systems would be the countries of Western Europe and Canada, advanced economy countries like that. They're all having the highest inflation they've had in a very long time. Places like Germany, which is famously, inflation averse, has high inflation. Now, ours is a little higher. Our economy is now well above the level of output that we were at before the pandemic. If you just look at the output an economy had before the pandemic to where it is now, we're way above that, and other countries are kind of just getting back to that level. So we've just had a stronger recovery, and that is because of monetary policy and fiscal policy, and also just vaccines and a whole range of factors. So our inflation is definitely, of the advanced economies, ours is higher generally. We're going through the same process that the Bank of England and other central banks are going through, which is raising rates and trying to get inflation back under control. Very committed to doing that. It's a common problem. Again, ours is worse because our inflation is higher, I think largely because our economy is that much stronger.
And I know you have a series of meetings and possible rate hikes. You talked about in 2 weeks, likely the 25 basis points increase. For my constituents, my consumers, what impact will they begin to see with the small incremental rate hikes?
It's a little bit like the rate hikes that took place in the first part of this century. Not the rate hikes that took place after the global financial crisis were much slower. They were every other meeting. But the cycle before that, the rate hikes are consecutive meetings. So what you feel is these are fairly small rate increases, 1/4 percentage point every 7 weeks. And we haven't made any decisions after this meeting. But the thought is that rates move up, our policy rate moves up, and with it, rates on mortgages, rates on car loans, rates on the loans that people take out to buy appliances and things like that. So companies, their borrowing costs go up, and you get to a point where you've raised a few times, it's even still a gradual process, even though it's fast, as much as twice as fast as the last cycle. But still, people start to spend a little bit less, and the economy demand returns to a lower level. By this time, we hope that that the economy is going back to normal in terms of supply chains and the breakdown between goods and services spending and things like that. So we hope we're getting help on the inflation front from a bunch of things. In any case, we do have the responsibility to generate price stability, and we will use our tools to do that over time.
I thank you for that. One particular area of concern for me is the role that increasing market consolidation has played in contributing to inflation. An example that we've seen is the huge price spikes in the meat industry, which has become incredibly consolidated. To what extent would you attribute supply chain fragility and recent price increases to market concentration?
So we're not the competition authorities, and so I would defer to the competition authorities on all those questions. In terms of inflation, though, inflation really is mainly a macroeconomic phenomenon, and which doesn't link in the aggregate very well to concentration. Some of the most concentrated industries, in fact, were those that drove low inflation. I'm thinking there of warehousing and retail and things like that. Those industries consolidated and they drove lower prices. So it's not so obvious. There clearly are industries where that may be the case, where they become consolidated and they're able to raise prices. It's not clear they'd be able to generate an inflationary cycle, but they could certainly raise prices in the first instance. It's not a settled question in the economics, but
The
again, we
gentlewoman's
defer to
time
the
has
competition.
expired. Gentlewoman's time has expired.
Thank you, Madam Chair.
Thank you. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Inflation remains a serious concern for my constituents in West Virginia. Inflation erodes the real value of every paycheck. When the cost of filling a tank of gas or buying groceries increases, all Americans lose money. Today, I'd like to focus on a slightly different aspect of inflation, which is inflation's corrosive effect on Americans' savings. The combination of low interest rates and high inflation has clobbered returns on common savings tools like savings accounts, money market funds, and certificates of deposit. January's 12-month consumer price index of 7.5% pushes the yield on these savings tools into deeply negative territory. In other words, with inflation as high as it is, Americans who have saved responsibly for years are losing their money over time. So Chairman Powell, first question is, how concerned are you about the effects inflation and negative savings yields are having on the long-term health of our economic recovery?
So I would agree that inflation falls heavily on people who are living on, for example, bank deposits and CDs. And this is typically retired people and the elderly. And of course, they do bear the brunt of this. So that's why one of the reasons we need to get inflation back down to appropriate levels. And that's what we're working on.
Thank you. Savings is an important way to achieve financial goals like purchasing a new home, paying for college or retirement. Savings is a way to take control of your financial destiny. Savings is a part of how we can achieve the American dream. So I'd like to raise another potential issue about the declining value of savings and its implications going forward. I'm concerned that our current economic environment will discourage savings altogether. So Chairman Powell, are you concerned about the effects inflation and negative savings yields could have on Americans' incentives to save money going forward?
Interesting. If it were to persist for a long time, I would be concerned. Of course, right now, savings are, the level of savings on people's balance sheets is at historic highs because they saved during the pandemic. They weren't able to spend money on travel. So right now we're looking at a couple $1 trillion of savings above where they would have been without the pandemic. But over time, yes, savings is important, and I would agree that high inflation can be a disincentive.
Okay, thank you. I think it's important we monitor the savings rate closely with this in mind. If Americans save less, that could have economy-wide implications both now and especially in the future. So we should be careful to ensure monetary policy encourages savings going forward. And that's all I have. Thank you, Madam Chairman. I yield back.
Thank you very much. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Chairman Pro Tem Powell, for being with us today. And I think I'm going to be last, so I'm trying to try to be soft. In a recent press conference, you had mentioned that forecasters expect inflation to subside as supply chain disruptions issues are resolved. I understand this is being addressed, and my colleagues and I are working on addressing this supply chain crisis through multiple legislative solutions. At home in Houston, one of the nation's shipping and energy capitals, we are focused on expanding and developing the nation's ports and waterways to continue building our role in facilitating global energy and trade. You also said in your remarks today that we understand the high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. So I want to focus some on housing. In Houston, housing costs have skyrocketed. with the median price rising 18% last year and the average 16%. Nationwide, housing and the rent prices account for roughly 1/3 of the CPI. And most economists do not expect this problem to be resolved as quickly as supply chain bottlenecks. In your earlier exchange with my colleague, Congressman Williams, you mentioned a soft landing, wherein the Fed will address inflation first and survey the housing prices trending downward. My question is this: is the Fed looking at alternative plans? In the event that housing prices do not trend with inflation, how might that impact inflation reviving if low housing supply continues to in the upward pressure?
So we do, as you mentioned, housing costs and housing services costs, and how, if you're a renter, they're a very big chunk of what goes into the inflation indexes. And to the extent housing prices, we're not saying they'll go down. What we're saying is that the increases will be much smaller. We don't need housing prices to actually decline, just as long as they. What we can't have is them. We don't want to have them increasing at very high levels as they have been doing. Largely as a function of supply and demand. You know, supply is constrained. I don't know about Houston, but many places in the country, difficult to find lots, difficult to find labor, difficult to get materials. Or materials very expensive.
We're experiencing that.
Yeah, and so demand is very strong. So interest rates are low, and what you get is a lot of buyers and not enough new houses. So what will happen as we raise interest rates, and this is already happening, it's already priced in, is mortgage rates will go up, and you'll see that bidders, prices will begin to go up more slowly. Demand will decline, and hopefully we'll get back to a place where demand and supply are well aligned.
Will we ever get back to the pre-pandemic levels?
Will
we get back to the pre-pandemic levels?
Of price?
Yes, sir.
No, I would only expect that we could limit further price increases. We're not trying to drive prices back down. What we're trying to do is limit future prices.
Right. Now, how concerned are you that there seems to be a lack of investment in affordable housing, and how that could cause inflation to become a long-term problem, even if the Fed is able to get inflation under control in other segments of the economy? So now specifically about public housing.
Public housing is, of course, not our policy tools don't generally meet the need for affordable housing. It's really more of a fiscal policy and a housing policy question. But I know that economic research shows that high housing costs for workers are making it difficult for people to live close to where they need to be going for work, and it is limiting the ability of people to be in the workforce and ultimately limiting our economy. So I will say that.
Last question, you mentioned in your remarks that it impacts essentials like food, housing, and transportation. What does this do to the poverty rate, increased inflation? And because I know unemployment is down, does that necessarily mean poverty is coming down, or does it continue to rise with inflation?
So those things would have offsetting effects. To the extent inflation is going up and faster than people's wages, and that's actually not the case for people at the lowest end of the spectrum, because that's where the highest wage increases have been in the aggregate. But to the extent that were happening, that would potentially increase poverty. But to the extent people are going back to work, that would decrease it.
Thank you. Madam Chair, I yield back.
Thank you very much. I'd like to thank Mr. Powell for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask Mr. Powell to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned.
all right, ladies and gentlemen, that's it. I mean, hey, lock in. I hope you got what you got out of that. The SPY is picking up here. Look, it might be trying to break out here. We haven't seen that 440 test yet at all here on the SPY. I think that will be the ultimate break. I think we do have some more briefings here coming up shortly. Let's see. Yeah, that was a long briefing right there, though, man. Y'all going crazy in the comment section over here. Taking out some decent average daily range levels. Yeah, that's all it is right now. That's all the market is kind of doing. It's just, hey, it's a fight right now between the Bulls and the Bears. They're fighting that resistance slash support level. That's just what they're going to do here till they feel like they want to break out. But numbers and charts don't lie, ladies and gentlemen. So set stop losses. You'll be fine. Respect what you pick, set a stop loss if you're not feeling it no more. And go from there, man. Go from there. But I think overall here, we credit spreading here. We still in the same range right now. The market ain't really doing nothing spectacular here. I'm saying the same range. Like I said, you're gonna need to see the SPY break above 440 here today at this point, ladies and gentlemen. So keep that in mind. It is after lunch. Now it's 1:06 p.m. So yeah. Wall Street just got back from lunch here. That might be part of the pop there, but market's the Bulls got a little slight momentum here today. They can really take advantage if they break above these levels. The volatility is still high though, ladies and gentlemen. It is below VWAP, but it's still at $24 here. That's still pretty high. Any spike can kill momentum quickly here with the volatility. The VIX being this high still. Keep that in mind. So right now, ladies and gentlemen, it does look like we're just testing resistance here today. Not seeing nothing really break out. Like I said, the oil stocks are on the high though. The oil sector, all that's on the high. That's leading the way really up here today. Stocks on the move. Amazon chilling out. They only up $10 here, so another signal of a credit spread type of day here. Let's see here. NVIDIA is up 7 here. NVIDIA is up a little bit past their resistance level at 242. So not a lot there though. As I said, just looks like a credit spread type of day, man. So y'all be cautious, be careful there. You got some time. Really no need to panic here. Time is your friend as long with the trend. So ladies and gentlemen, with that being said, we're going to take a quick break here. This is the Stock Market Live with LCAOD. We'll be right back, ladies and gentlemen.
Yeah, y'all niggas know what the fuck going on. Y'all niggas fucked up. Money gang. All y'all niggas lame. Y'all a nigga dirty. You can call me begging me for a trade. Fuck the other side.
You can play with your life, and you gon' lose your life today. My little youngest thug, you probably wanna earn some stripes today. We out here wrecking shit, we come around, they put their ice away. We don't fuck around, you fuck around, we take your life away. You can think this shit sweet, we gon' see about that. Load up the cage, it's time to spank, we gon' creep about that. Send my youngin' to do them bad, she gon' sleep about that. Hey, when it's beef, bitch, we gon' eat, bon appetit about that. Ain't no pressure, bitches extra. If it's beef, we comin' with it. 50 rounds of ammunition in the drum that's on the glizzy. We ain't shootin' for no reason. When we up, we tryna hit them. All the cousin playin' gutter. I might make my auntie miss 'em. Had them niggas with you pussy, yeah. All y'all niggas bitches caking slippin'. Show no mercy, leave them sleepin' with the fishes. Damn the shit y'all pull was petty. We comin' heavy, be ready. Chopper kickin' like it's Tekken. My little niggas be steppin'. Ain't no slippin', ain't no missing Biggie, wicked about that gang. Drug dealers, lots of killers and gorillas out that gang. Hey, you know what the fuck going on, nigga. 502 to the 204. You know what the fuck it is. Free my little nigga Goose, bitch. Double jiggers, yeah, we with that glitter scene, so ain't no get back. My little niggas on them jiggers, don't invite him to no kickback. He a lick, we gon' get him. He get greedy with the guys, leave him shitty in this city. Ain't no missing with the eyes. I might tax him for the dick, sell a killer for the five. Smoke a kick with A Miller, pistol gripping on the 9. Never tripping, nigga, wicked, we gon' kill him when we slide. We the takers from Vegas, she get silly for the guys. Hey, 502, hey, to the 12, pull up to your spot, all my youngins on go. Hey, 502, to the 12, got your bitch at the trap, going dumb. Hey, 502, hey, to the 12, we got eyes, nigga. Yeah, tell me what you want. Yeah, 502, yeah, to the 12, niggas know what the fuck going on, man. Checking out this bitch. You know about it? Niggas know we ain't playing about none of that shit. Y'all little niggas gonna pay for that pussy shit, man. Yeah. And I'm in this bitch getting heavy. With that iron. Fuck, nigga.
Just chillin' in the spot, getting smoked out. Country boys making noise, bring the two strokes out. It could be about who you know or what you know about. Planting seeds in the soul, waiting on the sprout. They don't understand. I just feel like the man, feeling like Nas. Be what I wanna be, I know I can. Anxiety kicking in, need another hand. I need some food, some food with them pots and pans. TAC in my system, all different strains. These niggas acting like hoes, I only fuck with fans. They keep me safe, keep me sane, and keep me in my zone. If you fuck with one of them, I hope your team's strong. They been sleeping on me, it's time to wake 'em up. I'm sipping purple and yellow, Lakers cup. If you nod one more time, I'ma take your cup. This shit way too expensive to be wasting, girl. Sometimes I really feel like I'm on another level. All the shit I done been through, my heart made of metal. Keep it positive and keep it hot, just like a kettle. Unless it's 12, officer, I don't know what to tell. I'm back, this rap shit is way too easy. Pop a bar and spit some bars and then I'm way too sleepy. But I'm grinding hard, I got a family to feed. So I'ma try to drop some hits that the streets gon' need. Yeah. Been struggling for a while, trying to find my way out. Even had thoughts of grabbing the stick and laying niggas down. Had to get my mind right, had to get my mind focused. I done made my mistakes, I done made some bad choices. I'ma keep my head up, if you ain't noticed. Keep a smile on my face, while I'm puffing on this hope. Plant seeds in the soil, I'm just waiting on the sprout. This shit here's from 93, and that's no doubt. Yeah.
Trapaholics Mixtapes. All we had to do was follow the damn train, DJ.
Put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, get lost, get lost, get lost. Put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fault. Get lost, get lost, nigga. Get lost, nigga. You lost, nigga. Really, I'm a boss, nigga. Chase a bag, nigga. Really from that stoop, nigga. That's one rack, boss. Yeah, I'ma get 'em. That's one rack, lost. Damn, Skizzy hit 'em. Got 'em with them bars, nigga. Call me Hershey, cause I kiss 'em. In the back of the back of the May, nigga. You know that Maybach all white, and I'm tatted, nigga. Like I'm Haitian with them rastas on my head, nigga. One rack shit, one rack bitch, I love that. One rack shit, that one lack bitch, and I'm gon' splat at your shack shit. I meant, oops, my bad, I'm back, bitch. You lost, put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fall. Get lost, 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 get lost. Put his ass on the cross, make his ass get lost. You ain't really no boss. I do this shit with no fall. Get lost, get lost, get lost.
Hey, have you ever been down there hurt, lost? And worry about yourself, trying to be a boss? Huh? Do you know the cost? You're lost up in the sauce. I never took a loss. If I did, I bounce back. That's boomerang, nigga. If you get it, then it's facts. I'm getting cash every day. I'm just chasing checks. I gotta do what I gotta do. I ain't taking no loss. Nah, I ain't taking no loss. I ain't taking no loss. Gotta do what I gotta do. I ain't taking no loss. Nah, I ain't taking no loss. Nah, I ain't taking no loss.
Six chill,
Water, drip.
Yeah, go dummy, Kyle.
Drip. Water, splash. Water, drip. Water, splash. Water, drip. Yeah. Keep the daddy on my hip. Drip. Water, splash. Water, drip. Water, splash. Water, drip. Keep the daddy on my hip. Chasing. Water, drip. I drip. Your bitch, she on me like a drip. Oh, water when I hit, yeah, she turn the red. That vision is on that money, yeah, I'm chasing it. Just chase a bag, and yeah, I did it for my city, did. Shot the shots, very ride with me in they 30 shots. I don't give a fuck, I hurried up and chase that bag, homie. Just chase a bag, homie. Lenny rockin' with me on it. I do it for my city, who my opponent? I'm in my fucking opposition, where they at? If you up, then diss me. Come on with it. If you up, you gon' but you get the picture. Fucking right. But you get the issue. And I can't get with you. If you want that pressure, come and get it. Then come and get you. What you want, nigga? I don't give a fuck. I'm on it, nigga. And I'm on it, nigga. With my homie, nigga. Student like written on me, nigga. Yeah, show me, nigga, that I've been down bad before. But nigga, I'm on it, nigga. I'm tryna get that bag, nigga. No, I ain't been stuck. No, it's chasing bad, nigga. I'm tryna fuck on your bitch. I love that. I'm lying, nigga. Get that hoe up at that hoe. Feel me, bro. Lay me up and with me, bro. Get me, bro. FOE. OTL, stoop like E. We the fucking best. Drip. Water, splash. Water, drip. Water, water, water splash. Water, water, water drip. Yeah. Keep the 30 on my hip. Yeah. Drip. Water, water, water splash. Water, water, water drip. Water, water, water splash. Water, water, water drip. Yeah. Keep the 30 on my hip. I ain't never asked a nigga for a favor in front of me. I ain't never chilled with these niggas or their partners. I just did what I had to do and stay on my grind. Cause I had a little kid and that was a perfect time. Now I walk around dripping. Now I walk around splashing. Money all in my pocket. Money all in the bag. I ain't never gon' trap, but I'm always trapping. I be always seizing, I be always spending. But I spend and get it back, get it back. Stack season, that's a fact. Stack it up. I need this shit right now. I don't need to see that shit later. I need this shit right on my hands. I'ma try to make it. 25 productions, man. Yeah, I'm trying to make it. No, you'll never take it. So please stop all the faking. I'm headed to the money, though. Please stop all the faking. You know that I'm trying to make it. No, you'll never take it. I'm headed to the money, though. 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 Yeah, I'm trying to make it. No, you'll never take it. So please stop all the faking. I'm headed to the money, though. I'm headed to the money, though. Headed to the money, though. I'm headed to the money, though. Yeah. I'm headed to the money, though. I'm headed to the money, though. To the money, though. Headed to the paper route. Yeah, my nigga, yeah, the paper route is gonna take me out. Yeah, take me out the hood. Have me eating good. Yeah, I wish you would. Try to take my meal. Try to take my paper. Come out of the ground like I am an undertaker. Yeah, my nigga, no, I'm never faking. Yeah, I sing too. Yeah, I ain't just drinking. Yeah. Nope, no, I'm never faking, yeah. Run up on me, you mistaken, yeah. Yeah, what you taking? No, I'm never faking. Yeah, I'm with the crew, doing what I do. Yeah, I'm on that earth. Yeah, I'm smoking true. Yeah, I'm in the crew, doing what we do. Yeah, no love, yeah, to you. Cause you know I'm gon' make it. No, you not gon' take it. So please stop all the faking. I'm headed to the money, though. 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 Yeah, I'm headed to the money. Don't look at me funny. Leave your brains looking runny. Sunny side up, yeah, I'm on that lane, yeah, you know I'm double cup, yeah, I got the green, yeah, you know I'm rolling, yeah, you know I'm smoking on that herb, yeah, I roll that gas, yeah, I'm smoking on that perp, yeah, you know I'm trying to make it, yeah. You know I'm trying to make it. You know I'm trying to make it. You will never take it. Yeah, stop the faking. Yeah, stop the faking. Yeah, I'm gonna get it. Yeah, I'm gonna get you. Snap back for you get fitted. Yeah, boy, I'm not kidding. I'm not kidding. I'm tryna make it out. Tryna make it out. Yeah, I'm 22, but you not gonna take me out. Yeah, you not gonna take me out. Yeah, you not gonna take me out. Yeah. I'm texting the thought right now, nigga. I'm in the studio, man. Be patient. You know what I'm saying? Beats Productions. Digging her down while I'm grabbing her head, and I'm pulling it right now. In it from the back, she like it like that. She like it like that. She telling her man she go for the night. She ain't coming right back. She ain't coming right back. She ain't coming right back. Giving me top straight off the top. Damn. I love that shit, nigga. It excites me, bitch. Pussy good, water, hella wet, mouth cold. All she made me think about is when I get home. Is you home alone? Can I come over? Fuck in the shower, ayy. Hit you on the couch, yeah. Hit you in the room, yeah. Nut on the pillow, damn. I left him right there. Now my kids is laughing right on your face. Ooh, I just hit it today. Ooh, I just hit it today. Picked up a new pack yesterday. Ayy, smoked the eighth with her. Now I can't leave her alone. Head is a babysitter. Damn. Hold up. Stop. Don't think I'm slipping in here. I got that rocket in my sock. Ooh, kick the door if you want to. I might have to squeeze on you little niggas. Ooh, it is who is you? Lay it down, money in your pockets now. Bands on me like I got a lot of bands. Bands on me cause I keep a lot of bands. Mad up, nigga, what is you saying? Your girl over there screaming right now. I just whacked some nigga, he ain't know it. Now I gotta leave you here shaking. Now I gotta leave you here shaking. Pull off, that's another juju. Just hit my side hole up in Charlotte. Told me to come through right after I leave over whatchamacallit. On a highway 85, smoking no good threats. I just got a new pack. I just got a new pack. Don't forget that. Pull up on my mama. Ooh, she like it like that. Hair long, I like it like that. Red bone, I like them like that. Yeah, and she naked. Water dripping all over her body. No lotion, just straight hot hydraulic pumping up in her stomach. Up in her stomach. No cartoons, little nigga. I'm up in her stomach. She all open, soaking wet, water dripping. Damn, she wet. Fuck her good, cause you know she the best. Fuck her good, cause I love her dick. Yeah. Get it. Oh, it's there. Get money. Hey. No love for the plug. Bitches in it for the thrill. Young nigga kid is still. Shoot the top of that wheel. Shoot the top of that wheel. Hey, no love for the plug. Bitches in it for the thrill. Young nigga kid is still. Shoot the top of that wheel. Shoot the top of that wheel. Hey, young nigga, smoking Cali bud, counting Cali money. You niggas know what's up. Since a youngin', tell them pull up at the Wendy's. In the back, I show you Grammys. Then I'm driving off in Granny's whip. Hey, still rolling up. Hey, I still know some plugs. You can do what you want, just come and start with us. I feel everything that I drop on this beat, smoking good weed.
We'll see here. I think for the Bears to get the momentum back, we're gonna need the spotter. We'll see here. I think for the Bears to get the momentum back, we're gonna need the spotter come right back down to like maybe about 436, 435. I don't know right now. It's a lot of momentum to the upside right now here, slightly above the middle here on the indices, ETFs, and stocks here, ladies and gentlemen. But no briefings going on right now, so we're gonna tune into a homie of mine live stream, see what he talking about. He might have something to say important here about what Powell just spoke on.
Pretty much. I mean, Powell was indicating that they had an aggressive plan and that Ukraine situation changed it. That was the first thing he said. That's the quote. It's not the direct quote, but that's the summary. But that's what started a 3-point rally in 2 minutes. He literally just said, we were planning to be more aggressive, but it seems as if, Ukraine has changed that. And that's where people got good. And then, as he kept saying, he guaranteed the rate hike, or he pretty much signaled it very well. He said a lot of things could change, but then he also was just discussing how the market's already prepared for a more hawkish Fed than not, so the market is not going to get blindsided. And he did say something very, very interesting. He did say, what's it called? He said there's more soft landings in history than observers would like to point out. That's what he said. So he sounded pretty confident about the soft landing and everything else, and that's kind of what went hand in hand, but that was definitely part about it. Yeah, SPY is coming up again. Altry is up, but the premiums on those weeklies, again, we sold out of those. Tesla's making a move. They were down earlier. He had the watch hole. He was watching the watch hole. Is Russia built up enough where they could survive without basic need imports? I would say to a degree, and a lot of stuff doesn't affect them. I was explaining this to my friend yesterday because I was like, imagine how, again, we had this talk where, the sanctions, they're not going to affect the Russian people as you would expect. Again, they're like, oh no, you got rid of our iPhones and now we can't buy this and that, or we can't listen to this on TV, and now they have this. But it's like, think about it. It's like if you took your grandparents or your parents and you took away Netflix and Amazon and Instagram, would it affect your parents or your grandparents' daily life?
Oh, that's true. I see what he's saying.
Like, do you think they would freak out if you were like, "Yo, grandma, you can't use Facebook anymore. They sanctioned it." Oh, grandma, you can't get an iPhone 14. If I told my dad, I'd be like, "Dad, you can't watch Netflix anymore."
I'm seeing rejection. Yeah, when it starts, you see, yeah, you get it now. Right? You see it.
They moved "Are you" from the internet. I don't think you can without blocking stuff. I mean, if something's on the internet, you could access it. Especially they have hosting and I'm pretty sure they have servers.
If they break out of this channel, then they broke out of resistance, basically. So that's why I'm saying 870 is.
It seems more bearish if Fed pulls back from the uncertainties. Yes, and that's why I think 25 basis point, he got to get it in there, and then everything's good. But that's kind of the vibe with a lot of it. But some people are, messed up. It messes up the younger generation. Well, in Russia, but at the same time, they didn't grow up technologically dependent like you did. If you really think about it, that's it. It's a different country. They have certain stuff, but you also have to realize they have different Russian alternatives that you don't really know about, that you're not really used to. Again, they have their own social media. They have their own messaging systems and stuff that they do that is, part of their culture.
You see that now too when you do options. That's the risk they talk about. But like I said, as long as you really know the charts and numbers.
The Russian can't really highly manufacture goods. They just can't manufacture like advanced goods or stuff, again, like certain technology, and they're not going to have the ability to go, again, it's a very basic economy, but they could do basic good with their size and everything else.
Yeah, This shit real. It's nah. It ain't
Wonder if
funny,
the
but you
average
gotta
Russian
laugh
has
at it.
immediate access to devices in the
Keep
same
it
manner
going,
American or
say,
Europe as consumers do.
crimes.
That's what I'm saying. I think it's just a little bit. I think that
Man, this shit
possibly
serious.
or more likely no than
People
than
done killed
anything.
themselves and some other
There's
stuff.
some, but
Somebody else,
it's
he
still
know
not.
who
It's
first
just it's very
who
very
was a white
different,
boy in
and that's
2020
why people
killed
even
himself,
said it
got
from the beginning. Even the
725
Russian defense minister said, "I don't know why the
He was trying to
West
shoot Robin
thinks
Hood
that
and some old shit.
sanctions is gonna harm a country that has learned to develop
So I don't
under
understand, but he
sanctions
didn't know
for
the really
for most of
cable
its
swiped
its
up
its
without
history.
being
Literally, Russia has been
the
under
other
some
way to
sort of
take it out.
sanctions already for the last 10 years. Now, what they did do has been very harsh. It has been big.
He wasn't
It's
looking
been
suicide.
strong. I mean, again, I know Biden likes to say it, but you know,
Yeah, you
he's
can look that up.
kind
You
of
can Google that. That was
he's
really
very
that's
correct in it.
everything.
These set of sanctions, they have
So that's what
been
I'm saying. That's how
more
serious it is.
aggressive.
That's
Again,
why I say you gotta really
you literally got
Wakanda not have your ego
what's it
involved.
called? You got fucking Switzerland playing on board. You know what I'm saying? So that's it.
Know the
You're
charts,
dumb
the
if you
numbers,
think sanctions won't be
respect their stop
effective. I
loss,
feel you.
respect their
So
date.
it's like heroin, okay, or like a drug. So I'm sure if you did heroin your first time, you were gonna trip out. Okay, you know what I'm saying? Maybe you take a Tylenol your first time, that shit hits. But if you take Tylenol every day for 10 years, and
It is. You really want to wait till
take
afterwards. And you know what I'm
to
saying? But
have
like
the
I
same
said, the
effect
market was
if you
before
haven't developed
it
a
stopped
tolerance or
that.
not.
I
So
guess
just at the end.
you know everybody
Hey,
caught up
sanctions
with that
operate
shit.
the
But
exact
over
same
definitely
way.
like
It
hitting
will
the earnings
always have an
report,
effect,
like
and it will
say like
affect some people
Facebook
more
did
than
or whatever.
others.
I'm sure
But
you feel me.
to a degree, you got to really realize that it's not as if sanctions are something new. Again, Russia has already if Russia wasn't destroying, it's not going to affect them the same thing as it would have 5 years ago, 10 years ago. I think that's the real comparison. Is if you really want to compare the sanction, the question is how would it affect them now? But what would be the effect if you did that last year, 2 years, 5 years, 10 years, 15 years ago? And then you could really see that's why they say they've developed under sanctions, because now similar actions will not produce the same response that they created 5-10 years ago.
They paid this earnings report out though.
Imagine niggas that loaded up.
Like say if you bought a 250, say if you bought a 250 put, them shit was going for like $20 a pop, 20 cents in the market, but $20 a pop.
Abramovich selling Chelsea, give proceeds to charity. He tried to donate it. I think he's just putting it in limbo until it clears up. But some people were worried about that because
when I play, that's what I expect. So that's the reason I was thinking.
if he
guessing and you know what I'm saying?
literally end Chelsea soccer club if he really wanted to. But he's being a good sport, it seems like. But I think he's trying to. I feel like he would just be trying to get it in limbo until everything cools down.
But I'm chilling out on the earnings right now.
Why are you taking Russia's word? They tell the truth. I'm not taking Russia's word, and I don't know. Maybe to clarify for any of you who want to get real sensitive and ignore academic discussion about this. I mean, Russia is evil. When it's all said and done, do I think it's big bad wolf? But the actions of Putin, I mean, I do not support him, and I'm not. Yeah, I'm not pro-Russian at all. It's just at the end of the day, again, I mean, I've been studying this stuff. I mean, when a lot of you guys were playing video games, I was buying oil and selling oil in 2014, playing the first round of sanctions ever. Literally, we could make a damn song about all of this shit. But at the end of the day, it's not, that's just what it comes down to. I mean, I think it's just very, very different. It's just very, very different. But you got to know what it comes down to is just that there is history behind this. I mean, just because I don't like them or like them, I cannot ignore the reality of the situation that this has been a country where they should have been gone a long time ago. Again, especially with United States. Broke them out. We tried to squeeze them out. We tried to squeeze them. At a Cold War, and that's what makes this difficult. It's probably one of the more fascinating things on the global scale, if you really look at it, to see how and why it's gotten to this point. But at the end of the day, it is what it is. But I encourage you not to. People is just I'm not down with it, man. On any front, and at the same time too, I'm also not confused to be so naive to think that all of these conflicts aren't just a grab for money for the bankers too. So just, let's be real here. At the end of the day, it's there's killing and there's violence, but it doesn't mean that the other side is Jesus trying to love their neighbor and turn the other cheek. This is all just money, and it's money and power at the end of the day.
If it comes down to the blue line, we straight. That's most definitely. If it come down to the blue line, we good.
Again, it's just like United States, but they have more unity in the sense that again, they're Russia has already been cut off from the world. They don't have the same. They are not socialized the same way as you and I. Again, even Putin. That's what I'm saying. He's an evil, like the stuff that you would see. Again, bro. You know what? That's why. I'll give you one example of why I think Russia is just. I'm like, wow. Like you wouldn't even. There's a video, and again, I don't know if it's true or not, but I wouldn't be surprised. I saw the video. I don't know when the time it came out, but Russian soldiers would dip their bullets in pig's fat when they're fighting against Muslim people. And they said because they don't want any Muslim, they said if you die on our land, you're not going to heaven. Just crazy shit like that, bro. Like that right there. It's wild. It's absolutely wild. And again, whether you believe that or justification, again, that's what people would believe, as Islam would believe. But it's just wild. Like that's the type of shit where it's just like, ugh, that's grimy, bro. You know what I'm saying? So it's just way crazier when it comes down to that. Again, see and now you're bringing up what the United States has done in the Middle East, and I hope you see why I said what I said too. But it's at the end of the day, that's why I'm Middle Eastern. I'll make jokes about this stuff sometime, but it's just like, again, no one side. Just because one side is evil does not make the other side the good guy. I don't know why this is not Donald Trump and Joe Biden where everybody goes this or that. Russia's not very anti-religion. I mean, Putin tries to promote Christianity because he likes the values, even though he doesn't adhere to it or that. But the Roman Catholic Church or what they do with Russia, the Orthodox, they believe in it, but they do it again. That's what I'm saying. It's a different way you're socialized into the world. Again, I don't think Putin is reading his Bible every day, but he knows the values of the Bible and getting people again. It's more power and control, I would say, versus not. So you said Russia is evil. Yes, again. Doesn't mean just and again, I think a lot of churches are evil too. We could go down the list of it again. I know where we're going on a lot of stuff, and I say one thing and you want to because I say one thing, you want to assume the next thing, but just follow with me, okay? Because there's a lot of stuff. The point is there's a lot of things you could point out, but just because one thing is this does not mean therefore that. It's just wild. It is just very wild. So at the end of the day, just back and forth with all of this, though, it's the Russia's, again, this is all just leading into how all of this has played out. And I agree, Judge. That's why it's like answering this with going back and forth. It's like I'm pointing stuff out, but that's why, I will let God be the judge at the end of the day. He sees everything, but the thing to understand, what I really want you to understand is how different Russia is from the United States. That's it. That's what you really got to understand. And that's why one action or the reaction or consequence, it's different than what you are thinking. What that mean, really? I feel like we are probably feeling the sanctions in a different way than they're feeling it over there. That's the end conclusion that you need to get. So, and that's what I'm trying to say with all of it. Market is up. Powell had good statements. There was positive peace talk news again. It was just like Monday. So remember, yesterday bad peace talk news. Monday good peace talk news. Then you have positive peace talk. Mr. Powell. Stowe has earnings. Yes. That's today. How do you think Powell had good statements? Because he committed to his plan. He didn't shift it. It's not as aggressive. And he said the Ukraine situation is enough to change things, but it was not enough to change his initial plan to hike. Again, if he said we are not going to raise rates anymore in March, that would have been bad. Because then that equals Ukraine, Russia is so bad that it just evaporated all of the Fed signaling over the last 2 months. So that's why it was good. Just very simple. At the end of the day, we're on plan. It could help ease the situation. It's in 2 weeks. We get a quarter basis point hike. At least we started moving. You get to fight against inflation. And he said if inflation is high, he will do 50 basis points, but that would require more data.
40 and hold at this point.
The situation wasn't so bad where my man had to drop his plans. Yeah, 25 is useless, but guess what? 25 is way better than 0. If he said 0, how would you feel? What would be your assumption then if Powell backed out and said, yeah, we're not even going to raise it a quarter?
Volatility is going sideways. We need a spike right here on the VIX. That's what's going on. That's what
he said they tamed down their outlook from how much to raise, but they're ready to raise each time. Yeah, and he even said 6 or 7 rate hikes. He said the market's ahead of it, and then that's it. Say that he's not doing his job anymore. Maybe. I could see that people would get mad. I would not be surprised. The situation is so bad, Powell is thinking about easing as opposed to not. I did not sell the wheat. I'm going to hold again. I'm giving it time. Like I said, a lot of things, I mean, in the next 10 days, you're going to get different effects on what's going on with everything. Again, even wheat, like the index is barely up right now, but wheat is up another 7%, halted limit up. And that's why this is going to take time, and it's just going to have the back and forth commodity moves, just like we saw with like LMT and everything else. Where's that? New Hampshire? Anybody got any more properties? I saw that New Hampshire one. I'll give you a reply here in a little bit. Have I always been this gangster? No, I've always been this culty. You know what I'm saying? It's like I've always had more cult vibes than gangster vibes. Like, you know, you wouldn't really look at me and think I'm in a gang, but then you would look at me and be like, I could see him joining a cult for sure. You know?
Shit be crazy on the boy. Hey, you like, man, hold on.
Let him sell out.
DC Metro. I'm down to buy anywhere. DC's popping though. Heard a lot of things. TLT selling, dude. This is just literally a reverse of everything. Like literally, this is just like an exact reversal of everything that we saw yesterday. Pretty wild. MO's still going. Contracts are up again.
There we go. Come on,
See what I'm saying?
Come on, baby.
SKYH. Sky Harbor. Is this the Phoenix Airport? Sky Harbor Group. Philo? No, we didn't have Philo. I drank a Carbo, but I kind of want another one. Why am I so hyped today, bro? I just woke up feeling blessed. Stay humble.
Shit coming down, boo-boo.
When Powell's live, someone said it makes up 60% for the fertilizer. Wheat will end up being play of the year. I think I like the wheat play, and again, it's going to take some time to develop. I think we're early still. and we're gonna see. But somebody brought it up pretty correctly though. We do have ways of you could again we can there's alternatives to fertilizer very quickly. Essentially, is that you can like again you could grow stuff. It's just different, and it's not. I don't know about the scalability, but you could swap it out pretty good.
By staying above it. I don't see it. That's why I need that below that.
MO is nutty. I know, bro. We're almost at. I think we're almost at like 15% on the long term, 16%, and we got to stack the 2 years of dividends with it. That's why I think our drip, we getting like almost 3 shares for every drip. It's beautiful. It's beautiful. All dividends. So like here are all of the dividends we've gotten. So there's like what, 14, 27, 40, $50 in gains, and then like another like 50, 60 just in gains off of the dividend shares. So not including anything else or the value of it. You see what I'm saying? We've been buying shares. We stacked up MO for a long time. It's actually, I think it's our second largest dividend besides Abivai, believe it or not. And it's like the 4th largest position. We got Snap, Abivai, Airbnb, and then Altria holding in there at the 4th place. But we've had a lot. Abivai and MO, and that's good. I mean, again, especially if they start holding up like this, and then just give us, let's get another quarter. You see what I'm saying? 3 months, 6 months from now, we'll see what flip flops, and then they do their thing, and we go from there. I'm not buying wheat shares for the long term. No, I'm simply looking to trade this, and if we could get a nice global move, let's take advantage of it. Do you regret BigCommerce or Overstock? Nah. I mean, it was part at the time. Never did BigCommerce. Maybe, but I think it's all part of the game, and that's the beauty of balance is that nothing is ever going to cost us a lot, right? The only way you really fail on it is it's like I got to just keep making small mistakes over and over and over again. So it's good, especially when everything kind of weighs it out, and we got a lot of stuff still kind of hanging in the balance with like Uber and Airbnb, but some of them it's not really. I mean, it's part of the game, and I do like these companies, so it's not really not tripping on it. Oh, Airbnb going up. You have news withdrawals if we ever get to the point. No, it'll last for a while here, for a little bit, but then it'll just turn into, what's it called? When it just turns into the damn, it's going to turn into the like 1 year period where it's like the market doesn't move 1%, and then that's it. I got my wheat option at 20 cents. We bought wheat. We literally got the pullback bottom, essentially. We bought in right here in the morning, a couple days ago at the like low. I think this stock was at, or where was it? It was in the 8 somethings, I think. It was in the low 8s or high 8s around one of these times. And then I think it was right here. I think we got on the first day up in the premiums, but I paid 20 cents for mine. Again, I would watch the watch list. I mean, you could ask me all day, and I'm down to answer questions, but you're definitely going to miss out on part of the wheat play and analysis if you're just not following the watch list. Market bullish. I mean, this is better than not, but everything is reversing the day before depending on the news. My shares of wheat, I saw you said it in the watch list. Nah, man, you're just lying to me now, bro. I gave the plan on what I'm going to do with wheat. But I did not buy any shares today. Are we still early on wheat? You're early, but you're late in the sense that the premiums are up now, and then the stock itself has moved 20% already. Even the bushel itself on the futures, like they've gone crazy. Again, when we got, it was $866 or $860 a bushel, and now it's back to $1050, and that's in 2 or 3 days.
They're really taking a huge risk. You can.
July 2023, that's where people pretty much expect at the very least. Futures are pointing to July 2023 supply should return back to normal. So about a year and a half from now, a year.
Another retest right here.
The SPY butterflies I'm holding. This is actually good for the SPY butterflies. Again, they're still barely up there. They were up 50% yesterday. They come back to 12%, but then on the next down candle, they get back their premium. Or if we don't go up, if we kind of stall out one day, you'll see. But those are still up, and we're still holding them. News tomorrow, you're going to get more Powell. More Powell, a little bit more data points, and then that's it.
Test right here, 8-7. That's what they're gonna do. Might be the one. Might be the rejection.
The snap play, another Bloomberg flow type play. Kind of. It was like the PLL. I just noticed it was a random option that didn't get any activity, and there's nothing near it. So I said, all right, I'm down to grab one. And snap was underperforming today. So I thought that stuck out too. But that one was just following the options like the PLL.
Yeah, I got you. Good. Okay, all right.
Poland wants to include Cerbank and Gazprom in EU sanctions.
Okay, yeah, I got you. They'll probably be after this one for sure. I'm going to let you know. All right. All right, ready?
This scares me. JP said we're not trying to drive prices back down. We're trying to prevent further future price increases. Yeah, that's literally what we're saying. Again, that becomes the worst case scenario for the Fed. Ukraine delegation departed for talks with Russia. So we'll see if there's any updates on it, good or bad. That could change things. Because again, that was the good news for today. Bank of Russia says no stock trading Thursday. They're about to be closed all week. Adding strikes on B&O, good or bad. Good. I think they're gonna try to make money on it, but it should move crazy. Again, today was the first push on oil. Even B&O came back up, and this is what people talked about. If it breaks past 110, if oil does not slip from 110, it's going to 120. That's it. This is a top. Like, I think if you pull it out, pretty much like the last time in 2008, when you had these prices, oil shouldn't be this high. Let's see. That's 2018.
Really, at this point, because he went all in, is what I'm saying.
Yeah, because again, look at 110 was where it dropped from. And then again, what was the next level from 110? It had another little gap. I don't know if it's not. Let me get the better chart. I think you can see it somewhat. And again, this was 2014. So this was the first Russia situation. So, but pretty much if oil does not fall back from these levels, 118, 120, that's it. Everybody's, that's the next stop. For Russia. Did you guys hear? Apparently the ghost of Kyiv is a rumor. That's what my boy told me. They said it was a rumor. He never really existed. And then that's it. Thought they named him. He said that, nah. Josh is slow on the truth. Come on, man. Why you coming at me, bro? Like, come on. Seriously. Like, why you coming on? Why you gotta come at me like that? You know what I'm saying? Like, why can't we be friends? Like, can I give you a call? Like, tell me the truth then. Tell me what is truth, please. Give me something. So why you gotta come at me like that? Just please, just seriously. Like, think about why. What did I do to you? What is the truth? Like, what is your truth then that you have to tell me? You're like, help me understand. Yeah, exactly. I just want to understand. I just want to understand. Especially with all of the bullshit that you get from a lot of other places. Just please. Just let me know. Just let me know. That's all I want. That's all I want.
Eventually, it's gonna break out of that if you keep going up there.
He does need Jesus. You know why? Because I'll give you one. I can give you some good ones. I got him ready, bro. You know why? Proverbs 11. The Lord detests people with crooked hearts, but he delights in those with integrity. That's a good one, right? The godly can look forward to a reward, while the wicked can expect only judgment. The generous will prosper. Those who refresh others will themselves be refreshed. They don't feel me. Yeah, we didn't have Philo. We could have Philo, though, right now, honestly.
I'm gonna say, you're trying to
We
do
need
Philo.
to.
I ain't had Philo in a minute.
Ba-da-ba-ba-ba. I'm in the coat. Hey. Happy Honda days.
The whole block gonna be back coming by the time
You should have Philo.
face.
Can we not? It's not gonna hurt you. Seriously, it's not gonna. I said it yesterday. At the end of the day, I know some people don't like my belief, and honestly, I don't like a lot of people. And, you know, that's why I would hate when people would always come at me with stuff. But I just hope you know, like, with what I believe, I'm not your enemy. That's all. Like, at the end of the day, like in this day and age, I think if you believe in, obviously, like, you could tell with how people are and what they are, but it's like I feel I'm like scared because I'm like, damn, if so many like normal people would even interpret somebody talking any God shit as an enemy and be so against it, it's like, wow. Just, I mean, I wonder, like, who do you think is for you? You know what I'm saying? Beige Book came out. The Beige Book is the what's it called? It's like their business contacts, right? It's the summary of commentary of current economic conditions, and then they go and they ask their business connects, you know, and they say they do the surveys, and then they get to see, you know, what the businesses are responding to and what their contacts at certain areas tell them. It's backlash from the evangelical days in the 90s. I know, but I said this yesterday. I had a conversation about this. It's exactly that. And then now the reverse is using the same stuff that like conservative Christian people used to like go crazy with in the 2000s. People not Christian promoting other ideas. They're using the same philosophy, but just changing the values. That's it. But it's just as like in your face. No, you're this, you're that. Just like when Christian people would always be like, yeah, blah, 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 blah. So it's wild. It's wild. The same, you know, if you're not for me, you're against me mentality, as the great man Jesus once said. Tags. BitConnect founder indicted in $2.4 billion scheme. Tags. Yeah, crude's at 112, or Brent's at 112. $2 spread between WTI and Brent.
All right, ladies and gentlemen, so that's enough from his channel, man. I just wanted you guys to hear what the homie had to say all about it. You heard his input. The market is going up here. We're right at resistance, a strong resistance right here. It's going to take a lot here for a breakthrough. If it does, oh man, they will rally here. They're starting to right now. The SPY is up $9, ladies and gentlemen. Let's keep that in mind. The SPY is up here at 439 right now. So almost wanting to tag that 440 there. They might do it here. They might break above it, you guys. If they do, stocks will pick up here. We might get a rally here. This might be the top though, you guys. So keep that in mind here. Was a little higher at the opening here. Some stocks there. So almost at that point here again. But stocks did bounce off the bottom here from this morning. And we're just right here at the very, very top here, the tippity top for today. But this might be a bottom. They might blast through here and keep going. It's really at that point, ladies and gentlemen. All the indices are in the green here. The Dow's up 2%. The Nasdaq's up 1.75%. The S&P 500 is even picking up at 2.13% here. So a lot of green right now, a lot of green. But some stocks not really even floating with that green. What I'm seeing. So we are still in that range here. We haven't broke above 440 yet on the SPY, so we are still in that range, ladies and gentlemen. I think, like I said, once you get that break above, stocks will kind of pick up, show you some different numbers there. Right now, not really seeing too much. Amazon's only up 15 here. AutoZone, they're up 60, but got killed earnings 2 days ago, so still down technically. Nothing really moving, man. Nothing really moving for real. Netflix is still down 6 right now. Nvidia's right there at their resistance, a little bit out of it, by $2, still up 8. There's really nothing moving, man. Everybody's still doing the same thing. Tesla's right here at their ultimate. They got about $10 more for their ultimate resistance level if they really wanted to put the pressure on the bears here. Or this might be a top right here. We don't really know yet, ladies and gentlemen. SPY still not breaking above 440 currently right now, but it's working its magic to try. So keep that in mind here. The volatility is still kind of high, but down here below VWAP right now, $24.85. But that is still high. Keep that in mind. So be cautious, man. Be cautious. Right now is really not the time to panic here. Things really can still go either way here. The Bulls do have momentum. The Bulls are winning, but not by a lot here. They're only up here maybe about 1 or 2 3 points here, maybe a 3-pointer there. So just keep that in mind. And they're not up that much right now. It can turn around. This could be the top here, or new top here. Keep in mind the market has been selling off. We are still in a bearish trend here. All that's still actionable. Even though you do see green here today, that is the nature of the business, though. That's how things work. Yeah, very, very critical area right here, though. Really testing a lot of patience on investors right here, right now at this spot. So we're going to take a quick break, ladies and gentlemen. Get your eyes off of it. Go take a quick break. Get the blood flowing. Get up, move around, jog in place. Stretch, yawn, go check the mail. Get out, get some sunlight. Go get some water. Just move around, man. This ain't the time to really be standing like this while they doing it like this, because it's very critical right now, you guys. This is a make it or break it point here. So we're going to be right back, ladies and gentlemen, right after this break.
Greetings. Ladies and gentlemen, boys and girls, Illuminati checking in. The evening special. Smooth vibes for you. You feel it? Guess you ain't no real shit. Tell me this, why I feel like it's gonna be too late when niggas wake up. I wash my face, I brush my teeth, and then I sit and blaze up. Coming for any motherfucker ever tried to play us. Built it from the ground up, so I can't take no pay cuts. Introversion got me missing, I'm so look like the breakups. The pressure came at me, and I just had to keep my head up. The world is going crazy, I think niggas getting fed up. Nigga know your money, give a damn how much you got your bread up. They treat this misdemeanor like a fucking felony. You say you want my nigga, why the fuck you telling me? Oh my Kanye, shit ain't nothing you telling me. Well, you can speak it, but I highly doubt I'm gon' believe. Look with your eye, forget your eyes, my taste to perceive. I'm from the city, bodies falling like the autumn leaves. Over a bitch or some bullshit, and I'm like, niggas, please put them down, but keep them tucking like your enemies. This shit here, my nigga, is the revolution. These niggas too pussy for war, I do it through the music. Gather round, I need your focus, hope this make it to you. I'm like a Malcolm X and you more like a Martin Luther. You and I, we both the same, gotta watch out for the shooters. The difference is you wanna where they out here trying to do you. make them look smart. I drink more water, shit beyond it. I give you knowledge, turn to wisdom, really how you use it. They say you crazy, it's they bullshit, and you call it to it. You doing it for the grandma, baby, don't you fucking do it. I got my mind secure, and nigga, I would never lose it. I'm flexible, rambling, nigga, you ain't gotta ever push it. I always talked about the shit, but now it's time I do it. It's about that time the youth to have some positive influence. It's like the music is the only way you gon' get to them. Half of them feel it, others hear it, is they go right to them. Niggas train to love that shit by popping pills and shooting. How you can fuck on every bitch and ain't number you lose it. You feeling like the man cause you beat it up, you refuse it. Told her it's no nigga, you know you just wanted to use it. The situation never blew, I was quick to defuse it. I'm on this break, I'm doing straights and I'm feeling that school shit. The mind you got is a weapon, gotta choose how you use it. These niggas hating and plotting, gotta watch who you cool with. You gon' survive in America, how clutch is your toolkit? New slave, Jesus pieces, labor, just bought them new whips. Trying to manifest so much that I don't know what to do with. Nah, I'm playing, I get that paper, I'ma build a scoop with. Free education for melanations to fuck the pulpit. It sounds like according to your preacher, he can really stop it. These niggas lying to the people to protect their pockets. That's how you see you later, and used to with the rockets. Hit your mom, don't buy no days of Korean no cop. And now let's talk about options, man, this shit from the tropics. Intellectual mind, it's the most microscopic. I call their music fishy, cause they shit is really flopping. Check your approach, my nigga, maybe you should change the topics. Go spend some knowledge, my nigga, fuck what color you're watching. These girls telling how the nerd to say the fans is watching. These bitches faking shots, gotta kick up, now she says she playing. You can't get on my way, it is too big a tsunami. I put the gas, I see the fish trying to creep up behind me. I know my rights, bitch, ain't no crime without no fucking body. Daddy left me, that's the reason that I don't trust nobody. They fighting praising my talents just for pictures beside me. Hard to love all this pain and I got built up inside me. What a disaster, do it matter, cause I went and found peace. And you can do what I do, so it's best that you just watch me. Just watch, I feel great. Tell me why these niggas wanna hate. Why everybody got their fucks up on my plate, knowing damn well that I ain't even ate. Bullshit religion make the people wanna break. On some safety, but ain't nobody getting saved. I'm walking down this path that it ain't even paved. These niggas sell their soul just for fucking fame. What a shame.
Everybody know I'm better. Yeah, I'm better. Always trapping. Any weather. Your homie gone. Did you write him any letters? But when he out, that's your homie for forever. Smoking his gas. This shit is fantastic. My daughter's birthday, good birthday coming up. You know I'm spazzing. I'm just living life. How can you hate on me? No matter what, I'm standing tall like a maple tree. Sipping syrup. A lot of niggas change on me. My time coming. I'm just waiting patiently. Pop me a low. And now I'm alone in the studio with my main bro. Ain't nobody stop me. Ain't no competition. Been doing this too long. I used to record in the kitchen. Damn. I used to record in the kitchen. Been doing this too long. I used to record in the kitchen.
Bro, don't pass me the blood. 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 Yeah. Bro, don't pass me the blood. Yeah.
You see me with this pistol. Oh, do not try your boyfriend, man. Come and talk. Don't be shy. I put my city on the map. You can see where I reside. I'm up in the morning getting it. I feel nice. It ain't nothing like that waking bake. Now I need a blunt before I start the day. Phone ring. Already morning play. No sleep, gotta get paid. Make sure the baby's straight.
Here's somebody rolling on the blunt. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Yeah. Somebody rolling on the blunt. Now. Somebody rolling on the blunt. You got it. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Another one. Here, bro. Somebody rolling on the blunt. Here, bro. Somebody rolling on the blunt. Somebody rolling on the blunt. Somebody rolling on the blunt. Yeah.
that bag get through. I'ma get us out the hood, bro, I promise. Bro, I promise. Bro, I promise. Get us out these slums, bro, I promise. Yeah, bro, I promise. Bro, I promise. Let the beat take over me. Cause these streets can't hold me. Chase a bag is the homie. This busy chase a bag, homie. Gotta get it for my brody. These streets can't hold me. I'ma listen to my OG. I'ma listen to my OG. Chasing the shit. I'm chasing that money. They hating on me. You niggas funny. It's chasing bag. I get it, homie. Don't chase my bag. I'm still G-Brody. I love that money. I said I love that money. You niggas, y'all can't take it from me. You niggas, y'all can't take it from me. Cause I'ma keep it coming, yeah. Gotta get that bag, man. Gotta get that bag, man. They used to call me Pac-Man. They used to call me Pac-Man. They used to call me Boo Boo. Now I'm the shit like Boo Boo. Why you don't say me? Can I get 2 for 2? I'm like, hell no. You know your trap out. Oh, you can get 2 for 30. Yeah, get 2 for 30. Yeah, this ain't worried. This ain't worried. We getting buried. Telling y'all bye-bye. Go act so right. I ain't never frisk him. I ain't checking you for nothing. I'm getting checks in, check something. I'm getting checks in also. Get money. In the winter too. I will. Before that thing gonna be all red. Like your head. If you keep trying me, it's bulletproof R.I.P. R.I.P. that man. I'm not like your ass bleed. You gon' bleed all over the sea. And I'm getting green. All in between.
I'm starting to recognize that number. I seen, I was like,
hey, nigga, this yeah. Hop out and get cut of me. Yeah, y'all niggas know what the fuck going on. Y'all niggas ain't fucked up. Money, gang. All y'all niggas lame. Y'all a nigga dirty. If they call me begging me for a track back, fuck nigga. Fuck the other side.
You can play with your life, and you gon' lose your life today. My little youngest thug, you probably wanna earn some stripes today. We out here wrecking shit, we come around, they put their ice away. We don't fuck around, you fuck around, we take your life away.
All right, ladies and gentlemen, we are live here. We are live here. The market is picking up, ladies and gentlemen. The market is picking up here. It looks like we might really test 440 today, guys. It's really getting close. We're about 50 cents away. 439.46 on the SPY here. the bulls are going crazy right now. The VIX is selling off sideways, still to the downside here. $24 and about 79 cents though. Still a little kind of high, but yeah, as long as they go sideways, it looks like the market will take advantage of that. So we are starting to see a little pullback here on the spot. Could be a little dip here. Who knows here right now at this point? The bears have a lot of momentum here. Tesla just went up about $10 here, so they're in a spread here, ladies and gentlemen. They were just down about $10. Now they're up $10, so that is called a credit spread. They haven't broke out of the range yet, so if you just got caught buying in the middle, you just gonna have some patience. That's really what it is here. You're gonna have to make a spread there when it does that. That's just what it boils down to. Or, hold and trust what you did. That is the risk in this business here. We do got earnings today after the bell, though. We do. I ain't talked about earnings all day. Look at the time, too. It's 2:22, March the 2nd. Wow, ladies and gentlemen. Time is flying here. I didn't even realize that that Powell's speech was really long. All right, so let's get into the earnings plays. Let's see what we got on the board. I had some guys in the Discord asking me about Best Buy. Let's see, they go tomorrow. I mean, really, like I said, I was telling a homie of mine, the earnings this week, they kind of just they're hitting their targets, but they're going back to the same thing that they were. So with that being said, it's gonna be hard to. You basically just want to kind of post earnings, play these earnings here, but I mean they all don't do the same thing. So I mean it could be different. You just really never know. Some of them might hit. You know what I'm saying? It's depending if you get one side. But it hasn't been no spread cover type of earnings here with any of these names this week. But you do got, let's see here, Snowflake. Oh, Snowflake after hours. Now, I do think that will move, but will it hold? That's the whole real question there. That's what it's kind of been like this week. So we got Victoria's Secret. Same scenario there, will move, but will it hold? Best Buy in the morning, yeah. Burlington Coat Factory, yeah, in the morning that'll move. Will it hold? That's really my main question there. I think they will move the names I'm calling out, but will they hold is my main question. So that's really it there. You got some more tomorrow. Best ones tomorrow is Costco Wholesales and Broadcom. Those two will definitely move, but same scenario there. Will they hold? So that's really just kind of how the earnings this week has been. So be cautious out there. Be careful, ladies and gentlemen. But, oh, yeah, market just took a little dip there. Looks like they're trying to find support in the air as they have been all day. The VWAP is 435 on the SPY. I don't see the SPY giving up $3 anytime soon here with this type of momentum. So it'll take a lot for the bears to claw right here. Can they claw? Yeah, they can. It is $3. It's really not a lot, but considering the momentum on how it is presenting itself on the chart, it is. So we'll take a lot to bring it down here, obviously. But yeah, stocks kind of in their channel still, just a little bit, but they wanted to get out. I guess they had to stretch to get some fresh air because they channeled out there for just a tad little minute there, a few minutes, but got right back in the channel. So we don't know, man. That's where the market and the MMs, they get you there and try to trick you there. So be cautious out there, ladies and gentlemen. Let's see. So all the indices are in the green. And I guess we're going to take a quick break because there is nothing else going on right now. We are waiting on some briefings here coming live from the White House in about 30 minutes. It is 2:25 p.m., ladies and gentlemen, and all the indices are currently in the green. The Dow's up 1.94%. Man, it's amazing right now. The NASDAQ is up 1.68%, and the SP 500 is up 2%, man. So it's amazing right now. If you are a credit spread trader, you're eating here on both sides here. If you're going long here, the debit spread trader here, you have to have some patience here. It's just basically how it works. I mean, you want to have patience overall being a trader or investor. So just keep that in mind, ladies and gentlemen. But this is the Stock Market Live here with LCAOD, and we'll be right back, ladies and gentlemen.
Good threats. I told my niggas we gotta get it. Fuck all the haters and get to the money. You know the fake hoes that can come with it. That's why I cut them, baby. Keep it 200. 200. 200. Keep it 200. 200. 200. I told my niggas we gotta get it. Fuck all the haters and get to the money. You know the fake hoes that can come with it. That's why I cut them, baby. Keep it 200. 200. Keep it 200. 200. 200. I really want the back street. Only one with niggas who clappy. Play with the gritty, your ass with the 6 feet. Boy clutching, I'm clutching. Room nigga is nothing. Ma put you in the oven. We ain't playing that chain shit. I'm a hop with Jackson. Call machine, it's nothing. Pull up on the first cousin. I just talked to TG the other day, said stay low and stay out the way. And butter this cake for your family every day. For food on the table every day. I done fell in love with this cake. Percocet shove straight to the face. I just hopped on 85. Lean all in my Henny, man. Bitch giving me a dumb neck. So the bitch just joined the ride. Mom smoking on 85. About to go holler at the club today. He told me he got for 2 for 5. Poured on the plate, yeah. I need that nigga right now. Play card, I got 2 for 10. Serve a nigga like right now. Got my bitch from giving dick. While I'm chasing this chick. Kobe Bryant in the 4th. All you see is straight nits. I told my niggas, gotta get it. Fuck all they haters, let's get to the money. You know the big goes that gon' come with it. That's why I cut them, baby, keep it 200. 200, 200, keep it 200. 200, 200. I told my niggas, gotta get it. Fuck all they haters, let's get to the money. You know the big goes that gon' come with it. That's why I cut them, baby, keep it 200. 200, 200, keep it 200. 200. This ain't even Elite 8, I'm already lit up at the gate. This snow bunny off the molly. I just let the fucking tropics. Met a plug named Jesus. Serve a 20-piece right in your face. She asked me if I leave today. Will your family be straight? Hell yeah. Count it up, count it up, count it up, run it up. Me and EP, you already know we back to fuck the summer up. Money days under my eyes, cause I stayed up all night. Count it up. BMW just in case a nigga try to wake me up. Hit his ass real fast like KP running the screen pass. I'd rather come first than last. Chasing this paper, I really got no plan. What you think the hitters for? From Jibber all the way to the boat. Pull up at the prayer, you know how I go. Serve a nigga, then you gotta go. You love hoe. VVS diamond shining like a chandelier. Her see me and she started to choke. What do you mean, a nigga? I can never ever see myself going broke as eight. And now I'm through this shit. So there's the spirit in my soul. Fuck the election, better grab you a pole. Fuck the election, better grab you a pole. That's what my niggas gotta get. Fuck all they haters, get to the money. Know the big one that come with. That's why I cut it, baby. Keep it 200. 200. 200. Keep it 200. 200. 200. I told my niggas, gotta get you. Fuck all the haters, get to the money. Know the big one that come with. That's why I cut it, baby. Keep it 200. 200. 200. Keep it 200. 2. 204. Else.
Damn, Tesla.
Greetings. Ladies and gentlemen, boys and girls, number 9 checking in. The evening special. Smooth vibes for you. feel it. Guess you ain't no real shit. Tell me this, why I feel like it's gonna be too late when niggas wake up. I wash my face, I brush my teeth, and then I sit and blaze up. Karma for any motherfucker ever tried to play us. Built it from the ground up, so I can't take no pay cuts. Introversion got me missing, I'm so look like the breakups. The bullshit came to me, and I just had to keep my head up. The world is going crazy, I think niggas getting fed up. Nigga, where your money, give a damn how much you got your bread up. They treat this misdemeanor like a fucking felony. You say you want my nigga, why the fuck you telling me? Oh my Kanye, shit ain't nothing you telling me. Well, you can speak it, but I highly doubt I'm gon' believe. Look with your eye, forget your eyes, my taste to perceive. I'm from the city, bodies falling like the autumn leaves. Over a bitch or some bullshit, and I'm like, niggas, please put them down, but keep them tucking like your enemies. This shit here, my nigga, is the revolution. These niggas too pussy for war, I do it through the music. Gather round, I need your focus, hope this make it to it. I'm like a Malcolm X and you more like a Martin Luther. You and I, we both the same, gotta watch out for the shooters. The difference is you wonder where they out here trying to do it. Make them move smarter, drink more water, shit beyond the limit. I give you knowledge, turn their wisdom, really how you use it. They say you crazy, it's they bullshit and you call it to it. You doing it for the grandma, baby, don't you fucking do it. I got my mind secure and nigga, I would never lose it. I'm flexible, nigga, you ain't gotta ever push it. I always talked about the shit, but now it's time I do it. It's about that time the youth to have some positive influence. It's like the music is the only way you gon' get to them. Half of them feel it, others hear it, is they go right through them. Niggas trained to love that shit by popping pills and shooting. How you can fuck on every bitch and ain't number you lose it. You feeling like the man cause you beat it up, you refuse it. Told her it's no nigga, you know you just wanted to use it. The situation never blew, I was quick to diffuse it. I'm on this break, I'm doing straights and I'm feeling that school shit. The mind you got is a weapon, gotta choose how you use it. These niggas hating and plotting, gotta watch who you cool with. You gonna survive in America, how clutch is your toolkit? New slave, Jesus pieces, labor, just bought them new whips. Trying to manifest so much that I don't know what to do with. Nah, I'm playing, I get that paper, I'ma build a school with free education for melanations to fuck your pooping. It sounds like going to your preacher, he can really stop it. These niggas lying to the people to protect their pockets. That's how we'll see you later in Houston with the rockets. Hit your mom, don't buy no Jessica Reed, no cop. And now let's talk about options. Man, this shit from the tropics, intellectual mind. Others the ones microscopic. I call their music fishy cause they shit is really flopping. Check your approach, my nigga, maybe you should change the topics. Go spread some knowledge, my nigga, fuck what color you're watching. These niggas telling how the nerd to say the fans is watching. These bitches faking shots at the kick up, now she says she playing. You can't get on my way, it is too big a tsunami. I put the gas, I see the fish trying to creep up behind me. I know my rights, but ain't no crime without no fucking body. Maybe that's the reason that I don't trust nobody. They fake praising my talents just with pictures beside me. Hard to love all this pain and I got built up inside me. What a disaster, do it matter cause I went and found peace. And you can do what I do, so it's best that you just watch me. Just watch. I feel great. Tell me why these niggas wanna hate. Why everybody got their fuss up on my plate, knowing damn well that I ain't even ate. Bullshit religion make the people wanna break. On some sacred, but ain't nobody getting saved. I'm walking down this path it ain't even paved. These niggas sell their soul just for fucking fame. What a shame.
Everybody know I'm better. Yeah, I'm better. Always trapping. Any weather. Your homie gone. Did you write him any letters? But when he out, that's your homie for forever. Smoking his gas. This shit is fantastic. My daughter's birthday coming up. You know I'm spazzing. I'm just living life. How can you hate on me? No matter what, I'm standing tall like a maple tree. Sipping syrup. A lot of niggas change on me. My time coming. I'm just waiting patiently. Pop me a though. And now I'm alone in the studio with my man, bro. Ain't nobody stop me. Ain't no competition. Been doing this too long. I used to record in the kitchen. Damn. I used to record in the kitchen. Been doing this too long. I used to record in the kitchen.
Bro, don't pass me the blood. 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 Bro, don't pass me the blunt. Yeah. Bro, don't pass me the blunt. Yeah. You see me with this pistol. Oh, do not try your boyfriend, man. Come and talk. Don't be shy. I put my city on the map. You can see where I reside. I'm up in the morning getting it. I feel nice. It's got it ain't nothing like that waking bake. Now I need a blunt before I start the day. Phone ring. Already morning play. No sleep, gotta get paid. Make sure the baby's straight. You're somebody rolling on the blunt. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Yeah. Somebody rolling on the blunt. Loud. Somebody rolling on the blunt. Somebody rolling on the blunt. I got you. Somebody rolling on the blunt. Another one. Here, bro. Somebody rolling on the blunt. Here, bro. Somebody rolling on the blunt. Somebody rolling on the blunt. Somebody rolling on the blunt. Yeah.
Get that bag, get through.
I'ma get us out the hood, bro, I promise. Bro, I promise. Bro, I promise. Get us out these slums, bro, I promise. Yeah, bro, I promise. Bro, I promise. Let the beat take over me. Cause these streets can't hold me. Chase a bag is the hold me. This busy chase a bag, hold me. Gotta get it for my brody. These streets can't hold me. I'ma listen to my OG. I'ma listen to my OG. Chasing the shit. I'm chasing that money. They hating on me. You niggas funny. It's chasing bag. I get it, homie. Don't chase my bag. I'm still G-Brody. I love that money. I said I love that money. You niggas, y'all can't take it from me. You niggas, y'all can't take it from me. Cause I'ma keep it coming, yeah. Gotta get that bag, man. Gotta get that bag, man. They used to call me Pac-Man. They used to call me Pac-Man. They used to call me Boo-Boo. Now I'm the shit like Boo-Boo. Why you don't say no? Can I get 2 for 2? I'm like, hell no. You know your trap at all. You can get 2 for 30. Yeah, get 2 for 30. Yeah. Niggas ain't worried. We getting birdies. Telling y'all bye-bye. Go act so right. I ain't never frisk him. I ain't checking you for nothing. I get checks in, check something. Get checks in, also get money. In the winter too. Power. Before that thing gonna be all red. Like your head. If you keep trying me, it's bulletproof R.I.P. R.I.P. that man. I'm not like your ass bleed. You gon' bleed all over the sea. And I'm getting green. All in between.
got it now. All right. Ladies and gentlemen, we are still live here. This is the Stock Market Live with LCAOD. If you're tuning in, the indices are all in the green here. Some stocks holding up, some slight green momentum here. Really just consolidating the same area here, same range. No breakout above 440 on the SPY. No break below 437 either, though. So they keep buying the dip at 437 right now and just retesting and retesting. And the volatility is just coming down here. Same thing, retesting the same number, $24.70. So this is where we've been here right now. It's on that way to do the same retest right now. Let's see if this one holds and actually break through here, or will it just do the same thing and come back down again? Because that's all we've been really seeing here all day since the break out this morning. That breakout this morning was crazy, though. Got the market where it's at right now, but that was a crazy breakout. And on the SPY there, 431 all the way to 435, man. Then it got crazy, 435 all the way to 438. So they jumped up twice there. The bulls did snatch momentum, but the bears still here letting you know, like, there is resistance. So the battle is ongoing here. We're in the credit spread here today. Powell basically didn't change anything in the market here. He did when he first showed up when the briefing started. It did. He showed his face. It did. He spoke. It did. Boom. But as it got to where it wanted to be, we have just been in consolidation mode, going sideways here, credit spreading. So nothing really happening here overall. Basically, can either still go either way here, up or down right now, ladies and gentlemen. There's still a lot of money to be made here. There's a lot of investors here that's willing to buy here or willing to sell right now with this price action. They're munching off of it. They're trying to decide here. We still really haven't got a confirmation yet. We've seen the low ends. We've seen, I guess this might be the high ends. We don't know if it's going to break higher here. Just like the bulls didn't know. Just like the bears don't know right now if it's going to break. The bulls are going to break higher. The bulls didn't know if the bears were going to break lower when we had the market down here early this morning. So same scenario here, opposite direction, as you can see. That's what you call a credit spread. That's what you call a kangaroo here. So, ladies and gentlemen, with that being said, ain't nothing going on right now. We are just waiting on some briefings to start here. That's really it, ladies and gentlemen. Yeah. You got time, so count getting a little pulled back here along with the move here, but trust the pick, trust the option here. Obviously, don't make this trade at home, you guys. Take the risk that you're willing to take here. Obviously, this is what my company is willing to do. So keep all of that in mind, ladies and gentlemen, when you run this back and catch the recap, or if you're right now with me right now live, ladies and gentlemen, this is the Stock Market Live with LCAOD. And like I said, we're just right here waiting for some briefings to start. Not seeing anything come across the scanner here yet. So we're going to take a quick break. The SPY look like it's about to retest 440 one more time, one more try. We'll be right back, ladies and gentlemen. Oh, breaking news. We do have news here. Looks like, let's see. So this actually started about 45 minutes ago, so we're running late, but this just uploaded on my scanner. So let's see here. U.S. Secretary of State Blinken here delivers remarks on Ukraine to the press. So let's tune in and see what he got to say. It's already been on for about 45 minutes. We're going to tune in now and see what he's about to say the rest of the
Of course, in calling on Americans who maybe they've been resident in Ukraine to leave, and making clear to Americans who may be thinking of traveling there not to go. For those who want to help Ukraine and help its people, there are many ways to do that, including by supporting and helping the many NGOs that are working to provide humanitarian assistance, providing resources themselves to groups that are trying to help Ukraine by being advocates for Ukraine and for a peaceful resolution to this crisis that was created by Russia. Those are the most effective ways that people who want to help can do so.
Andrew. Secretary, you just quoted the president saying big nations don't bluff.
Mm-hmm.
Do you think that President Putin is bluffing by putting his nuclear forces on alert? And I had another question, if you don't mind. Are you surprised that we have not seen more? We've seen some denial of services, but are you surprised that we have not seen a more massive cyber attack against Ukraine or against other of the NATO nations or against us? Do you think that the legislation that just passed improves our ability to defend against such attacks? And if I could impose on you one more question. I talked today to Daria Kaleniuk, who is part of the President in Your Democracy Summit this year. And you know how passionate she is, perhaps you saw her questioning. And she says that despite everything that has been done, and I would say it's an extraordinary amount of coordination and agreement with the Allies, it's not going to get there in time. That convoy is sitting outside Kyiv and poised to encircle Kyiv, and they're not going to get those supplies. What more can be done to help those people?
Andrew, thank you. Let me take them in, not quite reverse the cyber piece. Two things. First, yes, the legislation that you referred to is extremely helpful. But beyond that and before that, we have been very focused on the potential for cyber attacks, not only against Ukraine, but against us, against allies and partners. We've been working for months, first with Ukraine, and also among ourselves, to harden, to sharpen defenses. All of that work is very much underway, including with the private sector. And so I think we have to be very much on guard about that possibility. We are. With regard to assistance to Ukraine, here's what I can tell you. We are very actively working every day, every hour to provide that assistance and to make sure that to the best of our ability it gets to where it needs to go. And this is not just us, this is many countries in Europe. We're coordinating a lot of efforts to do that. And my own assessment right now is that the vitally needed assistance is getting to where it needs to go. With regard to President Putin's statements on Russia's nuclear posture, first, as you know, Russia and the United States have long agreed that the actual use of nuclear weapons would be devastating and have devastating consequences for the entire world. And as we've stated many times, including earlier this year, following the meeting between President Biden and President Putin in Geneva, both of our countries have stated that a nuclear war cannot be won and must never be fought. That was a key reaffirmation coming out of the meeting between President Biden and President Putin back in June. Provocative rhetoric about nuclear weapons is the height of irresponsibility. It's dangerous. It adds to the risk of miscalculation. It needs to be avoided. We've assessed President Putin's directive and his statements, and at this time we see no reason to change our own alert levels.
Thanks.
Matt.
Mr. Secretary, thank you. You mentioned the vote in the UN, which was it was overwhelming, as you said. And the countries that voted against, the 5 countries who voted against, no surprise, Belarus, Eritrea, North Korea, Syria, and Russia. But I'm wondering if you have any thoughts about the abstentions, particularly from Latin America, Cuba, Nicaragua, Venezuela, who stayed out. These are countries that are no stranger to larger powers, might shall go unnamed, getting involved in their internal policy. I'm wondering if that says anything to you. And then, secondly, on the prospects for diplomacy with Russia, which you said you're keeping the door open to. I mean, really, what are the prospects for? What are the chances of that happening? And is there, if there is an open door, is it just for Ukraine and potentially the Iran talks in Vienna, or are you open to the whole gamut of things, arms control, climate, any number of other things? Thank you.
Matt, first of all, to put the vote in the UN in perspective, it is both overwhelming and I would even say historic. Go back to 2014. When the General Assembly pronounced itself on Russia's initial aggression against Ukraine. The votes in favor of that resolution were 100. Then go to the horrific actions that the Assad regime took in Aleppo. The vote there was 120 in favor of a resolution condemning the actions of the Assad regime. Today, 141 votes. That speaks powerfully and eloquently about the overwhelming majority of the world and its views about what Russia is doing in Ukraine. I'm not going to parse the individual votes. I think in some cases, an abstention actually speaks loudly itself, as opposed to a no vote. So I think you have to look at some of the individual countries, assess their relationship with Russia, and look at how they voted in that context. For the small number that voted against, Belarus, the DPRK, Eritrea, Syria, as well as, of course, Russia, as Groucho Marx once sort of said, this is not very much a club that I would want to be a member of.
Oh, wait, sorry, on the prospects for diplomacy.
Oh, I'm sorry. Yes. Look, as I said a moment ago, with regard to Ukraine itself, we, of course, remain open to pursuing any reasonable path, but it's very hard to see any path when the bombs are dropping, the planes are flying, the tanks are rolling. So de-escalation, pulling back forces, that would open a path to diplomacy. And we, I think, demonstrated very clearly in the months leading up to Russia's aggression that we were prepared to engage Russia diplomatically on any legitimate security concerns on a reciprocal basis. That remains, unfortunately, tragically, horrifically. I think we've seen, and you don't have to take my word for it, just listen to President Putin's own words, that virtually everything the Russian government professed to be concerned about was not really what was at issue. For example, Ukraine joining NATO. But President Putin has said loudly and clearly, and has now demonstrated by the actions that Russia has taken, is that what this is about for him is Ukraine being absorbed in one fashion or another into Russia. He sees Ukraine as having no independent existence. He wants to reincorporate it into an empire. Short of that, to make it part of a renewed sphere of influence, or maybe at the very least, to make it totally neutral. So this is about way more than the issues that we were prepared to engage Russia on. So two quick pieces on the diplomacy now. One, with regard to Ukraine itself, first and foremost, the question is if Ukraine thinks there is a path that would help advance its interests, protect it, and the war, and we can be helpful in that, of course, we're fully prepared to do that. But we really look to the Ukrainian government to see what if anything might make sense. That they're engaged in talks with Russia. They had one round. There may be another one. We'll see. But of course, the demands that Russia put on the table were beyond excessive. They were, of course, non-starters. And what we've seen repeatedly is that Russia goes through the pretense of diplomacy to distract and continue on its aggressive path. More broadly, even as we've imposed and continue to impose massive costs on Russia for its aggression and actions in Ukraine, if we determine that there are areas that it's in our interest to continue to pursue, and that in one fashion or another may involve some engagement from Russia, we'll continue to pursue that. We're not going to let Russia dictate in any way what's in our interests and how to pursue them.
Time for a final question.
Media Ukraine. Just a few days ago, European Union proposed to donate their fighter jets to Ukraine to protect our sky. But as far as I know, for now, this deal has fallen apart. I know that you were on a phone call with Foreign Minister Kuleba today discussing this topic as well. Could one expect that after your travel to Europe, something could change and Ukraine will get access to those jets?
Thank you. I can't comment in detail on my conversations with Foreign Minister Kuleba. We talked about a lot of things, including the ongoing provision of security assistance to Ukraine, and that is something that I will be talking to European allies and partners about in a couple of days in Brussels. Again, I can tell you, as I mentioned in response to Andrea's question, that when it comes to vital defensive military equipment that Ukraine needs, we are very actively coordinating its provision, and that assistance is getting there. But we'll probably have more to say in the next couple of days.
Thank you, Mr.
Thank you very much. Thanks, everyone.
Thank you very much. Thank you.
So do you think that Russia is deliberately targeting civilians? You said they're hitting schools and hospitals. Are they doing it deliberately?
We've certainly seen in the past that one of Russia's methods of war is to be absolutely brutal in trying to cow the citizenry of a given country. And that includes, at the very least, indiscriminate targeting and potentially deliberate targeting as well. We're looking very closely at what's happening in Ukraine right now, including what's happening to civilians. We're taking account of it, we're documenting it, and we want to ensure, among other things, that there's accountability for it. Thank you.
Thank you.
Mr. Secretary, are these war crimes?
All right, ladies and gentlemen, so that is Secretary Blinken. He's out. He got his message across. He's done. So it's about to be Power Hour. It's about to be Power Hours, ladies and gentlemen. President Biden and the First Lady looks like they're scheduled here to deliver.
Yo, bitch. It's another one coming, man. I'm fucking this stunt, I'm busting it down. Got the pressure and smoke out the pound. Got the chop on the op, Ray gunning them down. Racks in it safe when it sound. He tried to hide, he getting found. Put him in place like a noun. Picking up back here when I get in town. When I'm in, knock off a frown. I'm fucking this stunt, I'm busting it down. Got the pressure and smoke out the pound. Got the chop on the op, Ray gunning them down. Racks in it safe when it sound. He tried to hide, he getting found. Put him in place like a noun. Picking up back here when I get in town. When I'm in, knock off a frown. Unlimited shots, straight out the Glock. We find too many to do.
It's Power Hour, ladies and gentlemen. Turn up. We got one more hour until the market close.
Block full of shells, I'm cleaning it up. Police ain't picking it up. He run up on me, Glock with a beam. Hell nah, I ain't giving it up. He acting tough, I know it's a bluff. That Glock make him piss in the cup. I'm doing these solos, catching the back end. I turn up the crowd when I tap in. Fuckers a jump, I got a pack in. She wanna fuckers the Rex in. They calling me Sam when I bring the sack in. I'm serving while you get your nap in.
I'm serving while mess. You wanna be down, get put to the test. You better just stay in your nest. Leaving them sick, Glock at his chest. Them hoes just ripping his vest. You wanna be down, get put to the test. You better just stay in your nest. Leaving them sick, Glock at his chest. Them hoes just ripping his vest. I'm fucking this stunt, I'm busting it down. Got the pressure and smoke out the pound. Got the drop on the op, Ray gunning him down. Rex in it safe in his sound. He tried to hide, he getting found. Put him in place like a noun. Picking up back here when I get in town. When I'm in knock out the frown. I'm fucking this stunt, I'm busting it down. Got the pressure and smoke out the pound. Got the drop on the op, Ray gunning him down. Rex in it safe in his sound. He tried to hide, he getting found. Put him in place like a noun. Picking up back here when I get in town. When I'm in knock out the frown. Poncho!
Mama knows who Cub Scout is.
Up on the ops, get us go. Calling her tape, know we gon' blow. I'm copping a P, fuck is a O. Smoking no runs, serving the low. I'm serving the low. I ran in your trap like fuck is a dough. Like fuck is a dough. Up on the ops, get us go. Calling her tape, know we gon' blow. I'm copping a P, fuck is a O. Smoking no runs, serving the low. I'm serving the low. I ran in your trap like fuck is a dough. Like fuck is a dough.
I roll me away and I'm getting lifted. I pop me a pill and I'm getting trippy. I fucking that bitch and you know I'm dipping. I smash on the gas, yeah, I gotta get it. I beat up that pop, man, I'm bottle whipping. Every day I wake up, yeah, I'm in the trenches. If you start the problem, know I gotta finish.
Big babe, yeah, they call me the slum. I don't give a fuck how you feel. Shady ass nigga, you ain't real. Kiss this motherfucking heel, kiss this motherfucking steel. Little nigga ain't real, nigga on the real deal. My time is money, so where's the bill? Undercover boy, go bitch. Undercover boy, you a bitch. Talk to 12 boy, you a snitch. Hell nah, you a snake. Get the fuck on my face. Chopper spraying like some fucking mace. Commit a crime with a fucking race. Thick bitch, I just wanna taste. Her pussy so good, shot spray, that's the hood. Yeah. I'm copping them peas, fuck is a zone. Throwing them peas, I'm in the end zone. She calling my phone, she won't leave me alone. We pull up with sticks, y'all pull up with stones. These niggas be fat, man, these niggas be clones. These niggas be clones. I run to the money, I get to the cash. I'm speeding, I'm feeling like Flash. Shotsbury, nigga, I'ma get to a check. They hating on me, but I know I'm a man. Ice a nigga who gon' get to a fish. Shot that nigga in his face and I put him on his head. Got rid of it and I had that go cop a 10. If we go hit that lit, we gon' spit all the bread. We gon' split all the bread. Up on the ops, get us go. Calling her tape, know we gon' blow. I'm copping a P, fuck is a O. Smoking no runs, serving the low. I'm serving the low. I ran in your trap like fuck is a dough. Like fuck is a dough. Up on the ops, get us go. Calling her tape, know we gon' blow. I'm copping a P, fuck is a O. Smoking no runs, serving the low. I'm serving the low. I ran in your trap like fuck is a dough. Like fuck is a dough. Take from the west and he fought with the foe. They serving the fiends, man, he serving the flow. Four locals don't go. Fuck your hoe, yeah, it's a show. I catch me an op, I'm up in the scope. No Pizza Hut, but we at your door.
Mama knows who Cub Scout is.
Yeah. I already know what the fuck going on. Had to get on here, goddamn, talk my shit a little bit. You feel me? Yeah. Pulled up in a new whip. Big bangs, take a little shit. Niggas feel away, they ain't feeling this. Grim River, have killing shit. Little whole week, couldn't take a stick. Give me back my nigga, bitch. We swapping hoes like chump change. Access don't like to be touched, man. Feeling on his dick through his bum maze. Next week, wanna be my star player. Shoot my shot like Stephen Curry. Little touchy, I ain't got no words. I am not a human being. Rock ships tied to a limousine. No, I don't gotta be on everything. Nigga hate me, but I don't feel the same. Finna take off, no Migos. All bitches sound like Debo. Coming at your neck like Steve-O. What they mad at me for? It's cause I flow like a river. Cause my pussy wet, it's a dripper. Maybe cause I call all the shots. Niggas ain't running they block. It's cause I'm hot and they not. is you loyal? I'm a brat and I like to be spoiled. Tell them take all that rap trick. Put on my new shit. Hit a bitch only 4 times. And I cut ties round with like 4 nines. They plot on my shine. Let a nigga fuck up 4 times. Then he ain't mine. Tell that hoe, put it 4 times. Put it 4 times. Hit a bitch only 4 times. Then I cut ties round with like 4 nines. They plot on my shine. Let a nigga fuck up 4 times. Then he ain't mine. From the 4, put it 4 times. Put it 4 times. Run it back like a highlight. Smoking middle of the highlight. He got bread, but ain't my type. Ain't no bird, we can't take flight. Man, I got so high last night. Swear that I remember my past life. Big white bitch, so salt life. House on the beach, can't stop by. You can't sit with us, you ain't lit enough. Pull up Bentley truck, don't try your luck. Bitch, you will get struck. Gonna give you book, no crime, but I got them shooters. Aim at trauma, dude, don't trust niggas. They gon' try to fool you. Switch up when that squish, gon' flip that shit. Act like it was you. You know what to do, go take his shit. Call up all your niggas, pull up with them tricks. He don't be a dog, put him in the cage. Make him feel that pain. Fuck niggas, my heart in the grave. Bitch, I take your chain. Bitch, only 4 times, then I cut ties round with like 4 nines. They plot on my shine. Let a nigga fuck up 4 times, then he ain't mine. From the 4, play this 4 times, play this 4 times. Hit a bitch only 4 times, then I cut ties round with like 4 nines. They plot on my shine. Fuck up 4 times, then he ain't mine. Tell them hoes, play this 4 times, play this 4 times.
All right, ladies and gentlemen, it is 3:08 p.m. This is the Stock Market Live with LCAOD. Still seeing the same motion, man. Consolidation is a bitch. They're going sideways here. Looks like at the top here, until close, it might be. Still no break above 440 on the SPY. Looking at the numbers, looking at the charts, the VIX is still at $25. That's still pretty high, even though it's below VWAP by 47 cents. It's still pretty high. Some stocks starting to pick up here, taking advantage of just the overall sitting in the air. It looks like here all day. Amazon's up 25. Tesla's up 10 here, 11 now. Ultra's up 12. Stocks on the move here. So, I mean, it looks like NVIDIA is leading the way here. Up about $9 right now on the semiconductor section. I mean, you just got stocks up here just off the spot, just sitting in the air all day. Think about it. Really haven't did nothing since the original pop here up in the morning. So lets you know if there is a wall here of selling. Still 440 not on the board at all. So I'm looking at charts and numbers here, but overall it looks good right now for the bulls. Congratulations if you brought the dip this morning. It was obviously a good day trade. But I don't know if that's going to continue till tomorrow or maybe even Friday or next week. Here we're still in the same spot, so we're still consolidating. You guys still credit spreading, going sideways. Same numbers, same ranges here, going up and down really fast. No breakouts since the 410 all the way to 439 level here. So 439 is the ultimate top here right now. 439.37 as of right now anyway. It is the ultimate top right now. And you got 410 is the ultimate low there. So pretty wide spread here in the past 5 days, man. It can go either way really though. It looks more bullish here though. Like maybe this, like I said, this break right here will confirm the bullishness. But we're just really not getting it, really getting rejected right here. So just want to be patient right here, have some patience. It's 3:10 p.m. Just have some patience, man. Trust the time. Trust what you got going on. Trust your risk there that you take. You'll be fine, man. You'll be fine. Stock surge though, following Powell comments on March rate hike. So they're trying to say stocks are surging here. So if this is a surge, then should be no worries here for anyone. But the Dow is up about 1.88%. The Nasdaq is up about 1.83%. The S&P 500 is up about 2% here. So we do have a little bit of high greens here. But as I said, I think the stocks, if they wanted, could go higher here. Not really seeing that, but they are up though in the green. So showing some green here, but not a lot. That's what's going on right now. Looks like it might end that way here in the close to the close here. Biden and the First Lady, they're about to begin here shortly. That's what we're waiting on right now here with LCAOD, ladies and gentlemen. So until we see them walk to the podium, we're going to continue with the music. Ladies and gentlemen, we'll be right back.
Oh yeah, this the one right here. Punch me in, drop.
Produced by Create.
Home in the city with killers and sticks. Country the block and we sleeping and shit. Throwing up foes, we lit as a bitch. They got by my side, we like Lilo and sticks. So forward with the bros if you trying to get rich. We up in the mall, we ain't taking no pics. Hell nah, bitch. We ain't taking no pics. These niggas ain't aiming, they shooting their toes. Trapping all night, but you know it don't close. I just got the pack and it's already sold. When you get in that jump, boy, you know you gon' fold. He writing them statements, he know that he told. Just lit in my DM, I'm fucking that hoe. Don't talking crazy, she might get exposed. She might get exposed. Up in the trenches, I didn't have no pops. Fuck is a bitch, fell in love with the Glock. I'm stuck in the city, so punching the clock. 4 pockets full, I still never stop. I just bought a phone and I still got a nine. I got the kids to this shit, now they call me Glock.
Like fuck it, we fucking it up. Pints of the lean and I double the cup. Drop a few dollars and sour it up. Gave up break, now she powering up. If he want to smoke, he know that it's up. I'm a big dog, that nigga up. Had to give me some bread, jump right in the street. That nigga can't rap, he can't hop on my beat. I'm with the bros, we playing for keep. My bitch go to sleep, then it's on the creek. Gotta come with some bread if you want a fee. If she want a foot, then I'm charging a fee. Bitch.
Ladies and gentlemen, we're back from the quick little break here. We are live from the Pentagon in Washington here, and they just started this briefing about 12 minutes ago, so we're going to tune in live until we see President Biden and the First Lady deliver their remarks on building a better America.
Top defense officials, checking them against the outstanding files many keep. Their dog-eared copies of the huge budget book, the posture statements, and dozens of volumes of congressional testimony are underlined and indexed by their own work, and the margins are annotated. While they do understand the hardware of weapon systems, the good ones are also experts on the NATO alliance or the Middle East tinderbox, and several of them know more about nuclear strategy than some of the academicians who write on the subject. I think that is a perfect way of describing Mr. Bob Burns, particularly that stuff about the nuclear strategy. He spent an awful lot of time reporting on our nuclear capabilities and our nuclear posture, our nuclear training, our nuclear readiness. So with everything going on today, the stuff that I just opened with, and the tensions in Ukraine, the meeting with the Crown Prince of Bahrain in the Middle East, the tinderbox, as Mr. Golding wrote about, all that happening today, and then to be able to talk about a guy of Bob Burns' caliber fixing to retire after 45 years, I think just really, really appropriate. And personally, I'm going to miss him. I'm actually really, really going to miss Bob Burns. So with that, we'll take questions. And Bob, I think I got you on the phone.
Thank you, John. And thanks for those very kind words. I appreciate that. Kind words not just about me, but about the whole Pentagon press corps. Thank you very much. I do have a couple questions for you about the situation in Ukraine. You've described the last few days the status of this large Russian convoy that's north of Kyiv. I think you've described that it's either bogged down or stalled. Can you explain, has it moved at all in the last day or so? Have Ukrainian forces begun attacking any part of it? And then as a second question, can you give a picture of what's going on in the south? Made the amphibious landing. Are they expanding or extending that part of the campaign? Thank you very much.
Yes, sir. So on the convoy, what I would tell you is we still assess that that convoy, but more broadly speaking, the northern push by the Russians down towards the south, towards Kyiv, remains stalled. They haven't, from our best estimates, have not made any appreciable progress, geographically speaking. All that is going into this stall, if you will, But in general, we believe that there's a couple of reasons for that. One, we believe the Russians are deliberately actually regrouping themselves and reassessing the progress that they have not made and how to make up the lost time. Two, we do believe that they have experienced logistics and sustainment challenges that we don't believe they fully anticipated. And three, they are getting resistance from the Ukrainians. We have some indications, nothing that we can 100% independently verify, but we have some indications that the Ukrainians have in fact tried to slow down that convoy. And we have no reason to doubt those reports, but again, we can't speak to it in great specificity. In the south, the Russian forces appear to be experiencing, in general, less resistance than they are up in the north. That said, the town of Kherson, which we knew they were moving on out of Crimea towards the northwest, that is, in our estimation, at least from what we can see, still a very contested fight. I know the Russians have claimed that they've got the town of Kherson. We're not in a position to call it either way. It appears to us that the Ukrainians are certainly fighting over that town. Coming out of Crimea to the northeast, we knew that they were advancing on Mariupol, a major population center in the south. We believe that advance is ongoing. That we don't believe that they are in the city center, and we do have every indication that Mariupol will be defended. So they are sort of branching out. If you look at Crimea and go north, they're branching out to both the northeast and the northwest. But they are beginning now. Our assessment is, as they get closer to these two population centers down in the south, we believe they're facing more resistance. Yes, anybody here?
To put them on a higher alert readiness level, and then secondly, while the convoy is stalled, there are some indications that maybe the window is closing to be able to get aid into cities that may become under
Ladies and
siege.
gentlemen, please welcome the President of the United States, Joe Biden, accompanied by the First Lady of the United States, Dr. Jill Biden, and Vice President of the International Union of Painters and Allied Trades, Local 106, Gordon Smith.
Hi. Thank you. Well, and that's the band, I presume, right? Thank you to the band. Great job. Great job. You know, it's wonderful to be in Superior and Duluth, and places that mean so much to Joe and me, and with all of our friends. Governor Walz, Tim and Gwen, we were just together at a childcare event just a couple weeks ago. Tony and Kathy, thank you for welcoming us. And thank you to all of our elected leaders. So we traveled here just an hour ago, I guess, from Washington. And you really have a great bunch of representatives with lots of energy, and they're a lot of fun to travel with. On another cold winter morning, much like today, I held our family Bible and watched my husband take the oath with so many years ago. A father of... Okay. I guess I don't tell him enough. A father of two boys standing in the wreckage of unthinkable loss, who stitched a broken family together with grit and grace. He was the man who took the train home to Delaware every night because he knew that showing up for the smallest moments can sometimes mean the most. He was the senator who learned that, to get up when he got knocked down and fight even harder for what he knows is right. the Vice President, whose steadfast counsel helped guide our country through many storms. That day, he was Joe. And then, suddenly, he became something else too. The President of the United States. It felt like Americans across the country were holding their breath in the aftermath of 4 years of chaos. But as Joe stood there, shoulders back, eyes shining with fierce optimism, I could see his determination to bring us together, to lead us forward to a better America. And every day since, he has worked to do just that. Millions of families have been able to send their children back to school and find jobs and catch up on bills. They've been able to finally take a breath. We still have a long way to go. Our world faces incredible challenges, but things are so much better. You were right to put your faith in Joe Biden a year ago. Because in the face of uncertainty, he is unshakable. Despite deep divides at home and abroad, he knows how to bring people together, how to rally the world when tyrants reach for power. He never loses sight of what this is all about, the people he serves. When Joe goes to bed at night and when he wakes up in the morning, all he thinks about is how to make life better for you and your family. It's just who he is. It's who he's always been. He will never stop working for you. He will never stop fighting for you. Thank you. Now, I want to bring up our next speaker, a painter, a father, a mentor, a man who knows the meaning of Union Strong. He's worked hard to help make this area a better place to live, and we're happy to have him with us today, Gordon Smith.
My name is Gordy Smith. I'm a member of the International Union of Painters and Allied Trades, District Council 82, Local 106. I am honored to be with you here today. I've been a painter for 31 years, but I started as a non-union painter. I became a member of the IUPAT when our shop was organized in the early 1990s. I was younger at the time and didn't understand unions, but taking that action really made my life better for me and my family. As a union painter, I've had the opportunity to work on many different types of projects, from mines and power plants to bridges and commercial construction. Over time, I grew to appreciate my union membership more and more. Being part of the IUPAT meant that my wife, Barbara, and I were able to raise our son, Michael, and help put him through college in a certified auto tech program. Now he has a good union job too. Being Being part of the IUPAT has given me not only just a job, but a career. Every worker, even you, can have the same opportunity I've had. For many years, those of us in the building and construction trades have heard the promise of massive infrastructure investment, but those promises were never kept. President Joe Biden and his team have finally delivered on that promise. The bipartisan infrastructure bill gives us the opportunity to rebuild our crumbling infrastructure and put another generation of people to work in the process. Throughout the Midwest, we have thousands of bridges, like the Blockneck Bridge here in Superior, in need of repair. The investment in the nation's infrastructure is vital to our communities. Everyone needs to be able to safely to go to work, school, and family events. I'm proud that here and across the country, my sisters and brothers are at work coating these bridges, and it's not just to make them look good, it's to keep them strong, safe, and protected from corrosion. One of my favorite things about being part of the Painters Union is the opportunity to mentor younger brothers and sisters who are serving their apprenticeship. I get to teach them skills and pass a trade that they can take pride in and will provide for their families. The resources that will come into Wisconsin to rebuild public facilities and transportation infrastructure will provide stable careers for the next generation of Northland IUPAT members, and you can join us. I'm not someone who often gets up in front of people to share a piece of my story, so I certainly never thought one day I'd share the stage with the president. I am so proud to be here with all of you today, and a president who doesn't just talk about fixing things, but puts his words into action. Ladies and gentlemen, it is my honor to introduce the President of the United States, Joe Biden.
Hadn't planned on this. When Jill and I met and fell in love, she let me know her favorite day in the calendar was Valentine's Day. The first Valentine's Day that we were together when I was vice president, the vice president's office faces the Eisenhower building, a big granite building you see on the other side of the White House. And there's a triple set of stairs coming down from that building, and they look right in the vice president's office as you come down. And the press comes down that way all the time. And so the night before this Thanksgiving, this Valentine's Day, the first one, Jill got, as a typical professor-teacher form, she got the maintenance guys to bring up a 16-foot ladder. And I think there are a total of, 19 panes in each window, big panes of glass. And with that erasable paint you can have, she put a heart in every single of the four windows, saying, "Joe loves Jill." And That night, my press guy got a call from CBS Morning News. Would I be on CBS Morning News to talk about Valentine's Day? He said, you ought to do it. So I did, and while we're getting ready in the office, all the lights are down, and I think I've told my colleagues in the House, the Senate, this story. While it's dark, they're fixing the lights, and I'm sitting knee to knee with a woman named Juju Chang, who used to work for CBS. And while they're fixing the lights, she looks at me, she says, everybody says you and your wife have a great love affair. And I said, I think so. And I said, but everybody knows I love her more than she loves me. And she responded, my word, that's what everybody says. And then she said she had done a study that she had been on, I guess, 2 or 3 parts on the morning show over a period of weeks before. And I think, don't hold me to this, I think it was Yale and Stanford had done this study. What makes marriages last the longest and the most romantic? You can always tell when the couple is not only in love, but when it's romantic, no matter how old they get. And she said, you know what it is? I said, no. She said, it's when the husband loves the wife more. I want to tell you, Julie, this was worth the trip to come out here today. Thank you. Thank you, thank you, thank you. If the Secret Service agents weren't sworn to secrecy, they could tell you they've never heard anything like that said from a podium by Joe. I love Wisconsin and Minnesota. Thank you. Thank you. Hello, Wisconsin. If you can hear me across the river, hello, Minnesota. I'm Joe Biden's husband, Joe. And Gordon, thank you for that introduction. Governor Evers and Governor Walz, and thank you both for welcoming to both your states. And Mr. Mayor, Jim Payne, thank you for the passport. And Emily from Duluth, the mayor of Duluth, when we got off the plane, I don't think she had a coat on. She had on I tell you, you're a tough kid. Thank you for the passport to both your cities. And thanks for 3 outstanding senators. And I mean that sincerely, all friends. Tammy Baldwin, Amy Klobuchar, Tina Smith, and Congressman Mark Pacone and Ron Kine. We got a hell of a delegation, all of you. Last night I was with your senators and representatives along with their colleagues in Congress to speak about the State of the Union. Together, we sent an unmistakable signal to Ukraine and to the world that we, the United States of America, stand with the Ukrainian people. We stand with them. And Vladimir Putin's latest attack on Ukraine is premeditated and unprovoked. He's rejected repeated efforts at diplomacy. He thought the West and NATO wouldn't respond. He thought they could divide us at home, but he was wrong. We were ready. We spent countless hours unifying the European allies. We countered Russia's lies and truth. We countered them by letting them know what was being planned. And now the free world is holding him accountable. Putin is now isolated from the world more than ever and will continue to aid the Ukrainian people as they defend their country and help ease their suffering in the process. When history of this era is written, Ukraine will have left Russia weaker, to the world stronger. Folks, they're amazing. They're amazing people. You see those scenes. I've been to Ukraine. I've spoken to the Rada. I've spent much time there over the years. They're amazing people. And we're growing stronger at home as well. As I said last night, there is no greater testament to the grit and resilience of the American people than the progress you've all made in the middle of a pandemic. Thanks to the American Rescue Plan, we lifted the country out of crisis. created 6.5 million jobs, more jobs than any American has ever created in a single year. Our economy grew. Our economy grew at 5.7%, the strongest growth in 40 years. And Vice President Harris and I, we ran for office with a new economic vision for America. Invest in America. Educate the American people. Grow the workforce. And build an economy from the bottom up and the middle out, not just from the top down. Because we know that when the middle class grows, the poor have a way up, and the wealthy do very, very well. Everyone does fine. My rescue plan reflects that vision, and that was just the first step. We also had to invest in the country itself. America used to have the best infrastructure in the world, the best bridges, roads, airports, etc. Now our infrastructure ranks number 13 in the world, according to the World Economic Forum. You can't compete for jobs in the 21st century if we don't fix that. That's why it was so important to pass the bipartisan infrastructure law, the most sweeping investment to rebuild America in all of American history. Bipartisan. And I want to thank your senators and representatives here today for helping lead that charge, and that was literally what they did, lead the charge. When I signed that infrastructure law 100 days ago, we already had the ground run. We hit the ground running, announcing $100 billion in new investments to create jobs for millions of Americans, modernizing our roads, our airports, our ports, our waterways. And we'll do it all to withstand the devastating effects of climate and to promote environmental justice in the process. You know, we're building a national network of 500,000 electric vehicle charging stations so Americans can own electric cars, reduce pollution, and lead the way to clean energy future. We're going to replace that legislation is going to allow us to replace all the lead pipes in this country so every child can turn on a faucet at home or in school and drink clean water. The days of having to pull your child up outside of McDonald's to do their homework because there's no internet in your home and no internet in your region end. We provide affordable high-speed internet to every American, urban, rural, suburban, tribal. And that's big for rural communities. It helps farmers engage in precision agriculture, knowing when they should sell their products and so much more. As I've announced last night, this year, we're going to start fixing 65,000 miles of highway and 1,500 bridges in disrepair. Your governor's going to use some of that funding for this law to modernize one of the most important bridges in this region, the one you look out the window and see here. Look, the Blatnick Bridge, you all know this bridge well. It's a bridge that connects our cities and your cities and your state. A bridge that carries people to work and carries goods out of your port. You know, when the Husky Oil Refinery exploded in Superior back in 2018, this bridge was one that many of you took to get your families to safety. And you know it matters. But you may not know, as was mentioned earlier, the bridge is 61 years old at the end of its useful life. The corrosion over the years has lowered the weight it can sustain safely handle. By the way, I wasn't long ago, you may have seen in all the news clips, I was in Pittsburgh. I arrived in Pittsburgh a little early, but thank God we arrived when we did because just 2 hours earlier, a bridge that is as high off the ground as this bridge collapsed completely. Completely. You should have seen it. It was astounding to look at for the same reasons this bridge is in trouble. And guess what? Thank God there were only a few vehicles on the bridge. No one was killed. You should have seen it. It was astounding how no one died. Had it occurred just 3 hours later, you would have had all those school buses, all those children, all the thousands of people across that bridge. There's so many bridges this is the United States of America, for God's sake. So many bridges in a similar condition. And that is outside, this bridge also has outdated design. Tight curves led to higher than average crash rates on this bridge. The bridge isn't alone. There are 979 bridges in Wisconsin, 661 bridges in Minnesota in poor condition, along with nearly 7,000 miles of highway between your two states that need repair. And now, after years of talking about infrastructure, we're finally getting it done. Finally. And by the way, instead of Infrastructure Week, we're going to have an Infrastructure Decade. Decade. Look. Back in January, I announced the largest investment in our bridges in American history, a total of $40 billion in funding for bridge improvement. $40 billion, including $12.5 billion to fix the most economically significant bridges in this country, like the Blatnick Bridge. And on top of that, over the next 5 years, based on formula funding, the bipartisan infrastructure law will provide Minnesota an estimated $5.4 billion and Wisconsin $5.4 billion for highways and bridges. We sure don't want you to miss any of the Vikings-Packer games. Oh man, you guys talk to one another? Well, we don't much in Philadelphia and Pittsburgh, but that's a different story. In addition, even more funding is available to the states through competitive programs. So I believe your governor, they're going to put their heads together and secure the funding they need to finally get this done. Putting hard-working Americans on the job, rebuilding this bridge with U.S. steel, keeping commerce flowing freely, and keeping families in Superior and Duluth safer and better connected. But this legislation is about much more than the bridge, or the bridge is. It's about opportunity. Opportunity across the region and across the country. Investing in your port, your airports, and more. This isn't just about bridges and highways. It goes much beyond that. And I'm here at the intersection of all of these things. Your airport, your ports, the river, the lake, the bridges, the highways. It's also about the historic investments we're making in the Great Lakes. I don't have to tell anyone here. I went to school and I grew up on one, not grew up, but I lifeguarded on one of the Great Lakes out in Syracuse, New York. Great Lakes provide drinking water for 41 million people. They support more than 1.3 million jobs. And 2 weeks ago, I visited Lorain, Ohio. And I announced an investment, something we've been promising a long time, all the places that have to be repaired, both in Canada and in the United States. But I announced $1 billion from the bipartisan infrastructure law, accelerating cleanup of sites where polluted waters and wastewater treatments have given the Great Lakes and put them at great risk, including the St. Louis River, which flows between your states. One study found that for every dollar spent in cleaning up the Great Lakes, we generate $3 to $4 in economic benefit. It's a good investment. And it's badly, there's more fresh water in these lakes than any other single place in the whole world. Folks, it's not only the investment we're making in the Great Lakes. On the opposite end of Lake Superior, from where we stand, the Soo Locks connect this lake to other Great Lakes. Those locks are a gateway, connecting the things that we make here in this country to the rest of the world. 7,000 vessels and 90% of America's iron ore move through those locks every year. That ore makes nearly all the high-strand steel that goes into American-made cars and appliances. In January, we announced nearly $500 million to upgrade the Soo Locks, moving goods faster while reducing costs, creating a hell of a lot of jobs, and maintaining them. We're also doubling the investment we're making in our ports, including the port of Duluth Superior, which was awarded $8.4 million grant to make critical improvements. Along with the $12 million investment for the Army Corps of Engineers to reconstruct the dock wall, the vessel yard, and Duluth Harbor Basin. Look, these investments will help fortify our port while strengthening the local economy. When we use taxpayers' dollars to build America, we buy America. For a long, long time, since the 30s, there's been a law saying when the President of the United States spends taxpayers' dollars on American projects, whether it's an aircraft carrier or railings in a public building, when they buy those products, they should buy American. But there's been an exception in the law up to now. It says that if in fact the product is not immediately available in the United States, they can buy it abroad. The federal government spends about $600 billion a year to keep this country safe and secure. And that law has been on the books, as I said, for almost a century. Taxpayers' dollars. But guess what? In my administration, the entirety of it, from beginning to end, has to be built and made in America to be used. Not a joke. We're actually doing it. We will buy American, make sure everything from the deck of an aircraft carrier to the steel on the bridge is made in America. Look around the country. American manufacturing is coming back. Once again, we're seeing the pride that comes with stamping products made in America. Companies are choosing to build their new factories here, when just a few years ago they would have built abroad. Ohio Senator Sherrod Brown, as my Senate colleagues will tell you, he had a great saying when we announced what was happening in Ohio, I should say. He said, "It's time to bury the label Rust Belt." Well, that's what we're doing. As I said last night, Intel is building a $20 billion semiconductor megasite just outside of Columbus, Ohio. Up to 8 state-of-the-art factories in one place. And by the way, the people who will be working in those factories, you know what he told me their average pay is going to be? $135,000 a year. 10,000 jobs, and most of them union jobs. Making a computer chip the size of a fingertip. The power of the world in our everyday lives, smartphones, the internet, technology that doesn't even exist today. And if Congress passes the Bipartisan Innovation Act that's on their desk now, Intel is ready to increase their investment from $20 billion to $100 billion. Intel alone. Ford has invested $11 billion to build electric vehicles, creating 11,000 new good-paying jobs across the country. GM is making the largest investment in its history, $7 billion to build electric vehicles, creating 4,000 jobs in Michigan. The Union Pacific Railroad, when I was in Pittsburgh, I met the folks who run the Union Pacific Railroad, just announced the purchase of the largest ever purchase of electric locomotives made in Erie, Pennsylvania. In the same plant, by the way, that the guy who turned on our lights built a factory. All told, we've created 369,000 new manufacturing jobs in America just last year. Don't tell me we can't be a manufacturing center again. We can. We have to keep this story going. But we know that despite this historic recovery, too many families are still struggling with higher costs. I get it. Our top priority must be getting prices under control. Look, our economy roared back faster than most predicted. But the pandemic meant businesses had a hard time hiring enough help to keep their workers in the production. The reason why the cost of housing went up in new housing is because no one was there to make sure they had the 2x4s to be built, to build a home, because people weren't in the factories. And because people were making a lot more money than before, there was a lot of cash at hand, and they did not use that cash to go out to the restaurants or go on vacation. They used it for hard products. And the pandemic disrupted global supply chains. When factories close, it takes longer for goods to get from the warehouse to the stores, and prices go up. Look at cars. Last year, there weren't enough semiconductors to make all the cars people wanted to buy. They had the money to buy them. But there weren't literally enough cars, because we invented those chips when we went to the moon. But we didn't make them anymore. They're made in the rest of the world. So prices went way up. 1/3 of the reason for inflation was the cost of the additional cost of automobiles. So we have a choice. One way to fight inflation is to drive down wages and make America's poorer. I have a better way to fight inflation. Lower your cost, not your wages. We're going to make more cars and semiconductors in America, more infrastructure and innovation in America, more goods moving faster and cheaper in America, more jobs that you can earn a living, a good living by here in America. Instead of relying on foreign supply chains, let's make it in America again. There's a lot more to my plan to lower costs and lower the deficit. By the way, we're going to lower the deficit by $1 trillion. These guys talk about how they always are worried about a spend. We're lowering the deficit. No one's ever done that. But look, I've kept you long enough. There's a lot more I'm inclined to say. I don't want to get going. I don't want to get wound up here. But let me close with this. Look, I am truly more optimistic about America today than I've ever been. I really mean it. We're on a path to win the economic competition of the 21st century that we face with the rest of the world. I told Xi Jinping, who I'm told I've met with more than any other world leader, that it's never been a good bet to bet against the American people. Never. Given half a chance, they've never, ever, ever, ever let the country down. We're the only nation that has always turned every crisis we've faced into an opportunity. No other nation you can name has gone through a terrible circumstance and come out at the other end worse off than they were before the circumstance occurred. We're stronger today than we were a year ago. And we're going to be stronger a year from now than we are today. So let's keep building. Let's continue to give families a fighting chance. And let's make this moment together. Folks, one last thing I'd like to say to you. The other reason why I'm so optimistic is because of the younger generation. You know, we are a country that is very diverse. And for the longest time, we still have some serious resistance to diversity in this country. But guess what? The younger generation doesn't feel that. The generation that goes to this university, the generation that's in high school and up through age 30, look at them. Look at how they interact with one another. They make no distinctions based on race. They make no distinctions based on gender. Think of what's happening. One of the things that I'm confident about is they are together, and they want the nation to be together. And one of the things I promised I would do, I've gotten criticized for it, but I'll just flat out admit it and I'm not going to stop. My administration is going to look like America. Look like America. For example, in my administration, we have more women than we have men. A little bit. That's because all the women in my life are smarter than I am. We also have the greatest diversity we've ever had. Look, folks, there truly is nothing beyond our capacity. There really isn't. We're the most unique nation in the history of the world. And that we're the only nation built on an idea, not geography, not built on a notion of race or religion or ethnicity. None of that fits the description of the United States. Built on an idea that we hold these truths to be self-evident. That all women and men are created equal, endowed by their Creator with certain inalienable rights. Life, liberty, the pursuit of happiness. We've never lived up to it. We've never walked away from it. And every generation has moved that dial closer and closer and closer. We badly need it now in a world that is so close. Look, folks, your kids are going to see more change in the next 10 years than we've seen in the last 50 because of the changes in technology and so much more. We've got to be ready. America's always been ahead of the curve because we do hold these truths to be self-evident. Again, we're not perfect, we're not even close, but we never have walked away. And Vladimir Putin was counting on being able to split up the United States. Look, how would you feel if you saw crowds storm and break down the doors of the British Parliament, kill 5 cops, injure 145, or the German Bundestag, or the Italian Parliament? I think you'd wonder. Well, that's what the rest of the world saw. It's not who we are. And now we're proving, under pressure, that we are not that country. We're united. And folks, that's how we were able to make sure we kept Europe united and the free world united.
Ladies and gentlemen, we got 1 minute. Make your final picks here, man. The market got really bullish here. Still no scoop past 440 on the spot, but very close here today, man. Very overall bullish. A turnaround here, pal. Bring the markets up again. The Bulls won today. Make your final trades, man. The market's about to close any moment now. 3, 2, 1. On! So that's it, ladies and gentlemen. The market is closed. Biden speech like it's done. It is right on time here today, ladies and gentlemen. Oh, man, overall, what a day here. Oh, man, what a day. What a day. Thank you for joining, ladies and gentlemen. This was the Stock Market Live with LCAOD. And we're going to wrap it up here today, too. All the indices closed in the green. Stock surge here. Looks like a victory for the Bulls. Oh, we don't want to get too excited too fast, but looks good so far right now. The Dow did close up in the green here at 1.80%. 1.79. Excuse me. The Nasdaq closed at 1.62%. And the S&P 500 closed at 1.86%, ladies and gentlemen. So thank y'all for joining, man. This was the Stock Market Live here with LCAOD. And that's a wrap for today. And we're going to get back with y'all tomorrow, man. Hope y'all enjoyed the live stream, but we're going to catch y'all tomorrow.